Okay, we'll start. So please look into exemptions chapter. Last class we completed majorly exemptions. We are left with small areas to be discussed. Please look into page number 41. Page number 41. So first section 11, whenever you are writing about exemptions, you need to write section 11 read with notification 12 of 2017. And government on the recommendations of the council can notify goods or services which are exempt from GST. So that power to grant exemption is given to the government under section 11. And section 11A talks about, based on the past general practice. Like say for example, in the past on a particular transaction there is no GST, but suddenly government has introduced GST on the transaction. Then in that case, whether they can roll back that particular taxability, yes, they can roll back the provision. So this is related to rollback provision. Example, on gold, say on gold jewelry, they increase the rate from somewhere 3% to 12%. When they increase the rate, definitely people will not agree, na? Because gold rate will increase when the GST rate increases. So people will not agree. So they make a protest. When they make a protest, etc., whether the government has to wait till the next finance act or now itself they can do the rollback, they can do the rollback. That is this section 11A. Government on recommendations of GST council may not recover GST short levied or not levied as a past general practice. Then this agriculture related services we discussed. Look into insurance services. Remember, insurance premium collected by National Pension System Trust is exempted. Okay, so National Pension System Trust, if they collect any insurance premium, that is exempted. Just that much you remember, that is sufficient. And then group insurance by Army, Navy, Air Force, Coast Guard, Central Armed Police Forces. And now one more point is also there, that is Motor Vehicle Accident Fund. Motor Vehicle Accident Fund. Motor Vehicle Accident Fund. So group life insurance by Army, Navy, Air Force. What is group insurance? Basically, the group of people will contribute towards the insurance fund, and when they contribute towards the insurance fund, so this particular fund will be given to that member of the group, so who suffered any losses or damages, etc. For example, all army persons, they will be contributing monthly some amount towards the fund, and if any army member is dead, then to the family members of that army person, so out of the fund money will be paid. That is the concept of this group insurance fund. So monthly some contribution is made now, so that will be exempted. So what are the group insurance funds we have? Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. And extra what we have is Motor Vehicle Accident Fund. Basically what happens monthly, we will be paying the insurance on our vehicles. On our vehicles we take the general insurance yearly. So that particular general insurance what we pay, out of that insurance company has to pay some amount towards the motor vehicle insurance fund. So basically it works like this. So there will be Motor Vehicle Accident Fund. Who creates it and who maintains it? This is maintained by Government of India. Motor Vehicle Accident Fund. This Motor Vehicle Accident Fund is maintained by Government of India under Motor Vehicles Act. Government of India under Motor Vehicles Act 1988. So they will be maintaining. What happens? Insurance company will be there. That insurance company will collect some premium from the insured. There is an insurance company which will collect premium from the insured. So this premium, whichever is paid by the insured, say for example, this premium is 10,000 rupees. Out of the 10,000 rupees, there will be a component called as third party insurance. So that third party insurance premium will be paid by insurance company into the Motor Vehicle Accident Fund. In this premium, so there will be like a component called as third party insurance, like that. Third party insurance. And that third party insurance is, say for example, 2,000 rupees, and remaining amount is for the vehicle. Balance is for vehicle. That is 8,000. and this 2000 rupees will be paid. This third party premium, the third party premium is paid by, the third party premium is paid by insurance company to the motor vehicle accident fund. And there is a person who met with an accident. Person met with accident. So whenever the person met with accident, so out of this motor vehicle accident fund, some compensation will be paid. Say one person has met with an accident, and then out of the motor vehicle accident fund, some compensation will be paid to that person who met with an accident. So say this, first the insured will pay the premium now. What is the taxability of this premium? This premium will always be taxable. There is no doubt about it. The insured who is paying premium to the insurance company will always be taxable. We don't have any exemption with respect to this 10,000 rupees which is collected by the insurance company. But the insurance company will contribute 2,000 rupees towards the motor vehicle accident fund now. So that contribution will be exempted. Means the motor vehicle accident fund which is collecting the 2,000 rupees will be exempted. What about the motor vehicle accident fund which pays compensation to the person who met with an accident? What is the treatment of that? That is not treated as consideration. Why it is not treated as consideration? Because this particular compensation will come under liquidated damages which are compensatory nature. So last class we discussed now, so it will come into that category. So liquidated damages, as it is liquidated damages which is compensatory in nature, it will not be treated as consideration. So not treated as consideration, and consequently GST is not payable with respect to this. Again I am repeating, we don't know which part will be tested in the exam. Okay, we don't know which part will be tested in the exam. So therefore there is a insured. The insured will pay the premium to the insurance company. That premium which is received by the insurance company will always be taxable, whatever may be the amount. That insurance company will in turn pay a part of that premium which is collected. There is a component called as third party insurance that they will contribute to the motor vehicle accident fund. So the motor vehicle accident fund receiving this 2,000 rupees from the insurance company is exempted here. Then again the motor vehicle accident fund which is maintained by Government of India under Motor Vehicle Act, so they will be giving compensation to the person who met with an accident. So that is called as liquidated damages, that is not treated as consideration. Is it clear? That is with respect to this. And next, point number C, you see, point number A, life insurance business provided by way of annuity under national pension, then group insurance. Then point number C, there is a normal insurance company, and that is either government owned insurance company or a private owned insurance company. There is one insurance company which is providing general insurance services, but those insurance schemes are notified by government. So under that notified government general insurance, like government notified schemes, general insurance schemes, some premium will be collected. You are an insurance company, you are providing lot of policies, and those policies, some of the policies are notified by government. Under those policies, if you receive any premium, that premium received by you will be exempted. Is that clear? So what are those policies? Mainly government notified means for whom they will notify, definitely for farmers, and definitely for below poverty line, definitely for women, because government will not notify for all, definitely for the purpose of their vote bank only they will be notifying. So see there, services of general insurance business provided under government schemes. You underline under government schemes. So not that the government insurance company is providing the service is provided by any insurance company, but the scheme should be notified by government, and it is targeted to whom? Targeted to either agriculture and farmers, BPL below poverty line, women. So then it is exempted. And here Nirmaya health insurance is also exempted. Underline that also, Nirmaya health insurance. Basically Nirmaya health insurance is not only for this below poverty line women, it is for all persons who are having autism, cerebral palsy, mental retardation. For them they have made this, that is also covered under the notified scheme. So just check the question. If you see that scheme, easily you will identify that it is a government notified scheme, therefore it will be exempted. Then same way D point. So C point is for general insurance, D point is for life insurance. Life insurance under various government scheme ends with the word Yojana, and micro life insurance having maximum sum assured as 2 lakh rupees. So usually there are some government notified schemes under life insurance. So how to know that it is a government notified scheme? The scheme will end with the word Yojana. Pradhana Mantri Awas Yojana, Pradhana Mantri Suraksha Bima Yojana, Pradhana Mantri Vayavandhan Yojana, like that. So there are different government schemes. Under the government schemes, the life insurance premium collected is exempted. Not only that, even micro life insurance is also exempted. What is a micro life insurance? Wherein, instead of paying the premium in a yearly basis, usually we pay insurance premium on a yearly basis. Rather than paying insurance premium on a yearly basis, they pay insurance premium on a monthly basis so that the money will be smaller amounts. That micro life insurance is exempted. But how much should be the sum assured? The sum assured should not exceed 2 lakhs. If the sum assured exceed 2 lakh rupees, then the premium will not be exempted, that will be taxable. Only if the maximum sum assured is 2 lakhs, then the premium, monthly premium or micro life insurance premium collected is exempted. Then next, insurance services provided to government is exempted. Now what is this? Government owns lot of properties and government employees also, they will take insurance. That is, generally there is an insurance company which is providing either general insurance service or life insurance service, but who is the recipient here? Recipient is government. So from government the premium collected will be exempted. Okay, that is, this insurance service provided to government is exempted. Then whatever exempted insurance services that we discussed, reinsurance of that exempted insurance service is also exempted. What is this reinsurance means? Say there is an insurance company which is providing insurance services to government. Say for example, insurance company A. Insurance company A providing services to government receive the premium. That premium received by insurance company A is exempted, because in the previous point we discussed insurance service provided to government is exempted. So insurance company A providing insurance services to government and the government paid the premium, that is exempted. Now insurance company A takes reinsurance with another insurance company B, for which they give the premium, that is also exempted. So if the main insurance contract is exempted, its reinsurance contract is also exempted. Now that insurance company B will in turn takes reinsurance with another insurance company, that is reinsurance. Okay. Now in this case also it is exempted. Yes, that is called as retrocession. Retrocession means first insurance contract, the second level is called as reinsurance, the third level or thereafter will be called as retrocession. Everything will be exempted. When if the main insurance contract is exempted, its reinsurance also exempted, retrocession also exempted. See that May 25 amendment, reinsurance includes retrocession, that is reinsurer further transferring risk to another insurer. Therefore, if reinsurance is exempted, retrocession is also exempted. Then next one. So here G point, you see, in banking sector we discussed business facilitator, business correspondent, agent of business facilitator, agent of business correspondent, earning commission from rural area branch is exempted. What if it is a insurance company? For insurance company only two agents are given, business facilitator and business correspondent. Getting commission from rural area is exempted. What about the agent of business correspondent and facilitator of insurance company? That's not given in the exemption, means that will be taxable. Only for banking company we have sub-agents also, but insurance only two, that is business facilitator and business correspondent. But what is common in both the places? Rural area. So if they are working for urban area, then it will be taxable. Banking services we discussed, healthcare services, entry tickets we discussed. Look into pension services, page number 44. Contribution under Atal Pension Yojana or any state government operated pension fund is exempted. Okay, just two pension schemes are exempted. One is Atal Pension Yojana, another one is state government operated pension fund. Then services by specified organizations, charitable activities. In the charitable and religious services, first point we discussed, look into the second point. There is a old age home. Old age home means what basically they do? They provide the boarding, lodging for old people who are regarded as old people for the purpose of exemption. Read there, who are regarded as old people greater than or equal to 60 years. 60 years or more is the word given. So greater than or equals to 60 years. But in the previous point, this persons over 65 years residing in rural area means there it will be greater than 65 years. But in this exemption, the words are greater than or equal to 60 years. Greater than or equals to 60 years. So there is a old age home which is run by central government, state government or charitable trust under 12A or 12AB, to whom they are providing services to residents aged 60 years or more against consideration up to 25,000 rupees per month per member, provided that the consideration charged is inclusive of charges for boarding, lodging and maintenance. Means up to 25,000 rupees it will be exempted. Up to 25,000 it will be exempted. And what if it exceeds 25,000? Entirely taxable. And that old age home should be operated by whom? Either government or trust. Either government or trust. The next, services by any person by way of conduct of religious ceremony. Who will conduct religious ceremony? Priest, Purohit, church father, etc. They will be exempted from payment of GST on the money that they receive. Then services by specified organization for religious pilgrimage. What are considered as religious pilgrimage? Kailash Manas Sarovar Yatra and Hajj Yatra. These two are considered as religious pilgrimage for the purpose of exemption. But not by everyone, only by specified organizations, and these specified organizations are approved by Ministry of External Affairs. So then only that specified organization is providing tour operator services by way of pilgrimage, religious pilgrimage. The money received will be exempted. So this specified organization should be approved by whom? Approved by MEA. MEA means Ministry of External Affairs. Ministry of External Affairs. And next, sir, apart from these two, any other religious pilgrimages are taxable. Only these two religious pilgrimages is only exempted. Others will be taxable. Next, incubator and incubator service you see. First, incubate. Incubate is a laboratory where research is carried out. Incubator is the owner of that laboratory. Incubatee is the one who is working in the incubatee. Incubator is the owner, and inside that incubate, one person will do the research or do some business. That person will be called as incubating. For example, you would have watched in your childhood Dasavataram movie. Did you watch? Watch, okay. In that movie, so in the beginning scene, Kamal Hassan will be doing some research on a biotechnology weapon in a laboratory. That laboratory is called as the incubate, and the owner of that laboratory will be incubator, and our hero is the incubatee who do the research. And even so, recently also we come across coronavirus. So China government is incubator. Wuhan laboratory where the virus is created is incubate. That Wuhan laboratory, the scientist who created that virus will be coming as incubating, and this particular incubate where high-tech and innovative research will be carried out. So the incubator, if approved by government of India, sir, in India do we have approved incubators, sir? Only 2 incubators approved by government of India. Who are they? Technology Business Incubator, TBI. Because in India we will not just like that allow people to do lot of research and all. So there will be restricted. Otherwise, people will do different types of research and they test it on human beings. Then who will be responsible? You understood or not? And what if, like this Hollywood movies and all, we turn out into zombies? Then difficult, na? That's the reason why. So we have only approved incubators, 2 approved incubators, TBI. TBI refers to Technology Business Incubator. Technology Business Incubator. Then STEP, that is Science and Technology Entrepreneurship Park. Science and Technology Entrepreneurship Park. TBI, Technology Business Incubator. STEP, Science and Technology Entrepreneurship Park. If they provide any services, these are the 2 approved incubators. If they provide any service, that will be exempted. What about incubating services? incubator service is also exempted provided the consideration is up to 50 lakhs. What if the incubator is earning more than 50 lakhs? The excess is only taxable. This is the place where I told you the excess is only taxable. So up to 50 lakhs is exempted pa. Beyond 50 lakhs the excess is only taxable, and two conditions should be satisfied. What are the two conditions? Previous year the gross receipt should not exceed 50 lakhs, and this exemption is for a period of 3 years from the date of signing contract as an incubator. So see the example below. Gross receipts of an incubator first year is 60 lakhs. Whether first year they will get the exemption? Yes, because previous year 0 na. Previous year 0, first year definitely by default they will get the exemption. So 60 lakhs minus 50 lakhs, taxable value will be 10 lakhs. Second year it is 40 lakhs. Will they get exemption for the second year? No, because first year it is more than 50 lakhs. Second year they will not get exemption. So entire 40 lakhs will be taxable. And third year it is 70 lakhs. And previous year, second year it was 40. It does not exceed 50 lakhs. So therefore 70 minus 50. So 20 lakhs will be the taxable value. What about fourth year? Will there be any exemption? No, because the exemption is only for a period of 3 years. So thereafter the exemption is not available. You understood by incubator services? Then education services we discussed, and services provided by government we discussed. To government also we discussed. And in that there is services by government authority entity. So services by government authority is fully exempted, correct? Any service provided by government authority. What is the difference between government authority and government entity? Both are same pa. Government authority also established under an act of parliament or state legislature. Entity also established under an act of parliament or state legislature. Or both cases government invests greater than or equals to 90%. But the only difference between government authority and government entity is that government authority is established to carry out the functions under constitution. So that's what I told you. So regulating the real estate, is it the government function under constitution? Yes, because if you see lot of apartments, flats, etc. and all are coming, and these builders may cheat the people also. That's the reason why RERA they have brought in Real Estate Regulation Act. Under that they created authority called as Real Estate Regulatory Authority. This Real Estate Regulatory Authority will be regulating the builders from doing unnecessary flat construction or without approval construction or without maintaining proper quality if they do construction. All those things will be controlled by this authority. Now this authority is established under an act of parliament and or state legislature, and they carry out the functions under constitution. Due to that reason they will be called as government authority. Whereas public sector undertakings are there, PSUs, like we have Central Bank of India, and then ONGC, like this, Steel Authority of India, like this. These are the public sector undertakings. These public sector undertakings are also established under an act of parliament, or they are established for the purpose of promoting trade or commerce. And in the investment in that particular entity, how much government investment should be? Greater than or equals to 90%. That is the difference. So what is the main difference between government authority and government entity? Government authority to carry out the functions under constitution, but government entity to promote trade or commerce. Okay, that's the difference. So here to carry out functions under constitution, here to promote trade or commerce. Now what we discussed already is services provided by government authorities fully exempted. But service provided by government entity we are discussing only one exemption. If the service are provided by government entity to government or person specified by government for which they get some grant, that grant received by government entity will be exempted. Then government authority services fully exempted, and this point I told you, Real Estate Regulatory Authority is a government authority and statutory collections made by RERA is covered under the exemption. Government entity is also same as government authority except that it is not established to carry out the functions under constitution, hence the above exemption is not applicable to government entity. Then we have accommodation services or similar services which are provided by this Air Force mess. Air Force belongs to government? Yes, Air Force is government, and to their employees the Air Force mess is providing accommodation services, whether it will be covered anywhere in the taxability. First, government services we have divided into two. Excluded from supply, covered under supply. Is it municipality or gram panchayat functions? No. Is it liquor license? No. First service is what? Accommodation service provided by Air Force Mess to its personnel. Okay. Is it given in the first 2 points? No. So means it is covered under supply. Is it Department of Post? No. Is it airport or port service? No. Air Force is different from airport. Okay. And is it service of Indian Railways? No. Transportation of goods or passengers? No. Other services. Other services to whom they are providing service? To their personnel. To their personnel means business entity or other than business entity? Other than business entity. Therefore, it will be exempted. Is it clear? So, therefore, here that's what they have given in the circular. Accommodation services provided by Air Force Mess or similar mess to its personnel or in relation to other than business entities, and it is exempted. Okay. Relation to other than, because any other service provided to other than business entity will be exempted. The chart you should be keeping in mind, part. Don't get confused. Okay. Then next one, supply of wheat flour by a person to government for public distribution system. In South India and all, in ration shops they distribute rice, correct? Whereas in North India they distribute wheat flour. And what happens? Government will procure the wheat flour from the supplier. You are the supplier. What you do? You take the wheat, crush it into powder, wheat flour like atta, etc., and that you will be giving it to the government. Now in this, is it pure service or composite supply of goods and service? Composite supply of goods and service. What is the goods element? The wheat. Wheat is the goods element. And what is the service element? Fortification. Converting into powder is the service element. Okay. Now, whether the value of goods exceeds 25% of the total or does not exceed 25% of the total? You think, logically you think. What is the main activity here? Wheat. What is the ancillary activity? Converting into powder. Definitely the goods element is only main, correct? So therefore the value of goods exceeds 25% of the total, therefore it will be taxable and we don't have exemption. Read that point. Supply of wheat flour after fortification to government for public distribution in fair price shops is taxable as the value of goods exceeds 25% of total. Then next, sanitation services are provided to Indian Army. Whether that sanitation service to Indian Army is eligible for any exemption. That is, pure services provided to government is exempted. Is Indian Army government? Is Indian Army government or not government? Yes, it is government. And now you are providing sanitation services to Indian Army. Whether it will be covered under this pure service point exemption? No. First of all, pure service with respect to Article 243 GRW of the Constitution, which means government has to do it for the general public. Government has to do it as per Constitution. Is it the job of Indian Army to do sanitation to general public? What is the job of Indian Army? To protect us, defense, correct? It is not their job to do sanitation. So therefore, if they receive sanitation service, that is not covered under exemption. When it is exempted, first it should be the job of the government department to do sanitation conservancy. For that, if they outsource and if some other person is providing that service to government, then it will be exempted. So here you read, sanitation services provided to Indian Army is not with respect to Article 243W and therefore it is not covered under exemption. Then next, so this renting, already we discussed about movable property and building. Look into land related renting exemption. That is, in relation to land, there are two exemptions. First exemption, you see, there is a government which is giving land on lease to government authority or government entity. What type of land? What type of land? Any land. It can be agricultural land or it can be industrial land. First, government is giving land on lease to government authority or government entity. What type of land? Any type of land. Agricultural land or industrial land. For what period it should be given on lease? Any period. It can be 5 years, 10 years, it can be short-term lease or it can be long-term lease also. What is long-term lease? Greater than or equals to 30 years is known as long-term lease. Okay. So in that case, the government will receive some charges na, either upfront charges or annual royalty. Both are exempted. See this, upfront charges and annual lease rentals with respect to lease of land by government to government authority or government entity exempted. So first tell me, who is a supplier in this exemption? Government. Who is the recipient? Government authority or government entity. And number 3, what is the type of lease? Long-term lease or short-term lease. Number 4, what is the type of land? Any land. What is exempted? Both upfront amount as well as annual lease rentals. Can you remember these 5 points? Supplier, government. Recipient, government authority, government entity. Type of lease, short-term or long-term. Type of land, any land. What is exempted? Upfront charges as well as annual lease rentals. Then see the next exemption. Here, the supplier is SIDCO, State Government Industrial Development Corporation. Have you heard of this word, SIDCO? So that is established by government in order to develop the industries. State Government Industrial Development Corporation, SIDCO. And they are giving the land on lease. To whom they are giving land on lease? Any industry or infrastructure developer. What type of land is given on lease? Either agricultural land or it can be industrial land or only industrial land. Only industrial land. Why SIDCO will give agricultural land? Only industrial land will be given on lease. What type of lease is exempted? Only long-term lease is exempted here. And what is exempted? Only upfront charges is exempted. The same 5 points, can you repeat again? First, supplier. Who is the supplier for second exemption? SIDCO. Who is the recipient? Any person. Industry or infrastructure developer. Any industry or infrastructure developer. And next, number 3. What is the type of land which is exempted? Industrial land, industrial plots. What is the type of lease? Long-term lease. What is long-term lease? Greater than or equals to 30 years. And what is exempted? Upfront charges, including preferential location charges. Then look into the next exemption. What is preferential location charges means? In order to get the land at a preferential location, like near to highways or near to port or airport or railway station, some extra charges is payable. That is called as preferential location charges. That is also part and parcel of upfront amount. Then next one, renting of precincts of a religious place meant for general public. There is a religious place meant for general public. Let's take Tirumala temple is a religious place for general public, correct? And it is registered as a trust. Yes or no? Yes. Either religious trust or charitable trust. And the precincts of the religious place is given on rent. For what purpose? For the pilgrims to stay, correct? Lot of people will go there and they stay in the accommodation. So that will be coming under, stay. How much it should be per day so that it is exempted? Up to 999 rupees per day. That is less than 1000. You remember, up to 999 per day it is exempted. What if the charges is more than 999 per day or equal to 1000? Then it will be entirely taxable. Then for what else purpose they will be giving the precincts? Precincts means surroundings. For what else purpose? Marriage function, correct? So lot of people will be having the marriage in Tirumala, and that is because they have a belief that, if we get married there, so our marriage life will be good, etc. and all. So it's not about which place you are getting married. It's about how you are treating each other. That's the fact. Okay. So whether you are marrying, in Tirumala or you are marrying somewhere in your home also, that doesn't make any difference. Till the time, if there is a mutual respect between each other, there won't be any problem. Okay. But belief system is there, and therefore they go there and they get married. They take the hall on rent. And how much should be the rent per day? Up to 9,999 per day, then it is exempted. Equal to or more than 10,000 rupees per day, entirely it is taxable. And I have observed this in Tirumala. There is one big hall, and in that hall what they do, at a time for 40 couples, they will do the marriage ceremony. Like couples will be sitting, and the purohits over there will recite, and thereafter the customary practices whatever is there, and then the marriage function is held. and per couple they pay 2000 rupees per couple. So now tell me whether it will be taxable or exempted. Taxable or exempted? Taxable. Why taxable? Because per day is what we need to see, it's not per person, per day. So the entire hall, how many couples? 40. 40 into 2000? 80,000. Definitely it is more than 10,000 rupees per day. So entirely it will be taxable. Is it clear? We need to check per day. It's not per person. Then next, shops. Shops will be given on rent because lot of people who go to the, any kind of pilgrimage, etc. Definitely shopping they will do because that's a recreation and they will do shopping. Hardly we see guard for 1 minute, less than 1 minute. But we spend hours and hours in shopping, and this particular shops is the main source of income for the temples, because temples will give their precincts for rent on to shops, and shops will pay lot of money as the rental. Whether that rental income received by the temples will be taxable or exempted, if the charges is 9,999 up to 9,999 per month. Usually shop rent will be monthly, so that's why per month. So up to 9,999 per month it is exempted. What if it is greater than or equals to 10,000 rupees per month? Then entirely it will be taxable. Then we discuss port services. Then look into this this unincorporated association, transportation, all this we discussed. Page number 56 you take. Page number 56. There is an owner of a vehicle who is giving non-AC vehicle to the person requiring vehicle for transportation. If the vehicle is operated on a predetermined route on a predetermined schedule, then it will be treated as contract carriage other than tourism or hire, and it is exempted. What is this predetermined route on a predetermined schedule? The vehicle will pick up the passengers, pick up the employees. For example, there is a corporate company. That corporate company will be entering into contract with one travel agency, wherein they will instruct the travel agency to pick their employees at different spots and bring them to the office, and again evening pick them from the office and drop them back in those spots. Means they are operating on what model? Predetermined route on a predetermined schedule. Correct? Predetermined route on a predetermined schedule. Which category it will come? It will come under contract carriage other than tourism or hire. It is not treated as hire. It is not treated as tourism or hire. It is other than tourism or hire. Therefore, it will be exempted. Is it clear, pa? But it should be what type of vehicle? Non-AC vehicle. Non-AC. What if it is AC contract carriage? It will be taxable. Only non-AC contract carriage is exempted. Then, suppose if the vehicle is at the disposal of the recipient for a period of time. If the vehicle is at the disposal of the recipient for a period of time, then it will be called as renting. If at the disposal of the recipient for a particular voyage or journey, then it will be called as contract carriage for hire or tourism, and it will be taxable. Is it clear, pa? So please concentrate. A company is taking the vehicle for a particular trip, like say Ooty or Goa, like that trip they are taking the vehicle. Will it be coming under contract carriage for hire? Yes, it will come under contract carriage for hire, and it will be taxable. Hire or tourism. What if for a particular period of time, like 1 month, 2 months, etc., the vehicle is at the disposal of the recipient? Then it is called as renting of motor vehicle. For renting a motor vehicle, we saw 4 exemptions. If not covered under that, then also it will be taxable. Is it clear, pa? So what you need to remember is only one point. What is that? If they are operating on a predetermined route on a predetermined schedule, and if it is a non-AC vehicle, then it will be contract carriage other than tourism or hire, and it is exempted. Then what is this stage carriage? Already we discussed difference between stage carriage and contract carriage. Stage carriage means a vehicle which transport passengers where they can board at any stage during the journey. On the other hand, contract carriage is for point to point journey. And next, transportation of minerals within the mining area by vehicles deployed with the driver. That is, within the mining area, from one location to another location, they will be using the vehicles. Now, will it be coming under transportation of goods or renting of motor vehicles? Definitely that vehicle will be with the recipient for a period of time, correct? Because inside the mining area, they will be using that lorry for 1 month, 2 months, 3 months, like that. What I told you, if the vehicle is at the disposal of the recipient for a period of time, what is it called as? Renting of motor vehicles, but not transportation of goods. Then this import of services we don't have, and look into 2 circulars. That circulars we have, that is, sorry, the circulars also we don't have. Related to this import of service, they have not given this. Related to import of service, entire discussion they have omitted, because in CA final they are going to give it. At intermediate level it is too much, so that's the reason why they have just removed it, so you don't have to bother about it. And look into the next area, construction services. In this construction services, see the first point. Construction of an individual house, irrespective of the floor area or cost, not as a part of complex, is exempted. What is that? You are constructing an individual house. That individual house construction, you are receiving some consideration. So that you are a builder. You are doing individual house construction. What is an individual house? House occupied by a single family. Whatever may be the carpet area or whatever may be the consideration, etc. You are constructing an individual house for which you are getting some money. That money is exempted. What if you are constructing a complex like apartment, etc.? Whether that money received will be taxable? Yes. Only for individual house the construction received is exempted. But it should not be works contract. It should be only construction contract, which means pure labor contract. See there. Pure labor contract and not works contract. Then second, construction, repair, alteration, renovation. Concentrate. The difference between the first point and second point is that in case of first point, there is a person who is doing individual house construction, supplier is doing individual house construction and received the money, that is exempted. But in the second point, not only construction but also repairs. See there, construction, repair, alteration. So of what? Of what? A project. What type of project? Pradhana Mantri Awas Yojana or Housing for All Mission. These 2 projects. There is a government project. Pradhana Mantri Awas Yojana and Housing for All Mission is a government project. For that government project, you are doing either construction service or you are doing repair service and you got some money, that is exempted, because already they have tested this point. Repairs to single, like repairs to an individual house. What is your answer? Repairs to individual house. Respond here. Repairs to individual house, taxable or exempted? Why taxable? Only construction is exempted. Repairs to individual house is not covered under the exemption. Is it clear? Whereas in the second case, both construction as well as repair to project, Housing for All Mission or Pradhana Mantri Awas Yojana is exempted. And it should be pure labor contract. Means what? There should not be any goods element. There should be only service element. Then look into this, page 59. Taxability of preferential location charges. Usually, when you buy a flat, you will pay some extra money for the preferential location, like if you want a east facing flat, or if you want a beach view facing flat, or if you want covered car parking, you need to pay some extra charges. What is the treatment of these extra charges? Are you going to pay it at the time of purchase of the flat or at a later point of time? If you pay it at a later point of time, it will be treated as independent transaction, taxable separately as supply of service. Whereas if you pay it at the time of construction itself, at the time of purchase of flat itself, whatever is the treatment of the construction, the same is applied even in case of the preferential location charges, because it will be coming under composite supply. Again I am repeating, you are buying a flat and that flat is 75 lakhs, and if you want covered car parking, you need to pay 5 lakhs extra. What is the treatment of this 80 lakhs? Whether you paid that 5 lakhs at the time of purchase of flat or at a later point of time. If you pay it at a later point of time, it is treated as an independent transaction, and the rate applicable to that particular service, that is 18%, will be taken. Whereas if you pay that 5 lakhs at the time of purchase of flat itself, usually purchase of flat, whether you paid after completion certificate or before completion certificate, we need to see. If you paid entire money after completion certificate, it is excluded from supply. In that exclusion from supply, even this 5 lakhs is also excluded from supply. Say this. treated as construction service by applying composite supply and taxable based on construction service. If entire consideration is after obtaining completion certificate or first occupation, it is not a supply. Even that 5 lakhs what you paid for covered car parking is also excluded from supply. What if other cases? What is other cases? Partly before, partly after, entirely before, then it will be covered under GST, chargeable to GST. And at what rate it will be chargeable to GST? At the rate applicable to the flat, at the rate applicable to the construction service. Then next, advocate or arbitrator services. See this. There is a person, supplier is normal advocate or firm of advocate, or the supplier is a senior advocate, or the supplier is a arbitrator. Normal advocate versus senior advocate, what is the difference? Senior advocate is a designation which is given by the High Court or Supreme Court to an advocate, and depending upon their experience and the kind of cases that they have handled, so they will be given this designation by High Court or Supreme Court. If we are not senior advocate, they will be normal advocate. So normal advocate or firm of advocate, senior advocate. Who is an arbitrator? The one who settles the disputes out of the court is known as arbitrator. Now, if the service is provided by these 3 people to a person other than business entity. Who is a person other than business entity? Individual. Who is a person other than business entity? Individual. Then it is exempted. All 3 cases it is exempted. Let it be normal advocate or firm advocate or senior advocate or arbitrator, providing services to a person other than business entity, exempted. What if they provide service to government or government authority, government entity? Then also it is exempted. If they provide service to a business entity whose aggregate turnover during the previous year does not exceed threshold limit, then also it will be exempted. So 3 exemptions we have. Number 1, if they provide service to a person other than business entity, exempted. If they provide service to government, government authority or government entity, exempted. If they provide service to a business entity whose turnover during the previous year does not exceed threshold limit, it is exempted. In other cases, it will be taxable. Correct? And one more exemption is also there. If they provide service to another advocate or firm of advocate, in the first case it is exempted. Please concentrate. Supplier is a normal advocate or firm of advocate. If they provide service to another individual advocate or firm of advocate, it is exempted. What if senior advocate is providing service to another advocate or firm of advocate? I am a senior advocate. You are individual advocate or firm of advocate. If I provide service to you, you are not my recipient. In turn, you will have one client. Your client is my recipient. Is it clear? I am senior advocate. I am providing services to you. You in turn will provide services to one client, your client. Who are you? Who are you? Mediator. You are also advocate. You are also advocate or firm of advocate. You are also advocate or firm of advocate. Why are you receiving service from me? Because one client has approached you. You could not handle that case, so you approached me. So therefore, you are also an advocate or firm of advocate. I am a senior advocate. When I provide service to you, definitely not for you I am providing service. For your client I am providing the service. You got it? So your client is my recipient. If that person is individual, then it is exempted. If that person is government or government authority or government entity, exempted. If that person is business entity whose turnover during previous year does not exceed threshold limit, exempted. Otherwise it will be taxable. Is it clear? So ultimate litigant, petitioner or applicant is deemed to be recipient. So that advocate's ultimate litigant, ultimate end customer or end client will be there. That ultimate litigant, petitioner or applicant is deemed to be recipient. Depending upon that, it is taxable or exempted. What about arbitrator providing service to another advocate or firm of advocate? We don't have any exemption. We don't have any exemption because it is hypothetical. It will never happen. Arbitrator will settle the case out of the court. Advocate will settle the case through the court. Why will an arbitrator will provide service to advocate? It is like homeopathy doctor going to allopathy doctor for medicine. They both are practicing in 2 different medicines. Why will one go for the other? Definitely it will not happen like that. Then next, always advocate or arbitrator service covered under RCM. Remember, wherever advocate or arbitrator service is taxable, it will be taxable under RCM. So who will pay GST? The business entity will pay GST. And service provided by senior advocate to individual advocate or firm of advocate is not exempted. In such case, the ultimate litigant, applicant or petitioner shall be deemed to be recipient. Then an advocate, individual or firm, and an arbitrator are not required to get registered as they are exclusively engaged in supplies covered under RCM. So section 23 overrides section 24. Okay. So listen carefully. I am an advocate. My outward supply is covered under RCM, means I am exempted from registration. Now I have received some service on which I need to pay GST under RCM. Should I compulsorily get registered or not required to get registered? So please concentrate, look into this. There is an advocate there is an advocate, and the advocate's outward supply to a business entity, the advocate's outward supply is to a business entity, so which will be taxable under RCM, correct? Means advocate services will be fully covered under RCM, therefore they are exempted from registration under section 23, exempted from registration under section 23. And the advocate is making import of services, any person outside India, from a person outside India, this advocate will do import of services, and that import of services will be taxable under RCM. Okay, that import of service, usually import of service is taxable under RCM, and as per this they are compulsorily required to get registered. Every person who is required to pay GST under RCM is compulsory registration under section 24. If you see section 23, they are exempted from registration. If you see section 24, they are compulsorily required to get registered. Which will prevail? Section 23 only will prevail, and they are exempted from registration because section 23 overrides section 24. So if they are exempted from registration, they are exempted from registration, even though they are compulsorily required to get registered, but they are exempted from registration if they are covered under the exemption. That's what the section 23 overrides section 24. You understood, or you want me to repeat it again? Please respond. So whenever you are exempted from registration, you are not at all required to get registered, even though you are compulsorily required to get registered under section 24. That is this point. So section 23 overrides section 24. This exemptions under IGST Act is not there. Look into the miscellaneous exempted services. First point, transfer of a going concern as a whole or independent part thereof is exempted. Then supply of service associated with transit cargo to Nepal and Bhutan. So what is this first point? Sir, I have business, sir. The entire business I am transferring to you, sir. The entire business I am transferring to you. Lock, stock, barrel, like amalgamation, merger, slump sale, etc. In that case, I get the purchase consideration. There is no GST on that. Remember, transfer of business is exempted. Okay. And next, number 2. Associated with transit cargo, service associated with transit cargo to Nepal and Bhutan. What is transit cargo to Nepal and Bhutan means? Generally, Nepal and Bhutan are landlocked countries. Any goods that are to be imported to Nepal and Bhutan will be first unloaded in India, and through transit cargo it will be going to Nepal and Bhutan. So this movement is known as transit cargo. For the transit cargo, if you provide any service like loading, unloading, transportation, warehousing, all these things will be exempted. Any service in relation to transit cargo to Nepal and Bhutan, both to and from covered, not only onward transportation to Nepal and Bhutan, even return journey also will be exempted, provided the return journey is empty. So usually you would have observed, these auto people will be telling, you know, when you ask for dropping you in the auto, they'll tell return I have to come empty, so therefore you pay me some extra money, like that they will ask, like that. So the onward transportation, they are taking the goods, but they will unload the goods there. Then again the vehicle has to return empty. When the vehicle has to return empty, so they will collect some charges for that also, that is also exempted. Then next, Service by way of collecting or providing news by an independent journalist. So who is an independent journalist? Those who are not associated with any newspaper or news channel, and they gather the news and they will be giving it to the news channel, thereby they earn some money, that is exempted. Then Press Trust of India or United News of India, they will collect the news and disseminate to all the newspapers. If you want to put some information, put a news in all the newspapers, like lot of public notice will be there, na? Public notice, missing, obituary, usually you would have seen missing, so and so person is missing. If you know him, you tell this number, like that. All these information you want to put it in the newspaper. But how you can put it in the newspaper? You cannot approach every newspaper. That's why you need to go to the Press Trust of India or United News of India. You make payment to them and they will divide it to all the newspapers, because they will have the control of all the newspapers. So these people, Press Trust of India or United News of India, will collect some money now. That money collected by them will be exempted. That is this PTI or UNI. Service of public libraries. Public libraries means what? Any person can go to that library. In Chennai there are 2 public libraries. Kanamara Library, Anna Centenary Library. There are 2 libraries. Can you go? Open for all. That is called as public library. And if you borrow book, you have to pay the lending fee. Whether that lending fee is taxable or exempted. Public libraries by way of lending of books, publication or any other knowledge enhancing content or material, that is exempted. Then 5th point, 6th point we discussed. Look into 7th point. Service by way of access to road or bridge on payment of toll charges. So toll charges is exempted. What is this toll charges? First, a builder will put the road, and on the vehicles which are using that road, they will collect the toll charges. That toll charges which is recovered by them will be exempted. There is no GST on the toll charges. But what if it is by way of annuity? Then it will be taxable. What is annuity? Here they will not collect it from the vehicles, but they collect it from the government by way of installments. Whether that is covered under the exemption? No, that will be taxable. Then sometimes vehicles, when they carry large consignments, they need to pay overloading charges. That overloading charges is also exempted. And higher toll charges. When your vehicle is not having a FASTag sticker, you need to pay 2 times the toll charges. Even that higher toll charges is also exempted. These are the points related to toll charges. Remember, what are exempted for toll charges? The normal toll charges is exempted, higher toll charges is exempted, overloading toll charges is exempted. But toll charges paid by way of annuity by the government will be taxable. Then this 8th point we discussed, 9th point also we discussed. Look into the 10th point. Satellite launch services provided by any person. So any person providing satellite launch services is exempted. And 13th point, research and development services against consideration in the form of grants. That is, you are doing some research services and you are getting grants. From whom you are getting grants? Government entity, that the grant is exempted. Or you are getting grant from research association, university or college or other institution notified under 35 of Income Tax Act. What is notified under 35 of Income Tax Act? Scientific research expenditure. Usually in income tax PGBP, there is one point called as any scientific research expenditure or contribution for scientific research is exempted. So you are contributing for scientific research to an association, university or college which is doing scientific research. I am doing the research and I will get some grant from that association, university or college. That grant received by me is exempted. Is it clear? That is about this. These are the various exemptions we have, and we completed all these exemptions. Nook and corner along with the case studies yesterday we discussed with respect to that. Okay. Now we will move on to, not everything is tested in past exams. Whatever they have tested in past exams we discussed. Mostly it was on repeated areas. And today what we have seen is that what are all the new areas which are possible that can be tested in exam. Now look into the 3rd chapter, that is liability to pay GST. What we discussed so far is exemptions. Now we will see who is liable to pay GST. Take page number 30. Take page number 30. Ram. Say this, GST liability on a person other than supplier. First, who is having liability to pay GST? Who is having liability to pay GST? Generally to government, supplier. But in 3 exceptional cases, supplier will not pay GST to government, but some other person will pay GST to government. 9.3, 9.4 and 9.5. In case of 9.3, liability to pay GST is on recipient on some notified goods and services. Whereas, in case of 9.4 also, recipient only will pay GST, that is promoter or builder who is buying materials or receiving services from an unregistered person is given under 9.4. 9.5, there are some notified services through e-commerce operator where liability to pay GST is on e-commerce operator. Okay, we have 3 subsections pa, 9.3, 9.4, 9.5. 9.3 who will pay GST? Recipient. 9.4 who will pay GST? Recipient only. 9.5 who will pay GST? E-commerce operator will pay GST. What is the difference between 9.3, 9.4? There are some notified goods and services where recipient will pay GST, whereas 9.4 purchases by a promoter or builder from an unregistered person. That is this. You can see here one table, 9.3. When applicable, notified goods or services from an notified goods or services from any person. Like supplier can be any person, either registered or unregistered, and the recipient will be paying GST. What are those notified goods and services? We have a big list of goods and services, but the list of goods is not in syllabus, but the list of services is in syllabus that you need to learn. Okay, that is notification 13 of 2017. So whenever you are writing that the said service is covered under RCM, you need to write as per section 9 subsection 3 read with notification number 13 of 2017, the said service is exempted, like that you need to write. Is it clear? So you have to remember 2 notification numbers pa. What are the 2 notification numbers that you need to remember? Say this. If you want to write as to exemptions, all the list of exemptions is given in which notification number? Exemptions under GST. Exemptions under GST is given in which notification? Section 11. Section 11 read with, section 11 read with notification number 12 bar 2017, 12 of 2017. Whereas services under RCM, services under RCM, if you need to comment about what are the list of services which are covered under RCM, you need to write section 9 subsection 3 read with, section 9 subsection 3 read with notification number notification number 13 of 2017. Okay, so list of goods, list of services which are covered under exemption is 12 of 2017, and services covered under RCM is 9 subsection 3 read with notification 13 of 2017. This is the reference that you need to give. Exemptions and services under RCM. Don't forget pa, because when you are writing this in the answer sheet, definitely your answer sheet will have more weightage. Okay, to the extent possible, you need to write these legal references and even the legal language to the extent possible. Then only you will be able to score the maximum marks. Okay, now that's what we are going to discuss now. The list of services which are covered under RCM is given under notification 13 of 2017, and who will pay GST in this case? Recipient will pay. Then look into the next column, 9.4. When 9.4 is applicable, inward supplies by a notified person from an unregistered person. Who is the notified registered person? Promoter or builder. You are promoter or builder. You are buying lot of materials. What are the materials that you will buy for construction? Cement, bricks, steel, metal bars, building materials, then pipe fittings, etc. From whom? From an unregistered person. Same way you will receive services from an unregistered person. So you need to pay GST under RCM. And who will pay? Recipient will pay. How the supplier should be? Supplier should be unregistered. Then look into 9.5. When 9.5 is applicable, whenever there is supply of services through e-commerce operator. So there are some notified services provided through e-commerce operator, liability to pay GST is on e-commerce operator. What are those notified services? Remember HATE, H-A-T-E, H for housekeeping services. In case of housekeeping services, example Urban Clap or Quicker, like this. These are all the examples. Even no broker home service, for example, you want the plumber, carpenter, or people who do the cleaning, etc. So you can book it through them. So in that case, supplier will not pay GST. Recipient also will not pay GST. That no broker or Urban Clap is there, they will pay GST. So housekeeping services. Then accommodation services. Example, Goibibo, Oyo, Make My Trip, etc. So in case of Oyo room, supplier will be hotel. Recipient will be the person who stay in that hotel. E-commerce operator will be Oyo. Who will pay GST? Oyo will pay GST. Then T, transportation of passengers. Example of transportation of passengers, Ola, Uber, Rapido, etc. Who is the supplier? The driver. And who is the recipient? Passenger. Who will pay GST? The e-commerce operator will pay GST. And E for eating food from the restaurant, Swiggy, Zomato. Supplier will be restaurant. Restaurant will not pay GST. Recipient will be customer. They will also not pay GST. But who will pay GST? The e-commerce operator, Swiggy, Zomato will pay GST. That is with respect to this. So tell me what are the 4 notified services pa? H-A-T-E. H for housekeeping service. A for accommodation services. T for transportation of passenger service. E for eating food from a restaurant. In all these 4 cases, who will pay GST? E-commerce operator will pay GST. And observe this, in the first 2 cases, supplier should be unregistered. Whereas in the next 2 cases, supplier may or may not be registered. It will come under 9.5. For example, restaurant unregistered, selling food through Swiggy. Who will pay GST? Swiggy only will pay GST. Suppose restaurant registered, selling food through Swiggy. Who will pay? Swiggy only will pay GST. That's what. In case of transportation point, eating food and restaurant point, let the supplier be registered or unregistered. So always e-commerce operator will pay. Whereas for the first 2 cases, say for example there is a hotel. That hotel is registered and it is supplying accommodation through Oyo. Who will pay GST? Hotel or Oyo? Hotel. Because only if the supplier is unregistered, it is covered under 9.5. What if the hotel is unregistered and supplying accommodation through Oyo? Then Oyo will pay. Is it clear? Please don't forget this. For the first 2 cases, supplier should be unregistered and supplying through e-commerce operator, then only e-commerce operator will pay. Suppose if the supplier is registered, supplier only will pay GST. Is it clear? Wherever 9.5 fails, wherever 9.3 fails, wherever 9.4 fails, what is the general rule? Supplier will pay GST to government, that is FCM. Okay, Papa. 9.3, 9.4, 9.5 are the exceptions. Yeah. The general rule is that supplier will pay GST to government. And look into this. Maximum rate of GST. What is the maximum rate of GST? 40%. In that, CGST will be 20% and SGST will be 20%. And this is the maximum rate. But effective, what is the maximum effective rate that is being levied now? 28%. 28%. But for your exam, 28%. But the maximum possible rate is 40%. But in future, they are changing. Like at present, they change which is applicable for May 26 exam onwards. For Jan 26 exam, the maximum rate of GST is 40%. Generally, GST is payable to government by supplier. Therefore, if a supply is not covered under 93, 94, 95, it is always forward charge mechanism. If a supply is covered under RCM, recipient has to pay GST to government. Correct? Now listen carefully. A particular transaction is covered under RCM. I am supplier, you are recipient. So actually you should pay GST to government. But I paid. Whether you are relieved from payment of GST? You understood my question? Please concentrate. The supply is covered under RCM. I am the supplier, you are the recipient. Actually, you have to pay GST. But I paid GST. Whether you are relieved from payment of GST or you should pay GST? You should pay GST. Why? When a transaction is covered under RCM, the recipient only should pay GST to government. Even though supplier paid the liability, recipient is not relieved or exonerated from payment of GST. Is it clear, Pa? So say this. If a supply is not covered under, if a supply is covered under RCM, recipient is not exonerated from payment of GST, if supplier discharges the liability. Is it clear? Just because supplier pays, the recipient is not relieved. The recipient has to pay. Ayya, please respond, Ayya. You understood or not? That is, supplier, I am the supplier, you are the recipient, the supply is covered under RCM, then who will pay GST to government? The recipient is liable to pay GST to government. Now instead of recipient, the supplier paid GST to government. Is the recipient relieved from payment of GST? No, the recipient is not relieved from payment of GST. The supplier just has paid excess tax, which the supplier should get refund, and the recipient has to pay the tax. That is this. Then next, so in such case, recovery of tax can be initiated by department on recipient for non-payment of GST. And always remember that whatever GST that the recipient is paying under RCM should be paid using electronic cash ledger only. He cannot use electronic credit ledger for payment of GST. Let's try to understand this with the help of an example. So write down this example, that is gross GST payable under FCM. Gross GST payable under FCM equals to rupees 1,20,000, 1,20,000, and RCM liability equals to 40,000. RCM liability equals to 40,000, and balance in ITC, input tax credit is 1,50,000. Compute net GST payable. Compute net GST payable. Tell me what is a net GST payable. Compute what is a net GST payable, pa. That is, your FCM liability is 1,20,000, RCM liability is 40, and you have ITC 1,50,000. So therefore, how much is the net GST payable? 40,000. How 40,000? Because for payment of this 40,000, we cannot use ITC. So see this, gross GST payable. What is that gross GST payable? The gross GST payable is 1,20,000 minus ITC utilized. What is that ITC utilized? We can utilize 1,20,000. Fully we can utilize. And then we need to add RCM liability. That will be 40,000. So net GST payable will be 40,000. Net GST payable will be 40,000. Is it clear, pa? That is for payment of GST under RCM. And what is the excess ITC carried forward? What is the excess ITC carried forward? The excess ITC carried forward will be 30,000. Can't we use that 30,000 for payment of 40,000? No, we cannot use. How 30,000 excess carried forward? Total 1,50,000. Out of that 1,50,000, you used 1,20,000. So 30,000 is still there. That you carry forward and adjust against the FCM liability in future, but that cannot be used for payment of RCM liability. Is it clear? Finished here? You got the clarity about this? So always payment of GST under RCM will be using electronic cash ledger. Now we are going to discuss the list of services which are covered under RCM. See the next page. Notified services under RCM. You can remember this with a mnemonic: Sir, CG, Go Salads. This T point is omitted. This T point is omitted. The TDR, FSI and long-term lease is omitted. That is not there. Sir, CG, Go Salads. So first, first we need to understand what are the services that we will try to remember. Yes, for security lending services. Security lending service means what? There is a lender of securities who is lending the securities to the borrower. That is lending of securities, security lending scheme. Then next, import of services or renting of motor vehicles. Another are renting of immovable property. Again repeat, SIRR. What is S? Security lending services. I for import of services or renting of motor vehicles. Another are renting of immovable property. C, Copyright services. C for copyright services. G for GTA services. Okay. And next CG. C for copyright services. G for GTA services. Then G, government services. O for overseeing committee services. This T point is not there. This is omitted. You don't have to learn this. You don't have to learn this. That is omitted. So CG, GO. GO for government services, overseeing committee services. Then SALITs. S for sponsorship services. A for agent services. And L for legal service by individual advocate or firm of advocate. Then next A is arbitrator services. Then L, LA, that is SA, LA, DS. D for director services to company or body corporate. S for security agency services to registered person. These are the list of services which are covered under RCM, and for every service you need to understand what is the exemption, what are the conditions for RCM, what is the non-applicability of RCM. You have to learn it this way, and you need to remember and go for exam, and then you will be able to properly apply the answer. Okay, first one is what? Security lending services. In case of security lending, who is the supplier? Lender of securities. Who is the recipient? Borrower of securities. Who will pay GST? The borrower of securities will pay GST. Is it clear? Then next one, any exemption? No exemption. Any condition for RCM? No. Any non-applicability of RCM? Also no. Then look into the next one, I for import of services. As I told you, for import of services, they have omitted all the exemptions related to this. So just remember, import of service is covered under RCM. Okay, import of service is covered under RCM. That much only you need to know now. Import of service is covered under RCM. In case of import of service, where the supplier is located? Outside India. Where the recipient is located? In India. And in this case, recipient in India will pay GST. Any exemption? No. Any condition for RCM? No. Non-applicability of RCM also we don't have anything. So by default now import of service will come under RCM. Then next, R for renting of motor vehicles. For renting of motor vehicles already we discussed 4 exemptions. Can you tell me what are the 4 exemptions we discussed? I have a motor vehicle that can carry more than 12 passengers. To whom I have given it on rent? State Road Transport Corporation. Number 2, I have a electric motor vehicle that can carry more than 12 passengers. To whom I have given it on rent? Local authority. Very good. Number 3, I have a motor vehicle that can carry goods. To whom I have given it? GTA. Number 4, I have a motor vehicle which I am giving on rent to a person who is providing transportation services to education institution. Which education institution? Category 1, that is up to 12th standard or equivalent. These are the 4 exemptions for renting of motor vehicles. In other cases it will be taxable. Now check there, what are the conditions for RCM? Total 3 conditions should be satisfied. First condition, supplier should be other than body corporate. Second condition, recipient should be body corporate. Third condition, rate of GST should be 5%. If all these 3 conditions are satisfied, it will be RCM. Supplier other than body corporate, recipient body corporate, rate of GST 5%. If any one condition is not satisfied, then it will be FCM. Then next one, renting of immovable property. Renting of immovable property divided into 2, residential property and commercial property. If it is a residential property, for residential property, what are the exemptions we discussed? Renting of residential property for residential purpose to an unregistered person. Next, renting of residential property for residential purpose to a registered individual for their family stay. Correct? Then one more point also I told you, for residential property it is applicable. Accommodation services, minimum 90 days, subject to maximum 20,000 rupees per month per person. Then it will be exempted. And this accommodation point is common for residential property as well as commercial property. Okay. Now, residential property 3 exemptions. And what are the conditions for RCM? Simple point, remember, if the recipient is registered, then RCM, otherwise FCM. Okay, Sir, 3 exemptions you need to remember, sir. Other places it will be taxable. Wherever it is taxable, for renting of residential property, if the recipient is registered, then it is RCM. Remember, R. Okay. So, Rajamouli movie, RRR. Now you remember one more R. What is that? What is first R? Residential property. Second R, residential purpose. Third R, registered person. Fourth R, RCM. Okay, wow. Residential property, residential purpose, registered person will be, okay, don't forget this. So when residential property will come under RCM if the recipient is registered person. What if recipient is not registered? Then it will be FCM. See, wherever the condition fail, it will be FCM. We learn condition for RCM. If the condition fail, the balancing figure, it will be FCM. Next, commercial property. For commercial property, what is exempted? Only one exemption. What is that? Accommodation service, minimum 90 days, subject to maximum 20,000 rupees per month per person. And any condition for RCM? Yes. 2 conditions, pa. Remember, supplier should be unregistered. Recipient should be registered, but not opting for composition scheme. Registered person, but not opting for composition scheme. But not opting for composition scheme. So there are total 2 conditions. Supplier should be unregistered. Second, recipient should be registered, but not opting for composition scheme. Now, related to this, you make note of one flow chart. Say this. Renting of commercial property. Renting of commercial property. Renting of commercial property. And it is taxable. Renting of commercial property and it is taxable. There is a renting of commercial property and that renting of commercial property is taxable. Now what you need to check? You need to check whether supplier is registered or unregistered. So we need to check whether supplier is registered person. Supplier is unregistered. Sorry. When supplier is unregistered. Suppose if it is no, supplier is registered. We need to first check whether supplier is unregistered. No means what? Supplier is registered. Then it will be FCM. Okay, wow. Sir, first you need to check whether the supplier is unregistered. No, supplier is registered. Then who will pay? Supplier only will pay. FCM. Yes, supplier is unregistered. Supplier is unregistered. Then check second condition. What is that? Recipient is registered. Recipient is registered. No. Then also it will be FCM. Correct? So what is the condition for RCM? Pa? Supplier should be unregistered and recipient should be registered. Supplier is unregistered. No. Definitely FCM. Supplier is unregistered but recipient is not. Supplier is unregistered person. Yes. But the recipient is registered. No. Recipient is also unregistered. Then FCM. But supplier is unregistered, how he can pay GST? So no GST. First FCM pa, and supplier is unregistered. From where he will pay, he will not pay. Therefore it is no GST. Purida. First you need to check whether the supplier is unregistered. No. Means what? No. Means what? Supplier is registered. So who will pay GST? Supplier only will pay GST FCM. Is that clear? Second. Supplier is unregistered. Yes. Means supplier is unregistered. Yes. So check the second condition. What is the second condition? Recipient is registered. No. Recipient is unregistered. Then it will be FCM because condition, all conditions should be satisfied. Any one condition not satisfied, it will be FCM. Correct? Ana supplier is unregistered. So from where he can pay GST, he cannot pay GST. That's why no GST. You got it? Suppose if it is yes, supplier is unregistered, recipient is registered, both conditions. One more condition is there. What is that? Opting for composition scheme. Whether recipient opting for composition scheme, whether recipient opting for composition scheme, yes, then who will pay? Respond pa. Recipient is opting for composition scheme, then who will pay? FCM or RCM? FCM, not RCM. Olanga paranga pa. Supplier should be unregistered, recipient should be registered, but not opting for composition scheme. So if recipient opt for composition scheme, condition fail. Wherever condition fail, it will be FCM. That's what I have given. Supplier is unregistered, yes, first condition satisfied. Recipient is registered, yes, second condition also satisfied. But recipient is opting for composition scheme, so condition not satisfied. Third condition not satisfied. Therefore, who will pay GST? Supplier. And a supplier is unregistered, so no GST. Got it? Yes. Suppose if it is no, recipient is not opting for composition scheme, then all the conditions satisfied, yes or no? Supplier other unregistered, recipient registered, and recipient not opting for composition scheme, so therefore it will be RCM. Who will pay GST in case of RCM? Recipient will pay GST. So this is how you need to apply and arrive at the answer. Don't forget this flow chart. First you need to check whether the supplier is unregistered, yes. Then second, supplier recipient is registered, yes, and recipient is opting for composition scheme, no. Then only it will be RCM. If anything fails, it will be FCM. But in case of FCM, we need to check whether the supplier is registered. If not, no GST. Clear? So this you mark as very, very important. Definitely this will be tested for this exam. This RCM in case of renting of commercial property. Then look into the next one, copyright services. What are the copyrights given here? Original literary. Example for original literary: books, novels, etc. An author who is writing books, an author who is writing novels, articles, etc. will come under original literary. Dramatic works. Who will come under dramatic works? Story writers, script writers, screenplay writers or story writers will come under dramatic works. Then musical works. Who will come under musical works? Music director. Music director who composes the music. Then artistic works. Who will come under artistic works? People who make art, that is painting, drawing, sketch, that people will come under artistic works. These four copyrights. What are the four copyrights pa? Original literary, dramatic, musical, artistic. By whom? By an individual, to any person. It is covered under RCM. So see there, all these four should be by an individual. 1 second. So copyright services, original literary, dramatic, musical, artistic works by an individual. And any exemption we have? No, we don't have any exemption with respect to this. And any condition for RCM? No. Any non-applicability of RCM? Yes, we have in one place non-applicability of RCM, that is original literary. See there, if I am an author pa, and if I opt to pay GST under FCM for the next 1 year from the date of excising option, I should only pay GST under FCM. Is it clear? If the author opts to pay GST under FCM, lock-in period 1 year from the date of excising the option, so the supplier, the author only should pay GST under FCM. Okay. Apart from that, all other cases it will be RCM. So tell me, what are the four copyrights? Original literary, dramatic, musical, artistic works. By whom? By an individual. And by default it is RCM. correct? No exemptions, no condition. But in one place we have an exception. Which place? Author, original literary. If the author opts to pay GST under FCM, for the next 1 year from the date of excising option, they only should pay GST under FCM. Why will they opt to pay GST under FCM? Because if my outward supply is covered under RCM, I cannot take ITC on my inward supply. So author will have some inward supply. They will buy laptop, they will buy computer, or they will buy tab, etc. If they want to take ITC on that, they should go for FCM option. Because if their outward supply is covered under RCM, they cannot take ITC on their inward supply. So due to that reason, they go for FCM. But if they opt for FCM, next 1 year from the date of excising option, they only should pay GST under FCM. You understood this C? Then G, GTA services. For GTA services, already we discussed few exemptions. What are the exemptions for GTA services? Number 1, notified goods. What are the notified goods? Agricultural produce, food grains, including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disasters, defense and military equipment, correct? All those are list of notified goods. If those notified goods is provided by GTA, transported by GTA, it is exempted. Second exemption for GTA, if the recipient is central government, state government or local authority or government authority which is registered only for deducting TDS. Number 3, if the recipient is individual, HUF, AJP or a trust which is unregistered and not having factory. These are the 3 exemptions. Already we learnt all these in exemptions. I just connected it in this place. So it will be like a repetition. And these cases it is exempted. Other cases GTA service will be taxable. Any condition for RCM? No. But GTA has an option to pay GST under FCM. We discussed that also yesterday. What is that? GTA has 2 options, FCM or RCM. If they opt for FCM, what they should do? Again, they have 2 rates. What are the 2 rates? 12% with ITC, 5% without ITC. And this FCM RCM option, when they need to exercise? Previous financial year in the last quarter between 1st January to 31st March. Then look into the next one, government services. What we have completed so far is SIR, CG, SIR, CG we completed. So related to that, we have seen what are the exemptions and other points. Now concentrate government services. Government services to business entities. Yesterday we did not discuss this part. Okay, what we discussed is that services provided by government, so excluded from supply, covered under supply. In that covered under supply, please take that page. Please keep this page and take that page. What we have discussed yesterday for government services, please take that page. Government services divided into 2, that is municipality or gram panchayat functions, and next what is the second one that we have seen? Municipality or gram panchayat functions. Next, liquor license. These 2 cases it is excluded from supply. All other activities will be covered under supply. In that, transportation, airport or port, post, then railways, fully we discussed, correct? 4 points we discussed. And 5th one, other services. In that other services, to business entities other than business entities, to other than business entities we discussed it as exempted, but to business entities what is the treatment? That is covered here. That is covered here. Services provided by government. Which services pa? Other than 4 services. What are the other than 4 services? Other than post, other than transportation, other than railways, other than airport or port services, remaining services. Okay. Now we have total some exemptions, specific exemptions, and we have general exemptions, 2 general exemptions. What are the specific exemptions? You see, Right to Information Act charges, RTI charges. There is a business entity which will pay money, RTI charges, to get the information from government. That RTI charges collected by government is exempted. What about you? You pay RTI charges to get your answer sheet. What about that? That is taxable or exempted? Exempted. Under which point it is exempted? To other than business entity, because you are individuals na, other than business entity. Suppose if it is business entity, then also it is exempted under this point. So first one, RTA charges. Second one, interdepartmental services. Interdepartmental service means what? one department of central government or state government to another department of central government or state government. For example, income tax department requests police department to provide the security to income tax department. Now Tamil Nadu police department providing security service to income tax department is an example of interdepartmental services. Is it clear, pa? Then second, sir, any department to department exempted. So whether government is a business entity, yes. Who is a business entity? Any person engaged in business is known as business entity. You just write down there. Who will be treated as business entity? Who will be treated as business entity? Any person engaged in business. Any person engaged in business. Any person engaged in business is known as business entity. Business entity will be any person who is engaged in business. So is government also falling under business? Yes. Government activities also, it will be treated as business. Okay. So any person engaged in business is known as business entity. Clear? So say this, RTI charges, Right to Information Act charges, interdepartmental services, right to use telecom spectrum allocated before 1/4/2016. When the telecom spectrum is allocated? Before 1/4/2016. So government owns telecom spectrum pa. That telecom spectrum they will be giving it. That telecom spectrum they will be allotting to the telecom companies. For allotting to the telecom companies will pay one-time charges or annual royalty. Both are exempted. But when the assignment of right should be before 1/4/2016. What if it is assigned after 1/4/2016? Then it will be taxable. You understood that point? Third point, assignment of right to use telecom spectrum. When it should be allocated? Before 1/4/2016. What is exempted? Both one-time charges and annual royalty. Look into the next point, fourth point. Fourth point, you see, what is the difference between third point and fourth point? Right to use natural resources allocated before 1/4/2016. That is only one-time charges. Okay, only one-time charges. Right to use natural resources allocated before 1/4/2016. Only one-time charges is exempted. Then, right to use natural resources to individual farmer. So what is the difference between fourth point and fifth point? Fourth point is natural resources. Fifth point also natural resources. But fourth point is to any person. But fifth point is to individual farmer. And fourth point when? Before 1/4/2016. But fifth point anytime. Anytime, assigned anytime, fully it is exempted. Both one-time charges and annual royalty. These are the three assignment of right to use resources of government. Then sixth point you see, merchant overtime charges. Government will be collecting some merchant overtime charges from the importers and exporters if they do the clearances after office hours or on holidays. That charges collected by government is exempted because customs department will work even during Sundays, after office hours, etc. So they will collect some extra charges from them. That is called as merchant overtime charges under customs. That is exempted. Then safety certificate charges. Safety certificate charges means what? Generally, the state government officers will be inspecting the buildings and will be giving a safety certificate, whether they maintain proper safety certifications, etc. or not, like that. Which people? Factories, public, like people who are dealing with public at large, like education institutions, hospitals, shopping malls, then complexes. Everyone should get this safety certificate and they need to pay some safety certificate charges to government. That charges received by government is exempted. Then consideration for tolerating an act. Generally, yesterday we discussed consideration for tolerating an act is consideration and treated based on principal supply. But what if government is collecting it? It is always exempted. Is it clear? If it is compensatory in nature, not treated as consideration. If it is penalizing in nature, not treated as consideration. If it is consideration for tolerating an act, it is treated as consideration, but it will be exempted. Then the share of profit petroleum point is omitted. This is not there. They have removed it. The share of profit petroleum and this cost petroleum, these two concepts are omitted. That is not there. You don't have to learn this. Then look into 10th one, registration charges under any law for the time being in force. That is, government will be collecting registration charges for registering the building, that is stamp duty registration charges collected by sub-registrar, RTO collecting registration charges for registering the vehicles, and ROC collecting the registration charges for registering the companies. All those are examples. So therefore, registration charges under any law for the time being in force. Then fee for birth certificate, death certificate, driving license, visa or passport, that is also covered under the exemption. Then guarantee commission for guaranteeing the loans taken by PSUs. Usually public sector undertakings will pay commission to the government for giving the guarantee to the loans. That commission collected by government is exempted. And sir, the previous point, only 5 certificates. What are the 5 certificates? Birth certificate, death certificate, driving license, visa, passport. You may get a doubt, sir, that we are discussing services provided by government to business entity. How come these are covered here? Because this service is provided to business entity on behalf of their employees. For their employees, the company is getting the birth certificate, death certificate, driving license, visa, passport. So that is services provided to business entity. Then excess royalty collection contractor to the extent of variable royalty. What is this excess royalty collection contractor point? Please listen. There is a state government, state government of Tamil Nadu. This state government of Tamil Nadu is assigning right to extract natural resources to a leaseholder. State government of Tamil Nadu is assigning right to extract natural resources to a leaseholder. Right to extract natural resources, to a person, to leaseholder, right to extract natural resources against rupees 10,000 per ton. Right to extract natural resources against rupees 10,000 per ton. And we have ERCC, excess royalty collection contractor. We have excess royalty collection contractor, and that excess royalty collection contractor, we have a excess royalty collection contractor. So to that excess royalty collection contractor, the state government of Tamil Nadu gives right to collect variable royalty. Okay, again I am repeating, please concentrate. State government of Tamil Nadu gives right to extract natural resources against rupees 10,000 per ton to the leaseholder, for which the leaseholder has to pay the royalty. And state government of Tamil Nadu gave another contract to whom? To ERCC, to collect the variable royalty, which means from the leaseholder, the ERCC will collect variable royalty. From the leaseholder, the ERCC will collect variable royalty and will pay fixed royalty to state government of Tamil Nadu. Again I am repeating, state government of Tamil Nadu gave first right. What is the first supply? Between state government of Tamil Nadu and leaseholder, and against that what is the consideration? Variable royalty. Okay, and second supply is between state government of Tamil Nadu and ERCC, for which they are getting the variable royalty. Now fixed royalty. Now say the variable royalty is somewhere like 60 lakhs and the fixed royalty is 50 lakhs. Okay. Now, generally services provided by government to business entity is covered under RCM. So, therefore, the leaseholder will pay GST on 60 lakhs under RCM. Okay, va? The leaseholder will pay GST to government under RCM on 60 lakhs. Whether ERCC is required to pay any GST? No. Why ERCC not required to pay any GST? Pa, to state government of Tamil Nadu, what is the total consideration? Pa? To state government of Tamil Nadu, what is the total consideration? 50 lakhs. 50 lakhs. Which means logically GST should be on 50 lakhs. But leaseholder paid GST on what? Means more than 50 lakhs already leaseholder has paid. So whether ERCC is required to pay any GST or no need to pay GST? No need to pay GST. So which means ERCC is exempted to the extent of what? Variable royalty. To the extent of variable royalty. Excess royalty collection contractor is exempted to the extent of variable royalty. Now let's change this. Let's change this. Same scenario, but what if? Same scenario, what if the variable royalty is less than the fixed royalty? Let's see that. Suppose here the variable royalty is 45 lakhs. The variable royalty is 45 lakhs. Then the leaseholder will pay GST on 45 lakhs to government, correct? The leaseholder will pay GST to government on 45 lakhs. Then ERCC will pay GST on what? 5 lakhs. Very good. So GST on 5 lakhs. GST on 5 lakhs. ERCC will pay GST on 5 lakhs. ERCC will pay GST on 5 lakhs. So state government of Tamil Nadu gives right to extract natural resources against rupees 10,000 per ton to the leaseholder, and there is ERCC. State government of Tamil Nadu gives right to collect variable royalty to ERCC, and ERCC will collect variable royalty and ERCC will pay fixed royalty to the state government of Tamil Nadu, and the variable royalty is 45 lakhs, means on that 45 lakhs leaseholder will anyhow pay GST. So but the ERCC is depositing 50 lakhs with government, so therefore on the difference amount ERCC will pay. Again in this case, to what extent ERCC is exempted? He did not pay GST on 50 lakhs. How much he is remitting? 50 lakhs. But he is paying GST on 50, only 5. Only 5. Means to what extent he is exempted? To the extent of variable royalty. Got it? That is this point, that ERCC is exempted to the extent of variable royalty. Then next point number 14, fee for granting national permit. So you finish making note of this too? Yes? Okay. So say this, permit charges. Generally whenever a vehicle, that is this T-board vehicle, I mean like yellow board vehicles, whenever they cross a state, for example Tamil Nadu vehicle, if it is going to Andhra Pradesh, they have to take a permit, state permit in Andhra Pradesh. That permit charges collected by the state government of Andhra Pradesh is exempted. Same way there is something called as national permit charges. Lot of lorry transporters will take this national permit charges for going from one place to another place. That national permit charges is also exempted. That is this. Fee for granting national permit to goods carriage to operate throughout India or contiguous states will be exempted. So that is about the exemptions, specific exemptions. Look into two general exemptions. First one, services provided by government to a business entity whose aggregate turnover during the previous year does not exceed threshold limit. Then it will be exempted. But this exemption is not applicable in case of renting of immovable property. Is it clear? Listen carefully. Government is providing some services not covered under this specific exemption. Say advertising services. Government is providing advertising services by way of allowing you to display the advertisement. And you started business this year only. Previous year aggregate turnover does not exceed threshold limit. So whether this advertising service is exempted? Yes. But this exemption is not applicable in case of renting of immovable property. Any service provided by government to business entity, if it is covered under those specific exemptions, anyhow it is exempted. So other exemptions to business entity whose turnover during the previous year does not exceed threshold limit, then it is exempted, but this exemption is not applicable for renting of immovable property. Is that clear? What if the turnover during the previous year exceed threshold limit, then it's not covered under the first general exemption. Second general exemption is applicable if the value of supply does not exceed 5,000 rupees. For example, police department is providing security service to Taj Hotel and the charges is 4,000. First, security service to Taj Hotel is in that list of specific exemption? No. First general exemption not applicable because Taj Hotel turnover during the previous year exceed threshold limit. But the second general exemption is applicable. What is that second general exemption? The value of supply does not exceed 5,000 rupees, then it will be exempted. Is it clear? Value of supply does not exceed 5,000 rupees per invoice, then it is exempted. And in case of continuous supply of service, what is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligation is known as continuous supply of service. Can you give me examples of continuous supply of service? Renting is a continuous supply of service. Why pa? It takes more than 3 months, 11 months, no rental agreement and all. So more than 3 months and involves periodic payment obligation. Construction is an example of continuous supply of service. And even telecommunication, postpaid bill, internet bill, etc. and all is also continuous supply of service. In case of continuous supply of service, that 5,000 rupees should be seen per annum. That 5,000 rupees is per annum. See there. In case of continuous supply of service, less than or equals to 5,000 rupees for a financial year, then it is exempted. So we have seen services provided by government to business entity, specific exemptions and 2 general exemptions. In other cases it will be taxable. Okay va? And wherever we are discussing government services to business entities, we are not touching 4 services. What are the 4 services? Department of Post, Airport or Port Services, Indian Railways and Transportation. We are not touching that. In that case it is always RCM. Sorry, always FCM. Always it is FCM. Non-applicability of RCM you see. Non-applicability of RCM. In case of renting of immovable property to unregistered person. Next 4. That is Indian Railways, Department of Post, Transportation of goods or passengers, services by airport or port. Okay. And this discussion is equally applicable for services provided by government, not only government but also parliament, state legislature, court or tribunal. But we discussed court or tribunal legal fees is excluded from supply, correct. Court or tribunal legal fees is excluded from supply, but the other activities of court or tribunal like renting of immovable property by court or tribunal, that is not covered under excluded from supply. So for that also the same treatment we need to apply here. That is about SIR, CG, GO. O for overseeing committee services to RBI. There is a overseeing committee. What is that overseeing committee? RBI will appoint a overseeing committee to restructure the non-performing assets. Lot of non-performing assets will be there for the banks, means outstanding loans. In order to restructure that, RBI will appoint a committee. That committee will restructure the loan, for which the committee will get a commission from RBI. That committee will not pay GST, RBI will pay GST. So overseeing committee services to RBI. And we don't have any exemption, non-applicability of RCM, etc. So up to this we discussed. We'll take a small break, then continue with the remaining portion. So what are the list of services we saw? Security lending, import of services, renting of motor vehicles, renting of immovable property, copyright services, GTA services, government service to business entity, overseeing committee services to RBI. Got it? Then this salads point we will see later. Okay. We'll start. Say this. So far what we have seen is the list of services, SIR, CG, GO, and now we are going to see the remaining services under RCM, salads in that yes for sponsorship services. Related to sponsorship services, who is the supplier? The organizer of the event is a supplier and the one who pays the sponsorship money is the recipient. Okay, organizer of the event is a supplier and the person who pays sponsorship money is the recipient. We discussed one exemption for sponsorship services. What is that? If the sponsorship money is collected by a recognized sports body, then it will be exempted. All other sponsorships will be taxable. And we have condition for RCM, that is supplier should be other than body corporate and recipient should be body corporate or firm. There are two conditions for RCM. Supplier other than body corporate, supplier is other than body corporate, supplier is other than body corporate. Second one, recipient should be body corporate or firm. If these two conditions are satisfied, then it will be covered under RCM. Which one? Sponsorship services. So related to sponsorship services, see this flow chart. First, we need to check whether these sponsorship services are taxable or exempted. If it is taxable, the first thing that you need to see is that supplier body corporate or not. Whether supplier is body corporate. Body corporate means who? Body corporate means private limited company, public limited company, or body under any law for the time being in force. They will be called as body corporate. And whether LLP will come under body corporate? No. LLP is treated as firm under GST. LLP is not treated as body corporate. So is supplier body corporate? Yes. If supplier is body corporate, definitely it will be FCM. Because for sponsorship services, how the supplier should be? Supplier should be other than body corporate. So first we need to check whether supplier is body corporate. Yes, then it will be FCM. No, supplier is not body corporate. Supplier is not body corporate. Then check who is the recipient. So whether recipient, supplier is other than body corporate, check whether recipient is body corporate or firm. Whether the recipient is body corporate or firm. Suppose if it is no, supplier is other than body corporate but recipient is not body corporate or firm. So recipient is body corporate or firm? No. Then it will be FCM. Suppose if the recipient is body corporate or firm, then only it will be RCM. So just 2 points we need to check. What is that we need to see? Whether supplier is body corporate. Yes. Then no doubt RCM will not come, FCM will be there. Supplier is other than body corporate, but the recipient should be body corporate or firm. What if recipient is also other than body corporate or firm? Then also it is FCM. If supplier is other than body corporate and recipient is body corporate or firm, then only it will be RCM. This in case of sponsorship services. Then next one, A for agent services. So we completed the discussion related to sponsorship services. Look into agent services. There is an insurance agent. That insurance agent is providing services to insurance company. It is covered under RCM. But for insurance agent, do we have any exemption? Yes. If the insurance agent is a business facilitator or business correspondent working in rural area branch, then it will be exempted. And we don't have any condition for RCM, non-applicability of RCM. Then recovery agent to bank, NBFC or financial institution. There is a recovery agent who is providing service to bank, financial institution or NBFC. Then it will be covered under RCM. We don't have any exemption. Non-applicability of RCM also not there. Then direct selling agent, to whom direct selling agent is providing services, again to a banking company. What is the difference between recovery agent and direct selling agent? Both are providing service to banking company. Basically, recovery agent will try to recover the outstanding loans and direct selling agent will sell the marketing products of the bank. And recovery agent always RCM, no conditions and no exemption. But direct selling agent to bank or NBFC, we don't have any exemption. We don't have any exemption, but we have a condition for RCM. What is that? Direct selling agent should be other than body corporate or firm. If the direct selling agent is body corporate or firm, then it will be FCM. So direct selling agent should be other than body corporate or firm. If they are body corporate or firm, then it will be covered under FCM. Then business facilitator to a banking company. There is a business facilitator who is providing service to a banking company, and that services will be exempted if the business facilitator is working in rural area branch. What if the business facilitator is working in urban area branch? Then it will be taxable. Rural area branch is exempted, no condition for RCM, non-applicability of RCM. Then see the next one, agent of business correspondent to business correspondent. Here also we have an exemption. What is that? If the agent is working in rural area, then it will be exempted. Otherwise it will be taxable, and we don't have any condition for RCM, non-applicability of RCM. Related to this, business facilitator and business correspondent, we will see this discussion, look into this. There is a banking company, and this banking company is having a rural area branch and an urban area branch. So it is having a rural area branch, and it is having an urban area branch, and this particular banking company has appointed one person as a business facilitator. Say Mr. A is appointed as business facilitator of rural area branch. Mr. B is appointed as business facilitator of urban area branch. Now A will be providing services to rural area branch, for which rural area branch will pay commission. What is the treatment of this commission which is earned by A? It will be exempted. Why? Because business facilitator working for rural area branch of a banking company is exempted. Then same way, there is a agent of business facilitator. Mr. X is appointed as agent of Mr. A, and Mr. Y is appointed as agent of Mr. B, and X provides services to A. And that services provided by X to A, and for which A will give the commission. That commission is taxable or exempted? That commission is exempted. So business facilitator to banking company is exempted, and agent of business facilitator to business facilitator is exempted if they are working in rural area branch, whereas B will provide services to urban area branch, for which the urban area branch will give commission. What is the treatment of this commission? This commission will be taxable, and it will be covered under FCM or RCM. Whether business facilitator is covered under RCM, is it given in the list? Yes. Business facilitator services to banking company is covered under RCM. Therefore, it will be taxable under RCM. Then who will pay GST on this? The GST will be payable by banking company under RCM. Then next, Mr. Y provides services to Mr. B. When Y provides services to B, for which B will pay commission. What is the treatment of this commission? This commission will be taxable, and it will be covered under FCM. So who will pay GST on this commission? On this commission, GST will be payable by agent of business facilitator. Okay. So therefore on GST will be commission GST will be payable by agent of business facilitator. Why? Because agent of business facilitator is not there in the list. That's the reason why it is FCM. What we have is only agent of business correspondent, agent of business facilitator not in the list due to that reason. From this chart, what is that we can understand? Agent business facilitator, agent of business facilitator earning commission from rural area branch is exempted, and business facilitator wherever taxable, so they will not pay GST. On their outward supply, who will pay GST? Banking company will pay GST. On their inward supply from the agent, who will pay GST? The agent will pay GST. Is it clear? That is with respect to this. You understood about business facilitator? The same way we will see business correspondent. So there is a business correspondent. That business correspondent will be appointed for same rural area branch, urban area branch, like that. Say this. So instead of business facilitator, now we are taking business correspondent, agent of business correspondent. Agent of business correspondent, same chart. So there is a business correspondent, agent of business correspondent. So who is business facilitator and business correspondent? Both are agents. Basically, business facilitator will do only money remittance activities, but business facilitator will do money remittance. Business correspondent will do all banking operations like account opening, loan processing, check collection, check deposit, like every kind of activity they will be doing. So now what we need to understand here, if Mr. A is appointed as business correspondent of rural area branch for which A received a commission, that commission will be exempted, and X provided services to A for which A received commission, that is also, for which X received commission, that is also exempted. Just like business facilitator, business correspondent, agent of business correspondent earning commission from rural area branch will be exempted. Then Mr. B is appointed as business correspondent of urban area branch for which he gets a commission. Whether that commission is taxable or exempted, that commission will be taxable. It's not exempted, and it will be covered under FCM or RCM. Whether business correspondent to banking company is given under RCM here? No. So therefore it will be FCM. So who will pay GST on this commission? The business correspondent only will pay GST. Same way, agent of business correspondent providing services to business correspondent, Mr. Y provides service to B. As the main agent's commission is taxable, the sub-agent's commission is also taxable, and it will be covered under RCM because that is given. Agent of business correspondent to business correspondent is given, so it will be RCM. Means again, who will pay GST? GST is payable by business correspondent. Means what is it we can understand from this chart? Again, business correspondent, agent of business correspondent working in rural area branch is exempted, and wherever it is taxable on outward supply and inward supply, business correspondent only will pay GST. On their outward supply also they only will pay GST. On their inward supply also they only will pay GST. Exactly opposite business facilitator. On their outward supply and inward supply they will not pay GST. Here on their outward and inward supply they will only pay GST. That's the difference between business facilitator and correspondent. Then next one, legal services by advocate. Already we discussed the exemptions. For advocate services, what are the exemption? Number one, if they provide service to other than business entity, it is exempted. If they provide service to government, so then also it is exempted, government authority, government entity. And if they provide service to a business entity whose turnover during previous year does not exceed threshold limit, is exempted. If they provide service to another advocate or firm of advocate, it is exempted, but that is not applicable in case of senior advocate. So this is not applicable in case of senior advocate. And in other places, advocate service will be taxable and always it will be RCM. We don't have any condition for RCM or non-applicability of RCM. Then arbitrator services. Services provided by an arbitrator to business entity. Again, 3 exemptions we have for arbitrator. What is that? First point same, second point same, and fourth point same. Services to business entity whose turnover during previous year does not exceed threshold limit. These 3 cases it is exempted. Other cases it will be taxable and it will be covered under RCM, and always recipient only will pay. Then look into director services. There is a director of a company or body corporate who is providing services to the company or body corporate for which the company will pay some remuneration. It will be covered under RCM. However, if the director is an employee of the company, when director is an employee of the company, if the TDS is deducted by the company under 192, if the TDS is deducted under 192, then the money which is received by the director will come under income from salaries. Therefore, he is an employee and it is not subject to GST. Got it? Whereas under Income Tax Act, if the TDS is deducted under 194J, then the money which is received by the director will be covered under PGBP or IFOS, and that will be subject to GST also. Is it clear, pa? Why employee is excluded from supply? Because we discussed in that spiral, employee to employer in the course of employment is excluded from supply because of that reason. If a director is employee of a company or body corporate, then it is not a supply. Otherwise, it is covered under supply and it is covered under RCM. Also, one non-applicability of RCM is there, you see. If the director is a person who provides services to company in his personal capacity, then also it is not always covered under RCM. Example, I am director of a company and I received some sitting fees from the company. This is in the capacity of director I will receive. That will be covered under RCM. Now, I have a immovable property which I give on rent to the company. Now, it is not director service, means the director is acting in his private capacity. Then we need to see it as renting of immovable property services. You understood? You should not bring it under director services. You should treat it as renting of immovable property service. Same way, say I have a manpower agency. That manpower agency is providing security personnel to the company. Then it should not be seen as director services. It should be seen as security agency services. That's what. If the director is providing services in his personal or private capacity, that's not covered under RCM. We need to check based on the service. Then next, security agency service. Last point, security agency. Basically, they provide the security personnel to the company. Security agency services to a registered person. So we have exemption pa. What is that exemption? There is a security agency which is providing services to education institution up to 12th standard within the premises. Hope you remember, security services within the premises to category 1 education institution is exempted. In other cases, it is taxable. Wherever it is taxable, it will be covered under RCM provided two conditions are satisfied. For security agency, what are the conditions? Supplier should be other than body corporate. Recipient should be registered but not opting for composition scheme or not registered only for deducting TDS. So tell me, what are the two conditions for security agency? Supplier should be other than body corporate. Recipient should be registered but not opting for composition scheme and not registered only for deducting TDS. If any of these two conditions fails, it will be FCM. So these are the list of services that we have under RCM. We completed it. Okay, 9.3 fully we have completed. Let's see some questions to understand. So kindly look into your practice manual. Liability to pay GST, page number 18. Page number 18. GST is not payable by recipient in the following cases. They are asking not payable by recipient, not payable by recipient. First, services provided by way of sponsorship to ABC Limited by a social club. For social club is other than body corporate. For sponsorship, what are the conditions? Two conditions. You please check the table. You please keep the table in hand. Then only you will not forget. You keep the table in hand. That is sponsorship services. What are the conditions for RCM? Supplier should be other than body corporate. Is social club other than body corporate? Yes. And ABC Limited, recipient. Okay. Recipient is ABC Limited. Is the recipient body corporate? Yes. Therefore, it will be RCM. What are the two conditions for RCM pass? Supplier should be other than body corporate. Recipient should be body corporate or firm. So here it is body corporate. So it will be RCM. Then next. Number 2. Services supplied by a director of Galaxy Limited to Mr. Krishna. See, director of a company to Mr. Krishna, it's not covered under RCM. Director providing service to company is only RCM. So therefore it is not RCM. Therefore it will be FCM. Services by Department of Post. Always Department of Post will be FCM. Please check. Government services you check. Government services you need to check. Pa, you have to put effort, pa. I gave you everything and I am explaining, but you have to check that. The table you have to check. That I can't do. See, how can my Atma go into your Atma and look into the book. That I can't do now. You only should do. Are you getting this? You only should do, you only should search for the information. Like dumb idiots, if you are sitting, you can't do anything with respect to that. You have to put some effort, little bit effort. What effort? You should look into the table. Correct. We are able to recollect. That minimum effort you should put. Okay. So see there. Department of Post, where we discussed government services. In that government services, 5 places, it will always be FCM. What are they? Department of Post, airport or port, transportation of goods or passengers, railways, renting of immobile property to unregistered person. So therefore it is FCM. Why second point is not covered under RCM? Because director to company or body corporate only, but they are providing service to Mr. Krishna, not a company or body corporate. Then fourth one, service supplied by recovery agent to bank. Is it covered under RCM? Yes. Check the agent services. In agent services, do we have recovery agent? Yes. Recovery agent providing services to company or body corporate. So therefore, recovery agent services to bank is covered under RCM. And what if recovery agent services to a dealer? Will it be covered under FCM or RCM? FCM. Recovery agent to bank only RCM. Recovery agent providing services to bank is RCM. Others will be FCM. Only bank is RCM. Now tell me, GST is not payable by recipient. In the following cases like that they asked, where and all it is FCM? 2 and 3 is FCM. So option A is the answer. Next one, number 2. 2 and 3, 1 second. Option C. XX registered in Delhi purchased books from PC traders registered in Uttar Pradesh. Books are exempt from GST. Except notified goods. Correct? Is it notified goods? No. And whether the recipient is individual, HUF, AJP like that given? No. Whether the recipient is government registered only for deducting TDS like that is given? No. Therefore, taxable. And wherever it is taxable, 5% is given. So by default, sponsorship provided to any partnership firm by an association. What is your answer? Sponsorship to any partnership firm by an association. Supplier is other than body corporate and the recipient is body corporate or firm. So therefore it will be RCM. Then sponsorship services provided to any body corporate by a trust. By a trust. Supplier is other than body corporate? Yes. Recipient is body corporate. Therefore it will be RCM. Service of renting of motor vehicle for passengers provided to a recipient other than body corporate. For renting of motor vehicles, what are the 3 conditions? Supplier should be other than body corporate, but the recipient should be body corporate. But here recipient is given as other than body corporate. That's why it will be FCM. So they are asking which does not fall under RCM. Option D is the answer. Clear? Next, in case of GTA services, tax is to be paid under forward charge if GST is payable at the rate of 12%, even 5% also, provided they are not availing ITC, but the point is not given. So that's why it will be 12%. Then question number 1, state the person liable to pay GST in the following independent cases, provided recipient is located in the taxable territory. Services by arbitral tribunal to business entity. What is your answer? FCM or RCM? RCM, very good. Sponsorship service provided by a company to an individual. FCM. Supplier is company. Sponsorship services, if the supplier is body corporate, they will only pay GST. Renting of immobile property services provided by central government to a registered business entity. Central government to renting of immobile property to registered business entity. RCM. When it is FCM, check there. Government services, renting of immobile property to unregistered business entity. First point, can you see? Non-applicability of RCM, government service, first point. Renting of immobile property to unregistered business entity. But here it is registered business entity. So it is RCM only. Got it? Then next, you see question number 3. Question number 3. Whatever questions I have not discussed, you try those questions. Okay. State the person liable to pay GST in the following independent cases, provided recipient is located in the taxable territory. Services supplied by an insurance agent to the insurance company. Where it will come? Insurance agent to insurance company. RCM, good. Recovery agent to car dealer. FCM. Only recovery agent to bank is RCM. Then security services provided by services by way of security of supply of security personnel provided to a registered person. What is it? RCM. Supplier should be other than body corporate. Not given here, so other than body corporate. And the recipient should be registered. So security agency services will come under RCM. So therefore, we need to just comment on that. Why security agency RCM? That's what condition. First condition, supplier other than body corporate. Here we don't have information as to who is supplier. So we take them as other than body corporate. Second condition, recipient should be body corporate or firm. So here recipient is other than body corporate. So recipient should be registered. So recipient should be registered. Yes, recipient is registered. And nowhere it is given that they are opting for composition scheme or they registered only for deducting TDS. Due to that reason, it will be RCM. Next. Look into question number 4. Decide which person is liable to pay GST in the following independent cases where the recipient is located in taxable territory. Mr. Raghu provided sponsorship to Win Cricket Academy and LLP. Supplier is other than body corporate. Recipient should be body corporate or firm because it is sponsorship services. And yes, it is body corporate or firm, therefore it will be RCM. Safe Trans, a goods transport agency, transported goods of Kapil & Co., a partnership firm which is not registered under GST. So who will pay GST? By default, GTS service is RCM. Only if they have opted, it will be FCM. Otherwise, by default, it will be RCM. But sir, recipient is an unregistered partnership firm. We don't have exemption. We have exemption only for unregistered individual, HUF, AJP or trust. Only for 4 people, and that too they are not having factory. But firm is not there in the list. Then question number 5. Mr. Vicky Franklin, an unregistered famous author, received 3 crore as consideration from Shiv Bhavan Publications located in Indore for supply of service by way of temporary transfer of copyright covered under section 13(1)(a) of Copyright Act relating to original literary work of his new book. He finished his book and made available the book to the publisher. Generally, who will pay GST? Publisher. What service it is? Copyright. Copyright of what? Original literary. For copyright of original literary, it will be covered under RCM. So who will pay? Who is the supplier here? Author. Who is the recipient? Publisher. Publisher will pay. But the author is unregistered. So definitely they cannot go for FCM. Am I right? They cannot go for FCM. So by default, who will pay? Publisher only should pay. We have an option now for the author. Author can opt for FCM. If they opt for FCM, for the next 1 year from the date of excising option, they only should pay GST under FCM. But that's not applicable in this case because they are unregistered. Mr. Vicky Franklin is of the view that SBP is liable to pay GST under RCM on service provided by him. SBP does not concur with his view and is not ready to deposit the tax under any circumstances. Examine whether the view of Mr. Vicky Franklin is correct. Yes, because by default it is covered under RCM as per section 9 subsection 3 read with notification 13 of 2017. Further, if the view of Vicky Franklin is correct, what is the recourse available with Vicky Franklin to comply with the requirements of GST law, as SBP has completely refused to deposit the tax? They can register and they can opt to pay GST under FCM. For the next 1 year from the date of excising the option, they only should pay GST under FCM. Is it clear, pa? But first they need to register. Then only they can opt for FCM. Next, question number 6. In the following independent cases, decide who is liable to pay GST if any. You may assume that recipient is located in the taxable territory and ignore the aggregate turnover and exemption available. Veer Transport, a registered GTA paying IGST at the rate of 12%, transported goods by road of Dilip and Company, a sole proprietary firm other than specified person, which is not registered under GST or any other law. 12%. The moment it is given as 12%, who will pay? GTA. So FCM. FCM, GTA only will pay GST. See, when the 5% is given, then only the confusion will be. Either supplier may pay GST or recipient may pay GST. But the moment 12% is given, definitely it will be FCM. Mr. Kamal Jain, an unregistered famous author, received 20 lakh of consideration from PQR Publication Limited for supply of service by way of temporary transfer of copyright covered under 13(1)(a) relating to original literary works of his new book. What is your answer? RCM. Why? By default, it will be RCM for original literary. Moreover, he is unregistered. Definitely, it will be RCM because they cannot opt for FCM na. Next one, pa. Mr. Priyam, a director of Sun Moon Company Private Limited, provided services to the company for remuneration of 1,25,000. Briefly answer whether GST is applicable in the below mentioned independent cases. If yes, who is liable to pay GST? Mr. Priyam is an independent director, definitely not an employee. Independent director is not an employee of the company. So therefore, if Priyam is an independent director, who will pay GST pa? Definitely company will pay. Are director services to company covered under RCM. So it will be covered under RCM. Sun Moon Company will pay GST under RCM. Then second, Mr. Priyam is an executive director, that is an employee of Sun Moon Company Private Limited. Out of the total remuneration amounting to 1,25,000, 60,000 has been declared as salaries in the books of Sun Moon Company Private Limited and subject to TDS under 192 of Income Tax Act, which means on 60,000 there is no GST because that 60,000 is received as salary which is excluded from supply, whereas 65,000 has been declared separately other than salaries in the Sun Moon Company Private Limited and subject to TDS under 194J. Then in that case, on that 65,000 there will be supply chargeable to GST, but again who will pay GST in this case? RCM, only on 65,000. So you need to write that point. What is that? If the remuneration is paid by the director to company and such remuneration is chargeable to TDS under section 192, then the money received by the company will be covered under, the money received by the director will be covered under income from salaries, which is excluded from supply. However, if the company is deducting TDS under 194J, then the money received by director will be covered under supply and it is chargeable to GST under RCM. In the present case, 60,000 rupees is excluded from supply on which TDS is deducted under 192 and 60,000 rupees, 65,000 rupees is subject to TDS under 194J. Therefore, it is treated as supply and chargeable to GST under RCM, where the liability to pay GST is on the company, that is Sun Moon Company Private Limited. You got it? Then next one. You see this, question number 11. Question number 11. Mr. Jayesh, a registered supplier of Mumbai, received the following amounts in respect of various activities undertaken by him during the month of October. Commission received as a recovery agent from NBFC. Tell me who will pay GST in this case? RCM. Is it inward or outward? Inward supplier, outward supplier to Mr. Jayesh. Outward. Commission received means they are supplier. Correct? Commission received means they are supplier. So it is outward supply. Outward supply covered under RCM. You know why you need to find this? Because if it is an inward supply covered under RCM, they need to pay GST. If it is outward supply covered under RCM, the recipient will pay GST. That's why you should identify whether it is inward or outward. So it's outward RCM. Then who will pay GST? The bank only will pay GST. Mr. Jayesh will not pay GST. Then number 2. Actionable claim received from normal business debtors. Not a supply. Why not a supply, pa? Not a supply. Why? Because actionable claim other than specified actionable claim is excluded from supply. Then amount received from ABC Limited for performance of a classical dance in one of the program. Inward or outward? Outward, outward, but, and even second one is also outward, but it is not a supply. Third one is outward, and is it taxable or exempted? Taxable. So taxable, but it will be taxable under FCM or RCM? FCM, because no performance artist, we don't have anything in RCM, correct? Performance artist either taxable or exempted, but we don't have anything in RCM. So exemption chapter will be required even for RCM, FCM. Got it? That's how it is connected. Next, business asset, old computers given to friend free of cost. The market value of the computers was 51,000. No ITC has been availed on such computers when used for business. Again it is outward, but is it supply or not a supply? For consideration or without consideration? Without consideration. Without consideration. And is it D point, disposal of business asset on which ITC availed? No, ITC not availed. That's why it will not come under disposal of business asset. Number 2, will it come under related party? No, because friend will not be treated as related. So DRIP, it will not come. Consequently, it is not a supply. What if it becomes supply? What if it becomes supply? Then 51,000 should be taken as the value. I told you. Wherever 71C comes, if it becomes supply, we need to take the market value. You got it? Next, consideration received for 1 month rent from a registered individual person for renting of residential dwelling for use as residence. Again, it is outward. Whether it is taxable or exempted, pa. Registered individual for residential dwelling for use as residence, which means it is renting of residential property for residential purpose to a registered individual for his family stay. Due to that reason, it will be exempted. So only in one place they need to pay GST, that is 1,74,500, and on that the rate of GST will be, so what is the rate of GST that is given here? Amount not given, so we will be taking, they are asking value, they did not ask GST, they are asking value on which GST payable. So the value will be 1,74,500 on which they pay. Then one more transaction is also there, you see. Details of input services paid to unregistered GTA for various consignments of transportation of goods by road. But as GTA is unregistered, definitely it will be there inward and it is taxable under RCM, correct? Because see, if GTA is registered, then only the confusion will come whether they will opt for FCM or RCM. But GTA is unregistered, so by default who will pay GST? Recipient. So they have received the GTA service, means it is their inward supply on which they will pay GST under RCM, means on 1,74,500 and on 15,500 they will pay GST. So they are asking, you are required to compute the gross value of taxable supply on which GST to be paid by Mr. Jayesh, that is 1,89,600. Understood? Clear here? This is a typical 10 mark question type. In this, if they give GST computation and ITC computation, it will become 10 mark question. They have asked this for 6 marks. If they give ITC computation and if they ask us to compute net GST liability, then automatically it will be a 10 mark question. What you need to do is that you need to segregate properly, inward, outward, FCM or RCM. Then only you will be able to arrive at the answer. And you need to give the explanation as to why it is FCM, RCM, exempted, all those explanations. Then next, look into this question number 12. No, not question number 12. Question number 11. Question number 11. Mohan Enterprise is a registered person having a principal place of business in Gandhinagar, Gujarat. They received service of advocate Samir, a registered person from Ahmedabad, Gujarat, and Shekhar, an unregistered person, provides service of labor to Mohan Enterprises. First, advocate services. What is your answer for advocate services? RCM, correct? advocate services to Mohan Enterprise is covered under RCM. Shekhar, an unregistered person, provides service of labor to Mohan Enterprise. Explain the provision relating to issuance of invoice by recipient Mohan if he is liable to pay tax under RCM. There is one concept of self-invoice. If the transaction is covered under RCM and if the supplier is unregistered, then the recipient has to give the invoice to the supplier. So now in this case they are telling in both the cases they are liable to pay GST under RCM. Okay. Now check first transaction whether the supplier is registered, whether the advocate is registered. Please read the question. Please read the question and tell me whether the supplier is registered. Yes, advocate is registered. Visible? Advocate Samir a registered person. Advocate Samir a registered person. Visible? No. So when the supplier is registered, who will be giving invoice to whom? Supplier only will give invoice to recipient. Second case, that Shekhar is unregistered person. So who will be giving invoice to whom? Recipient. Mohan Enterprises will give invoice to Shekhar. That is called as self-invoice. Is it clear? And what is the time limit within which the self-invoice to be given? Within 30 days from the date of receipt of goods or services. First tell me what is self-invoice. Invoice generally given by whom to whom? Supplier to recipient. But in case of self-invoice, who will give the invoice to whom? Recipient will give the invoice to supplier. In which case self-invoice will be applicable? Supplier is unregistered and the recipient is registered and the supply is covered under RCM. Three conditions. Number one, supplier is unregistered, recipient is registered and the supply is covered under RCM. So in the given case, tax on service from advocate enterprise is payable under RCM. However, Mohan Enterprise is not required to issue invoice to the said supplier as Samir is registered. Further, tax on labor service received from unregistered person, Shekhar is not payable under RCM. Therefore, Mohan Enterprise is not required to issue invoice with respect to the said supply. Okay. Then with this we completed majority of the questions that we have. Remaining questions you try. So now we are moving on to 9.4 and 9.5. Related to 9.4 and 9.5, they have not asked any question in the past. Okay. So therefore, we don't have to bother much about 9.4 and 9.5, but I will discuss this in a quick manner. Just listen to it once, that is sufficient. First, 9.4 when it is applicable, please concentrate. When 9.4 is applicable, there is a promoter or builder who is making purchases from an unregistered person. That promoter or builder is required to pay GST under RCM. So first we need to see whether they are buying capital goods. If yes, if they buy capital goods from a registered person, they will not pay GST under RCM because already they purchased from registered person. When 9.4 will be applicable? 9.4 is applicable only when the purchase is from an unregistered person. If the purchase is from a registered person, 9.4 is not applicable. So purchased from registered person capital goods, 9.4 not applicable, GST not payable under RCM. What if the capital goods are purchased from an unregistered person? Then GST payable under RCM at the applicable rates of capital goods. For example, if the capital good GST rate is 5%, then they need to pay GST RCM 5%. If the applicable rate is 12%, then they need to pay GST under RCM 12%. Is it clear? Next one. Next we need to see cement. Whether cement is purchased from registered person or unregistered person, we need to see. If cement is purchased from registered person, again no need to pay GST under RCM. If they buy from unregistered person, they need to pay GST under RCM at what rate? At 28%. Because the rate of cement is 28%. You have to remember this rate, 28%. Then all other inputs and input services other than cement purchased from an unregistered person divided by total, you see. And if it is up to 20%, no need to pay GST under RCM. You purchase others. What is others? Other than cement, other inputs and input services from an unregistered person divided by total of inputs and input service. How much is the permissible percentage to be purchased from unregistered? 20%. If it is up to 20%, no need to pay GST under RCM. Suppose if it is beyond 20%, means beyond 20%, you are buying from unregistered, say 26% you are buying from unregistered, that 6% extra is there na, you purchase from unregistered, on that you need to pay GST under RCM at 18%. GST payable under RCM on the excess over 20% at 18%. And while taking numerator, balance inputs and input service from unregistered person divided by total inputs and input services, including cement, but excluding few things, TDR, FSI, long-term lease, electricity, petrol, diesel and natural gas. Because on diesel, petrol, natural gas, there is no GST. On electricity also there is no GST. On TDR, FSI, that anyhow GST is under RCM. So that's the reason why we need to take that out. And this computation needs to be made on a yearly basis or up to project completion date, and this shall be computed separately for each project, and they need to pay it at the time of filing annual return. This just in one paragraph they gave in the study material. I don't think so they will be asking a question on this. So far not asked. If asked also, you know whatever we listen now, that much is enough. Based on that you write the answer. Then this illustration is not required pa. So this illustration not required because this is not an important concept and all. Then look into 9.5. When 9.5 is applicable, 9.5 is applicable in case of notified services supplied through e-commerce operator. What are the 4 notified services that we discussed? H, A, T, E. H for housekeeping services. A for accommodation service. T for transportation of passengers by any motor vehicle. E for eating food from a restaurant. Now, in the first 2 cases, how the supplier should be? Unregistered. What if the supplier is registered? 9.5 not applicable and it is FCM. So, if the supplier is registered, in the first 2 cases, non-applicability of 9.5, that is supplier shall pay GST. Is it clear? Then next one, T and E. In case of transportation of passengers and eating food from restaurant, the supplier may or may not be registered. But we have one exception pa. In case of transportation of passengers, please concentrate. If the transportation of passengers is by a company in omnibus. What is omnibus? Capacity more than 6 passengers. Please concentrate. Very, very important point. Capacity more than 6 passengers is omnibus. More than 6 passengers means including driver seat? 7. More than 6 including driver seat, it will become 7. More than 7 means 8-seater vehicle. You understood appa? Sir, greater than 6 pa, greater than 6 passengers. If you add driver seat, greater than 7. What is greater than 7? 8. So 8-seater and above vehicles. What is 8-seater and above vehicles? Like Innova or Xylo or even Scorpio, and above that Tempo Traveler, Maxi Cab, all those will come under omnibus category. Is it clear or not? How, sir? Innova last row 3, middle row 3, first row 2, so 8. Correct? 3 plus 3 6 plus 2 8. Got it? Suppose in the Innova in the middle row there are only 2 seats. Then 7-seater, it is not a omnibus. You understood? So transportation in omnibus. Omnibus means don't think bus. Omnibus is different. So transportation of passengers in omnibus. By whom? By a company will come under FCM. So supplier only will pay GST. If transportation is through omnibus by a company, then it will be covered under FCM. 9.5 is not applicable. Okay, wa? What if omnibus by firm? 9.5 is applicable. You understood? Omnibus by a firm, 9.5 is applicable. Only omnibus by a company, 9.5 is not applicable. Then look into the last point, E, eating food from restaurant. So in that case, what is the non-applicability of RCM? If that restaurant is in a specified premises. What is that specified premises? A 5-star hotel, which is having a tariff more than 7,500 per day. Definitely it is a 4-star or 5-star hotel. Correct, Appa? It's a 4-star or 5-star like Taj Hotel or ITC Grand, like that. Big rich hotels. In that hotel, there will be one restaurant. That restaurant may supply food through Swiggy or Zomato. Now in that case, who will pay GST? Swiggy, Zomato or the restaurant? Restaurant will pay. if the restaurant is in the specified premises, that is in a hotel, having tariff greater than 7,500 per day, it's not covered under 9.5, means supplier only will pay GST. Understood up to this? Then next page you see, wherever e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. There is a concept of TCS. Whenever you are making supplies through e-commerce operator, the e-commerce operator will deduct 0.5% as TCS and remit it to the government against your name. For example, you are a seller, you are selling goods through Amazon or Flipkart. Now, who will pay GST in this case? You only will pay GST. You only will pay GST. Now, what happened here? When you pay GST, you may suppress your transaction. Means you may report lesser turnover. That's the reason why Amazon is required to pay 0.5% as TCS. Suppose if they pay 20,000 as TCS, then we can recalculate how much is the turnover of the supplier. Correct? 20,000 divided by 0.5, you will be getting 0.5%. You will be getting how much is the turnover of the supplier. If that supplier is reporting lesser turnover, a notice will be given to the supplier. Puridappa. The concept of TCS is just to catch the supplier if the supplier is showing a lesser turnover. So, what is the rate at which TCS is applicable? 0.5%. And who is required to pay the TCS? E-commerce operator. But when it is covered under 9.5, who is having liability? E-commerce operator. Should we bother about supplier? No, that's why TCS not applicable. Okay. See, the objective of TCS is to ensure that the supplier is not reporting lesser turnover. When the liability itself is not there on supplier, why TCS will be applicable? TCS will not be applicable. So that's what they are telling. Whenever e-commerce operator is paying GST under 9.5, TCS is applicable or not applicable? Not applicable. When e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. And remember, section 9.5 and section 52 are mutually exclusive, which means wherever 9.5, 52 is TCS, wherever 9.5 is applicable, 52 is not applicable, wherever 52 is applicable, 9.5 is not applicable. Okay, va? Then, so that is wherever TCS is applicable, 9.5 liability will not come. Wherever 9.5 liability comes, TCS is not applicable. Next, second point. Read second point. Only in case of notified services. What are the notified services under 9.5? These four notified service, HATE. E-commerce operator is liable to pay GST. In other cases, what is other cases? Can you give me example of other than notified service through e-commerce operator? Other than notified services through e-commerce operator. We are supplying goods other than notified service. Example, Amazon, Flipkart, selling goods. Then, any other example other than notified services? Service example you give me, Book My Show. In case of Book My Show, who is the supplier? Cinema theatre. And e-commerce operator is Book My Show. Book My Show or district app, that will be e-commerce operator. And the customer who booked the ticket will be recipient. So, only in the case of four notified services, e-commerce operator will pay. All other goods and services through e-commerce operator, who will pay GST? Supplier will pay GST. Then what is the liability on e-commerce operator? They will pay GST on commission and other charges. See there, only in case of notified services, e-commerce operator is liable to pay GST. In other cases, supplier shall pay GST and e-commerce operator shall pay GST on what? On the commission. Then third point. Every e-commerce operator who is liable to pay GST or who is liable to deduct TCS is compulsorily required to get registered. Who is compulsorily required to get registered? E-commerce, two e-commerce operators. One who is liable to pay GST under 9.5. Another who is liable to deduct TCS under 52. These two e-commerce operators mandatorily required to get registered. What is the meaning of compulsory registration? Whatever may be their turnover, they have to register and pay GST. Then also, every supplier of goods through e-commerce operator is compulsorily required to get registered. For example, if I am selling goods through Amazon, Flipkart or Meesho, etc., I should compulsorily get registered because I am selling goods through Amazon. However, if I am making only intra-state supplies, means within the state, I don't have to compulsorily register. I need to register when my aggregate turnover exceeds threshold limit. That's why many times in Flipkart and Meesho, when you give your delivery pin code, they will tell this product cannot be delivered to your location. You know why? Because that supplier who is selling that product is an unregistered person. He cannot make interstate supplies. He can make supplies only within that state. Are you understanding this? That's why. So, every supplier of goods through e-commerce operator is compulsorily required to get registered. However, if such supplier is making only intra-state supply of goods, then they should register as and when aggregate turnover exceed threshold limit. Then, what about supplier of notified service or other than notified services? Supplier of services through e-commerce operator, either notified services or other services through e-commerce operator, no compulsory registration. They are required to register only when aggregate turnover exceed threshold limit. See there, fifth point. Supplier of notified services and other services other than notified services through e-commerce operator is required to get registered only when their aggregate turnover exceed threshold limit for registration. Then next, wherever e-commerce operator is liable to pay GST, first check whether that e-commerce operator is having physical presence in India. If yes, that e-commerce operator will register and pay GST. What if e-commerce operator is neither having physical presence, that is, he is not having physical presence? Then check whether the e-commerce operator is having a representative in India. First case, you take example Ola. Ola is having physical presence in India, so they will register and pay GST. Uber is outside India, they don't have physical presence, but do they have a representative in India? Yes, that representative will register and pay GST. Suppose you take Urban Company. Urban Company is a Dubai based entity, so they neither have physical presence nor they have a representative. So what should they do? They should appoint a representative in India for the purpose of payment of GST. They shall appoint. Who shall appoint? The e-commerce operator shall appoint. Please see that paragraph. If e-commerce operator is having physical presence in India, they shall register and pay GST. If not, if they don't have the physical presence, then their representative in India shall register and pay GST. In the absence, they shall appoint a representative and that representative shall register and pay GST. You got it? Then look into circular on restaurant services through e-commerce operator. Whenever restaurant service is supplied through e-commerce operator, so these key points are given in the circular that we will try to understand. Number one, rate of GST applicable on restaurant is what? 5% without ITC, which means restaurant, when it pays GST, can they take ITC on their inward supplies? No, they cannot take ITC on inward supplies. So that is the second point. Read the first point, pa. Rate of GST applicable on restaurant service is 5% without ITC, which means when restaurant is paying GST on their outward supply, sale of food, they cannot take ITC on their inward supplies. What are the inward supplies of restaurant? They will buy the ingredients required for making the food now. Dal, chili powder, salt, then rice, all these things. Whatever they buy, on that they cannot take ITC. Even renting of immobile property, purchase of equipments for cooking, on all those things they cannot take ITC. Third point. But e-commerce operator, when he pay GST on restaurant service, when e-commerce operator will pay GST on restaurant service, if the restaurant is supplying food through Swiggy, who will pay GST? Swiggy will pay GST. At what rate Swiggy will pay GST? 5%, same rate, 5%. But can Swiggy take ITC on their inward supplies? Yes. What are the inward supplies of Swiggy? App maintenance charges, storage. In the cloud they have to store, cloud storage charges, app development charges, marketing charges, and they will provide t-shirts and all to the drivers, then that they will buy, all those are inward supplies of Swiggy. Can they take ITC? Yes. See that fourth point, pa. GST payable by e-commerce operator, e-commerce operator, third point, e-commerce operator can avail ITC on inward supply even though they pay GST on restaurant service at 5%. Then very important point, that always e-commerce operator who pay GST under 9.5 will pay using which ledger? Cash ledger. They cannot use credit ledger for payment of GST under 9.5. 9.5 liability should always be paid through cash ledger. Say this, GST payable by e-commerce operator at the rate of 5% only using electronic cash ledger but not electronic credit ledger. And you write down below, it is not only for restaurant services but for all services. All services, that is GST payable under section 9.5, GST payable under section 9.5 is always through which ledger? Electronic cash ledger. Already we discussed one point. What is that? In case of RCM liability, it should be paid using electronic cash ledger, correct? Then this is 9.5. So RCM liability also should be paid using electronic cash ledger. 9.5 liability also should be paid using electronic cash ledger. GST payable is always through electronic cash ledger, and electronic credit ledger cannot be utilized. What is electronic credit ledger means? Electronic credit ledger means input tax credit. Cash ledger means by cash. So it should be by cash. Electronic credit ledger means input tax credit, and electronic credit ledger cannot be utilized. GST payable under 9.5 always through electronic cash ledger, and electronic credit ledger cannot be utilized. Is it only for restaurant service or all services? All services. All services, that HATE, all services. Housekeeping service, accommodation service, transportation of passengers, and eating food in restaurant. In all cases it is common. Clear? Then next, GST payable by e-commerce operator at 5% only using cash ledger but not electronic credit ledger. E-commerce operator shall also pay GST on delivery charges, platform fee and advertisement charges at 18%. So generally Swiggy will collect platform fee, and because of this rains, they are collecting a rain fee, you know that? They are collecting a rain fee, like that they are collecting. So all these are extra charges collected by Swiggy. On that, what is the rate of GST? 18%. For that 18%, can Swiggy use ITC? Yes. See that. E-commerce operator shall also pay GST on delivery charges, platform fee and advertisement charges at 18%, and they can utilize the ITC avail for payment of this GST liability. But only for 9.5 liability they cannot use ITC, but for other liabilities they can use ITC. And e-commerce operator if supply goods along with restaurant services. Example, Swiggy will make two supplies. One is food, another is Instamart, correct? In case of food, and that too they will put it separately. When you open the app, Swiggy app, for food it is separate, for Instamart it is separate. Separate window, completely it is separate. So why they do like that? Because in case of food, they will pay GST. In case of Instamart, they will not pay GST. The seller will pay GST. They will pay GST only on the commission and delivery charges. Is it clear? So e-commerce operator if supplies goods along with restaurant service through their platform, they shall issue separate invoices. Is it clear? So with this we completed liability to pay GST, and we are now moving on to input tax credit, a very important area. Have a look into that. Input tax credit, segment 8, page number 93. Page number 93. Input tax credit. I told you that 4 chapters are core very important, exemptions, RCM, input tax credit, value of supply. Okay, so in that 2 topics we completed. So now we are going to complete the remaining 2, input tax credit and value of supply. Value of supply is actually small topic only, but very important. So look into input tax credit. What is input tax credit? Already I told you in the first introduction itself that input tax credit is tax paid on inward supplies. There is a registered person. That registered person is having some inward supplies and he is making some outward supplies. On that inward supplies, he will pay price plus GST. Say for example, 1 lakh plus 12,000 is the price on inward supplies. So this 12,000 rupees will be called as input tax credit. What is the journal entry for this 12,000? Purchase account debit 1 lakh, ITC account debit 12,000, to supplier account 1 lakh 12,000. Then again, when the registered person is making the outward supplies, he will be receiving the price plus GST from the customer, and the price plus GST is 1 lakh 50 plus 18,000 rupees. Then this 18,000 rupees will be called as output tax or gross liability, and this 18,000 rupees is their liability, so which can be paid using this input tax credit. So input tax credit can be used as set off for payment of GST. So the net liability will be how much in this case? 6,000. How? 18,000 minus 12,000, 6,000 will be taken. So what is the entry for this? Recipient account debit 1 lakh 68,000, to sales account 1 lakh 50, to GST payable account 18,000. Is it clear? So recipient account debit 1 lakh 68, to sales account 1 lakh 50, to GST payable 18,000 rupees. And what is the payment entry pa? GST payable shows a liability credit balance. Now we are making a debit, GST payable account debit. To ITC account we are knocking off, that is set off. So remaining 6,000 you will pay. This is what already I discussed with you. Now here this 12,000 rupees first you will avail as ITC. So what is the meaning of availment of ITC? Taking ITC. Where we will take ITC? In electronic credit ledger we will take ITC. How we will take ITC in electronic credit ledger? Through GSTR 3B. Same way, utilization of ITC. Utilization means what? This 12,000 we are setting off with 18,000 na. That is utilization of ITC. That is set off with liability. Again, where we do set off with liability? Through GSTR 3B. Then reversal of ITC. What is reversal of ITC? When we avail the ITC wrongly, means you have taken excess or wrongly you have taken. Now you need to reduce it. How to reduce it? Reverse. You need to reverse it. Where we will reverse? Again in GSTR 3B, we will do reversal of ITC. Reversal of ITC means reducing ITC avail, and where we will do? In GSTR 3B. Remember, availment of ITC, utilization of ITC and reversal of ITC. All these 3 things will happen in which return? GSTR 3B return. And what is input tax credit? Basically, GST paid on inward supplies that can be availed as ITC and utilized for payment of GST on outward supplies. And therefore, net GST payable will be how much? Gross GST minus ITC. That is the net GST payable. Is it clear, pa? Now, look into this. There are 3 ledgers which will be maintained by GST network on behalf of every registered person. What are the 3 ledgers? Electronic liability ledger. It is ELL. Electronic liability ledger ELL. ELL. That is ELL. Electronic liability ledger ELL. And what does electronic liability ledger contains? It contains your GST liability. Your GST liability will be there in electronic liability ledger. And what will be there in electronic credit ledger? In electronic credit ledger, there will be ITC availed. Okay. Electronic liability ledger, gross GST payable. Electronic credit ledger, there will be ITC availed. ITC information will be there in electronic credit ledger. Electronic cash ledger. What does electronic cash ledger contains? Whatever is the GST that is deposited will be there in the electronic cash ledger. Is it clear, pa? So, listen, there are 3 ledgers. Who will maintain these 3 ledgers? Maintained by GST network on behalf of every registered person. Liability ledger will contain what? Liability, how much ever liability you need to pay. Credit ledger will contain what? How much ever ITs you avail. And cash ledger, whatever deposited. So in this example, as soon as you have got a liability, 18,000, that 18,000 will go to liability ledger. And whenever you take ITC, that ITC will go into credit ledger. And whenever you need to pay 6,000, that you will deposit into the cash ledger. So the liability ledger we pay using credit ledger and cash ledger. Understood pa? Clear? And next, availment of ITC in GSTR 3B. How to avail ITC in GSTR 3B? Please concentrate. Whenever you want to avail ITC in 3B, there is one rule 36 sub rule 4, section 41 read with rule 36 sub rule 4, which says that only matched ITC can be availed. What is matched ITC? GST you have, that is you are the recipient, I am the supplier. Now I will be raising invoice to you. I will file GSTR 1. What is the return path that I will file? GSTR 1. Who am? Who are you? I am supplier, your recipient. Supplier, recipient. What supplier will do? He will file a return. What is that return? GSTR 1. In that return, what he will mention? What supplier will mention? Outward supply details. That invoice will be mentioned in GSTR 1 against your name. Against your name. Automatically, the portal will make this data available to you in GSTR 2B. You are recipient. So, supplier will add the invoice in GSTR 1 and it is filed. Step number 1 you understood. Based on the GSTR 1 of the supplier, the data will be auto-populated in GSTR 2B of the recipient. What is it called as? Matched ITC. Whatever ITC that came in your 2B, that much only can be availed. Remaining you cannot avail, and that you will avail in GSTR 3B. Now tell me, why will there be difference between ITC as per your books versus ITC as per your 2B? Your supplier did not file GSTR 1. Super. Your supplier filed GSTR 1 but not added the invoice. Okay, wow. Your supplier filed GSTR 1 but reported incorrect details in invoice, or your supplier filed GSTR 1 late. In all these cases, the data will not be reflected in 2B. Correct, apa? But you have invoice, so you cannot take ITC on that. See the possible reasons for difference. GSTR 1 not filed. Who did not file? Supplier did not file. And GSTR 1 filed but invoice not reported. Or GSTR 1 filed but reported incorrect details. In all these three cases, what will happen? ITC as per books based on invoices versus auto-populated in 2B, there will be a difference. But ultimately, which should be taken? ITC as per books based on invoices, matched ITC, only matched ITC should be taken. So, you need to check this in the question. In the question, in exam, you see whether all those invoices are reflected in 2B. If not, you need to write that as an assumption, common assumption, that assuming that all these purchase invoices are reflected in GSTR 2B, ITC is availed. Like that we need to write. Is it clear? Suppose if they mention out of the invoices for 1 lakh, 10,000 rupees related invoices is not reflected in 2B, means how much you will take ITC? Only 90,000. Only 90,000 you will take. Then once it is auto-populated in GSTR 2B, then you will take ITC in your 3B. What is that 3B ITC? Self-assessed ITC. To that self-assessed ITC, you will make 6 adjustments, 3 minus and 3 plus. What are the 3 minus? Number 1, blocked ITC. This blocked ITC will be reflected in 2B, but you should not take. Okay, why? Because it's a ineligible ITC for you. It may come in 2B because the portal don't know whether it is a blocked ITC or not for you. So they will make the data available to you, but you should not take. Number 2, inward supply used for non-business purpose, that also should not be taken. For example, I am buying washing machine for my home, and when I purchase washing machine for my home, I will give my GSTIN. So therefore, supplier will raise the invoice to me. It will come in my 2B, but is it used for business purpose? No, it is used for personal purpose. Non-business purpose means I should not take ITC. Even though it is reflected in 2B, I should not take. What is the first one I should exclude? Blocked ITC. What is the second one that I need to exclude? Non-business purpose. What is the third I need to exclude? If inward supply is used for exempted outward supply. Because if you remember last class I told you, when my outward supply is exempted, I cannot take ITC on my inward supply, correct or not? So that also should be taken out. See there, 3 minus. What are the 3 minus? Blocked ITC, non-business purpose, exempted outward supply. Then 3 plus. What are the 3 plus? Whatever GST you paid under RCM, it may not be reflected in 2B because your supplier is not paying. You are only going to pay GST under RCM. It may not be there in 2B. Still you can take ITC. So you need to add. What if it is already there in 2B? Don't add. If it is not there in 2B only, you need to add. If it is already there in 2B, don't add. Okay. GST paid under RCM. Number 2, pertaining to earlier tax period. For example, right now you are in December month. January month, you have purchased some goods and for which it came in 2B of January. But you did not take ITC at that time. Why? You had a doubt whether you can take ITC or not. Now December, you came to know that you can take the ITC. Can you take ITC in December? Yes. Yes, we have a time limit for availment of ITC. What is the time limit for availment of ITC? Next year, 30th November. For this financial year, next year, 30th November, we have the time limit for availment of ITC. So in this case, assume April invoice, April 2025. April 2025-26, you can take till November 2026. So in this case, it came in April month and you did not take ITC in April. Now you are in December month. Can you take ITC? Yes. Even though it is not reflected in December month, still you can take ITC because it was reflected in April month. It was reflected in April month. So you can still take the ITC with respect to that. That is this tax pertaining to earlier tax periods. Then re-availment of ITC reversed earlier. First you avail the ITC. Then because of some reasons you reverse the ITC. Then again can you re-avail the ITC? Yes, you can re-avail the ITC. First you avail the ITC, then reverse the ITC, and again you can re-avail the ITC. But when you re-avail, it may not be there in this month to be, even then you can take ITC. So what are the 3 cases? Even though not reflected in 2B, still we can take ITC. Come on. So GST paid under RCM, pertaining to earlier tax periods not availed during that period, and re-availment of ITC reversed earlier. In these 3 cases, we can take the ITC in GSTR 3B even though not reflected in 2B. So tell me what is self-assessed ITC? First, matched ITC. You need to take matched ITC. 3 minus. What are the 3 minus? Blocked ITC, non-business purpose, exempted. Take out. Then 3 plus. GST paid under RCM, pertaining to earlier tax period, re-availment of ITC. This is the self-assessed ITC you can avail in 3B. If you take any ITC in 3B beyond this, there is one rule called as Rule 88D that will come into picture. Say this. When ITC in 2B is less than ITC in books, only ITC as per 2B is relevant for availment of ITC. Correct, Appa? ITC in 2B is less than ITC as per books. How much ITC can be taken? Only as per 2B, not as per books. Only ITC as per 2B is relevant for availment. Now, what will happen? As and when supplier filed GSTR1, first the supplier did not file, that's why it did not come in your 2B. In future, when supplier filed GSTR1, it will be reflected in 2B in future. Yes. At that time, can we take? Yes. So, as and when supplier filed GSTR1 or rectifies GSTR1, ITC shall be reflected in 2B and that can be availed in GSTR 3B. Got it? In future. For example, April month, he filed a return late in somewhere like June month. Then, for you, it will come in June month 2B. So, you can take the ITC in June month 3B. Puridappa. Then next, if ITC you avail in 3B is more than 2B, you are taking the ITC in 3B more than 2B, what will happen? A system generated notice shall be given under Rule 88D, and accordingly the reply needs to be furnished. You will get a notice, and that notice will be given in Rule 88D. You need to reply to the notice, otherwise again they will give a notice and pass an order, until that time your returns will be blocked and your registration is suspended, etc. This Rule 88D related information is in returns chapter. You give the page number reference, refer page number, where is it, pa? Next page only it is given, huh? Page number 98. You can see that in page number 98, Rule 88D. Rule 88D. So it is not in returns chapter, I have kept it in this chapter itself. Rule 88D you see, Rule 88D. When Rule 88D is applicable, please see Rule 88D. What is the trigger point for Rule 88D? If you are availing ITC in GSTR 3B more than GSTR 2B, correct? Difference in ITC claimed, that is credit availed in 3B exceeds the credit as per 2B. Then you will get a notice. What is that notice? Form GST DRC 1C. So it is 88D na, 88D, one alphabet before, that is 88D, this is Rule 88D, this is DRC 1C, DRC 1C, and you have to upload it like this. This notice will be given to you in the portal, and it will also be sent in the email. Within 7 days, you need to give a reply to that in part B of that form. What is that reply? Either you accept and pay the difference, either you pay the difference, whatever extra it is you avail, you pay that, or you explain the reason for difference. There could be some genuine reasons na. What is that? GST paid under RCM, re-availment of ITC reversed earlier, or ITC pertaining to earlier tax period you are taking. Genuine cases you give reply, or partly pay and partly give the reply. Within 7 days, if you are not doing any of these three, then a notice will be given, and thereafter till the time you are making the payment, first intimation, then notice, and if you are not making payment till the time you are making the payment, so these 4 consequences will arise. What are the 4 consequences? You are not allowed to file returns in GSTR1, means your GSTR1 will be blocked. If you are not able to file GSTR1, you cannot file GSTR3B, okay va? If you are unable to file GSTR1, you cannot file GSTR3B. If you are unable to file GSTR1 and GSTR3B for consecutive 2 tax periods, your e-way bill will be blocked. See the third point. If 1 cannot be filed, 3B also cannot be filed. If 1 and 3B cannot be filed, then e-way bill facility gets blocked, and it will also lead to suspension of registration. Okay, Vapa? 4 consequences. What are the 4 consequences? GSTR1 will be blocked, GSTR3B will be blocked, and if continuously 2 periods, if you are not filing returns, e-way bill will be blocked, and this will also lead to suspension of registration. This is 88D. So whenever you are availing ITC in your GSTR3B more than the ITC as per 2B, then this Rule 88D will come into picture. Then look into the next page. So there are various returns. GSTR1, what does GSTR1 contains? The details of outward supplies. All the details of outward supplies will be there in GSTR1. And what does 2A contains? 2A contains the inward supply details. Both 2A and 2B contains the inward supply details. But the difference between 2A and 2B is that 2A is a dynamic document, which means whenever supplier adds the invoice, whether he files GSTR1 or not, it will be reflected in 2A, it will be reflected in 2A. But only when the supplier files the GSTR1, it will be reflected in 2B. But for availment of ITC, whether 2A is a relevant document or 2B is a relevant document, 2B, then 2A is for what? Only for reference. This is just for reference purpose to check whether supplier is adding the invoice properly or not. But for availment of ITC, it will be 2B. So please look into the table below, GSTR 2A versus GSTR 2B. So the type of document, 2A is a dynamic document, but 2B is static document. TDS TCS, that is our recipient or e-commerce operator will deduct TDS TCS na. Will that data be reflected in our GSTR 2A? Yes, but it will not be reflected in 2B. And details of invoice if GSTR1 filed after due date. Suppose if the supplier filed GSTR1 after due date, then will it be reflected in 2A? Yes, it will be reflected in 2A, but it will not be reflected in 2B. However, it is reflected in subsequent month 2B. That's what I told you. April month return, if he filed by the due date of April, then it will be coming in April month 2B only. April month return, if he files in June, it will come in June month 2B only for us. Then what is the purpose of 2A? Just reference document, but 2B is for availment of ITC. And that is about 2A and 2B. What about 3B? 3B is a consolidated statement that contains liability, ITC, everything will be there in GSTR 3B. So these are the basic returns which will be filed by the registered persons. Now see this, supplier will report the details in GSTR 1 or IFF. What is IFF? Invoice furnishing facility. To whom that IFF is applicable? For a person who is opting for QRMP, quarterly return monthly payment, then they will file IFF details. When we discuss QRMP, we will see there. So supplier will file the details of outward supplies in GSTR 1 or IFF, and that is filed by due date, then it will be reflected in GSTR 2B matched ITC. And these three cases, even though not reflected, even though reflected in 2B but ineligible, so we should reduce these three. And next three, even though not reflected in 2B but ineligible, and we need to add. Just now we discussed that. Now say this, there is one more rule, rule 37A. What are the two rules that we have discussed so far? Rule 36 sub rule 4. You have to remember this rule pa. What is section 41 read with rule 36 sub rule 4? Section 41 is availment of ITC. Okay, wah. See, listen. Section 41. We are still in section 41 only. Section 41 is what? Availment of ITC. In that section 41, what is the first rule that we discussed? Below section 41, rule 36 sub rule 4. What does rule 36 sub rule 4 says? Only matched ITC can be availed. Okay, wah. Only matched ITC can be availed. Then one more rule we discussed, that is rule 88D. Rule 88D. What does it says? If you avail ITC in 3B more than 2B, you will get an intimation and consequences. Okay. Then third rule, rule 37A. Rule 37A. Please concentrate pa. Section 41 heading is availment of ITC. Under that availment of ITC heading, we have total 4 rules. Rule 36 sub rule 4, rule 88D, rule 88C, and rule 37A. In the 2 rules we completed. What are the 2 rules we completed? Rule 36 sub rule 4. In short, what does it says? Only matched ITC can be availed. And next one we saw is rule 88D. That is, if you avail ITC in 3B more than 2B, one intimation will come within 7 days. You need to reply, etc. and all. Then we are discussing now rule 37A. What does it says? Please concentrate. Your supplier reports the invoice in GSTR 1 and it is filed within the due date. Your supplier files the GSTR 1 within the due date. Based on your supplier's GSTR 1, for you the data will be given in 2B, correct? Supplier will report the details in GSTR 1, and based on the supplier's GSTR 1, the data will be reflected in recipient's GSTR 2B. And based on 2B, the step number 3, recipient will avail the ITC in GSTR 3B. Understood up to this? Supplier will add the details in GSTR 1. Based on that, the data is reflected in 2B of the recipient. Based on 2B of the recipient, the ITC will be availed in 3B of the recipient. Now, your supplier did not file 3B. Means what? He did not pay tax. Remember, at the time of filing 1, no need to pay tax. At the time of filing 3B, only tax is payable. Means your supplier filed 1, but he is not yet filed 3B. Means he did not pay tax. Now, so much of the ITC that you have availed, you need to reverse. By when the supplier should file 3B? By when the supplier should file? Here. Maximum by when he should file? 30th September of next financial year. September 30th of next financial year. Who? Your supplier. Your supplier should file GSTR 3B by 30th September of succeeding financial year. If your supplier files it by 30th September of succeeding financial year, no problem for you. If your supplier not filed 3B by September 30th of next financial year, so much of the ITC that you have availed needs to be reversed along with interest. But by what time you need to reverse? By 30th November. Means what is the period you have? 2 months. Your supplier did not file GSTR 3B by 30th September. Then as a recipient, what you should do? You should reverse the ITC by 30th November. Means October and November, only 2 months you have. If you are not reversing by 30th November, then you will have interest. See this. Reversal of ITC after September 30th of next financial year, but before November 30th of next financial year. If not reversed by November 30th of next financial year, interest at the rate of 18% shall be payable from when to when? From the date of utilization till the date of reversal or payment. Is it clear, pa? What is the date of utilization, reversal? We will discuss. But this concept you understood. We will discuss about interest computation. Except interest computation, you understood everything. So tell me, what are the steps involved? Step number 1, supplier filed GSTR 1 by due date. Step number 2, reflected in GSTR 2B of the recipient. Step number 3, ITC availed in GSTR 3B by the recipient. Step number 4, supplier did not file GSTR 3B by succeeding financial year, that is September 30th of succeeding financial year. Then step number 5, as a recipient, what you should do? You should reverse the ITC by 30th November, otherwise interest will arise. Okay, by 30th November you should reverse, otherwise interest will arise. Now, you have reversed. Again, your supplier filed GSTR 3B late. Your supplier filed, but he filed late. Can you re-avail the ITC? Yes, you can re-avail the ITC. Any time limit? No time limit. Suppose if you pay interest, that is gone. That interest is gone. But if you reverse it by 30th November, that interest is also not there. Correct? If you reverse it by 30th November, that interest is not there. Again, whenever supplier file GSTR 3B, you can re-avail the ITC without any time limit. See there. GSTR 3B filed after September 30th, ITC reversed earlier can be re-availed without any time limit. Understood? And here, if not reversed by November 30th of next financial year, interest at the 18% shall be payable from the date of utilization till the actual date of reversal or payment. Now we are trying to understand what is that interest computation, how to compute the interest. Please listen. First we need to see the month in which this ITC is availed, and thereafter every month you see what is the balance in ITC. Whichever month the balance in ITC falls below the availed ITC, to that extent you have utilized the ITC. It's not LIFO, FIFO, simple average, weighted average, because we don't know which ITC we are going to utilize first. So simple. First you availed ITC. Every month you see the balance in ITC. Whichever month the balance in ITC falls below the availed ITC, in that month we have utilized the ITC. Say this. Step 1. Month in which balance in ITC falls below availed ITC, you check. For that month, whatever is the due date of 3B or actual date of 3B, whichever is earlier, will be taken as the date of utilization. For example, ITC wrongly availed with respect to an invoice issued by the supplier, for which supplier not filed 3B, is 12,000. So what is the wrongly availed ITC, pa? 12,000. Why is it called as wrongly availed ITC? Because your supplier did not file GSTR 3B. So therefore 12,000 rupees is the wrongly availed ITC. Now what we are finding? The date of utilization. What is the date of invoice of this 12,000? May 2024. Now starting from May 2024, you see every month what is the closing balance of ITC. See the next page. May 2024, opening balance is 40,000, ITC availed is 32,000, ITC utilized is 50. So in this 32, this above 12,000 is also there, and ITC utilized 50. What is the closing balance? 22,000. What is the ITC availed wrongly? Please respond, pa. What is the ITC availed wrongly? 12,000. What is the closing balance in ITC for May? 22,000. Whether the balance falls below 12,000? No. Which means we have not utilized the ITC for May month. Then again June month you see. What is the closing balance of June month? Closing balance of June month. Visible for your eyes. What is the closing balance of June month? 10,000. Means what is the wrongly availed ITC? 12,000. What is the closing balance? 12,000. 10,000. So how much you have utilized? 2,000. You understood? First 12,000 ITC availed. First month full balance is there. 22,000. You have not utilized. Next month what is the balance? 10,000. Means ITC has been utilized by 2,000. Then again third month you see. What is the balance in ITC? 20,000. It increased means reversed. No. Increased does not mean reversed. Decreased means utilized. Increased does not mean reversed. Okay. Actually you need to reverse it. And again fourth month you see. Fourth month that is August month. What is the closing balance? 4,000. Means how much you would have utilized? 6,000. How 6,000 you have utilized? Pa, first 12 pa. It came down to 10 pa. Then 2,000 utilized. Then again from 10 it came down to 4. Means how much utilized? 6,000 is said to be utilized. Got it? Now on that 2,000 and 6,000 you need to pay interest. So 2,000 utilized in June 2024. 6,000 utilized in August 2024. Accordingly for June and August, see what is the due date of 3B or actual date of 3B, whichever is earlier, that will be taken as the date of utilization. From the date of utilization till the actual date of reversal or payment, you need to compute interest at the rate of 18%. Now you understood what is the meaning of date of utilization? Tell me what is the date of utilization? First you need to find the month in which ITC wrongly availed, balance falls below that ITC wrongly availed. Correct? First you need to see the month in which balance in ITC falls below wrongly availed ITC. For that month, to that extent, you see what is the actual date of 3B or due date of 3B, whichever is earlier, that will be taken as the date of utilization. Okay? Then, now here, how to escape from rule 37A? How to escape from rule 37A? What your supplier is doing, if he is not filing 3B only, you will have problem. Enappa? If your supplier not filing 3B only, you will have problem. Correct? Your supplier filed 3B. But the liability in 3B is less than GSTR1. In GSTR1, he showed 10 lakhs as liability. But in GSTR 3B, he paid only 10,000 rupees. 9,90,000 rupees he did not pay. But as per rule, he filed GSTR 3B. Are you required to do any reversal? No, this rule is not applicable. This rule is applicable only if supplier not filed GSTR 3B. He filed, that idiot filed. But what he did, he reported lesser liability. So for you as a recipient, this rule is not applicable. So you escaped. Now supplier will be caught. If he is reporting lesser liability and paying, then he will get a notice under 88C. See that. If the liability in GSTR1 is greater than liability in 3B. In our example, how much liability is reported by supplier? 10 lakhs. Liability reported by supplier in GSTR1, 10 lakhs. How much he paid in 3B? 10,000. So 9,90,000 rupees excess. Am I right? Now supplier filed 1 and 3B. but liability in 1 greater than liability in 3B. Now recipient not required to reverse ITC as per 3A. Why? Why recipient not required to reverse ITC as per 3A? Because supplier filed 3B. Now a system generated notice will be given to supplier in form DRC1B. This is rule 88C pa. Before alphabet is what? B. B. Before alphabet is B. So DRC1B, one notice will be given. And within 7 days from the date of that notice, either he need to pay the difference along with interest or explain the reason for difference. What if he is not doing anything? He neither paid nor he gave reason for difference, or the reason he gave is not satisfactory to the department, then department will recover such difference along with interest and penalty. Either not replied or officer not satisfied with reply, direct recovery along with interest and penalty. Now you see in the next page rule 88C. What is the trigger point for rule 88C pa? Liability in 1 greater than liability in GSTR 3B. So department will give an intimation in DRC 1B. Within 7 days what you should do? Either pay the difference or explain the reason for difference, or partly payment, partly explain the reason for difference. What will happen if he is not doing anything? Direct recovery, no further notice and all. Direct recovery, recovery of tax and liability posted in liability ledger. Till the time he is paying, what will happen? Same. GSTR 1 will be blocked. GSTR 3B will be blocked. Continuously for 2 periods, if he is not filing 1 and 3B, e-waybill will be blocked, and also this will lead to suspension of registration. Okay. So these are the points. So what we have discussed so far is one section. In input tax credit, we have total 5 sections pa. First section, availment of ITC 41, that we completed. Second, utilization of ITC, that is 49, subsection 5. Then condition for availment of ITC 16. Apportionment of credit and blocked credit 17. And number 18, that is input tax credit in special cases. These are the 5 sections. In that one section we completed, section 41, a very important section, that is availment of ITC. Under that availment of ITC, we discussed 4 rules. What are the 4 rules? Rule 36 sub rule 4, that is only matched ITC can be availed. Then next we have seen rule 88D, you cannot avail ITC in 3B more than 2B. Then next 37A, supplier not filed GSTR 3B by September of the succeeding financial year. Then 88C, if supplier filed 1 and 3B but liability in 1 is more than 3B. Okay. So we'll take a break and then we will continue with the remaining portion. And wait for 1 minute. Okay, we'll start. So before break, we completed up to section 41, that is availment of ITC. Now we will see utilization of ITC, section 49, subsection 5. Kindly look into page number 98. In this manner of utilization of ITC, we are going to discuss 4 principles. The first principle says that there is no restriction with respect to IGST, which means that we have CGST credit and we have SGST credit and we have UTGST credit and we have IGST credit and also compensation cess credit. We have all the 5 credits, and payable CGST payable, liability CGST, SGST payable, UTGST payable, IGST payable and compensation cess payable. Now, can we utilize CGST credit for payment of CGST? Yes. But CGST credit cannot be utilized for payment of SGST or UTGST. But CGST can be utilized for payment of IGST. And for cess we cannot utilize. SGST credit we cannot utilize for payment of CGST, but can be utilized for payment of SGST, cannot be utilized for payment of UTGST, can be utilized for payment of IGST, not for compensation cess. UTGST cannot be utilized for payment of CGST, SGST, can be utilized for payment of UTGST and IGST, but cannot be utilized for payment of cess. IGST credit cannot be utilized or can be utilized. Can be utilized for payment of all other than GST compensation cess, and the cess credit can be utilized only for payment of compensation cess. So from this, what is it we can understand? There is no restriction with respect to IGST. That is, IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. But with respect to other, that is CGST can be utilized only for payment of CGST, SGST for SGST, UTGST for UTGST, and even cess credit can be utilized only for payment of compensation cess credit. So this is the first principle that you need to keep in mind. There is no restriction with respect to IGST, which means IGST credit can be utilized for payment of any liability, and any credit can be utilized for payment of IGST except compensation cess. But CGST, SGST, UTGST, respective credits for payment of respective liability. You remember like this. So, Mr. A is IGST. Mrs. A is CGST. And parents of Mr. A is SGST or UTGST. A will adjust with his wife and his wife will adjust with him. Same way, his parents will adjust with him, he will adjust with his parents. But his parents will not adjust with his wife will not adjust with his parents. Okay, wah. Okay. So, IGST credit can be utilized for payment of IGST can be adjusted CGST, CGST can be adjusted IGST. IGST can be adjusted against SGST, SGST UTGST can be adjusted against IGST. But SGST UTGST cannot be adjusted against CGST, CGST cannot be adjusted against SGST UTGST. Clear pa? Then next, second principle. That's the first principle here. There is no restriction with respect to IGST amongst other credits. Respective credit can be used for payment of respective liability. Second principle talks about the order of utilization. First, IGST credit used for what purpose? You are Mr. A. You have money. You will use it for what purpose? Yourself. Correct? First for you. Next, wife or parents? Both. Any manner, any proportion. You understood? So there is no priority there. Depends. Case to case basis. Depending upon the situation, you need to divide. Okay. and any manner, any proportion, case to case basis you need to decide. What about CGST credit? What your wife will do? First she will think about her only, then only you will come into picture. Correct? First CGST credit for CGST, then only IGST. Same way your parents also. After your marriage, they will think about themselves only, then only they will think about you. So you have to suffer being born as a male. So therefore, this is the order of utilization. See here, IGST credit first for IGST liability, then for CGST, SGST or UTGST. CGST credit, SGST credit, UTGST credit, first for its liability, then for payment of IGST. Then next, third principle. Before utilizing, tell me which credit should be exhausted first. Whose money will go first? Very good. IGST credit should be exhausted first before utilizing CGST and SGST. Okay. So IGST credit before utilizing CGST, SGST credit of IGST should be completely exhausted, and we need to follow the order of utilization of IGST credit as specified in principle 2. Then now you have some liability. What you will do? You have some liability. What you will do? First you will take out of your pocket, correct? Then wife or parents? Wife. Wife, married, no. Wife. Then parents, like that. IGST payment liability, first which credit? IGST. Then CGST credit. Thereafter SGST or UTGST credit. Now IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, SGST or UTGST in any proportion. So multiple answers possible. And what you should do in the exam, depending upon the situation, you need to utilize. For example, say this. You have CGST liability, you have CGST, SGST, IGST. Your liability of CGST, SGST and IGST is 5,000 each. And you have ITC of CGST 2,000, SGST 2,000, IGST 10,000. So what you need to do first? Which credit should be exhausted? IGST credit. So you are taking the liability CGST, SGST, IGST. First which credit you need to utilize? IGST. So gross GST payable. What is the gross GST payable? CGST 5,000, SGST 5,000, IGST 5,000 minus IGST credit utilized. IGST credit utilized. First we need to utilize IGST credit before utilizing CGST, SGST. That IGST credit first you need to use for IGST. Still how much credit you have? Out of 10,000, 5,000. You tell me for what we will use. Can we use it for CGST fully? No. Don't use it for CGST fully. Why? If you use it for CGST fully, this 2,000 rupees will be carried forward. This cannot be set off with SGST. So don't use fully CGST for IGST credit fully for CGST or fully for SGST, because we have the credits that will get carried forward unnecessarily, because cross utilization not possible between CGST, SGST. Suppose if you do that way, what will happen? Minus CGST credit and SGST credit. So here CGST credit cannot be utilized, SGST credit only can be utilized. So you end up with gross liability, that is net liability. You end up with net liability. What is that net liability? In the first case 0, next case 3,000 and last case 0. But actually the answer is wrong. Why the answer is wrong? Why this answer is wrong, Pa? Why this answer is wrong? You see the total of the liability. What is the total of the liability? 15,000. What is the total of the credit? 2,000, 2,000 and 10,000. 14,000. So total of your liability is 15 minus total of your credit 14. Then what should be the net amount? 1,000. Correct. then this 3000 is not the correct answer. So this 3000 should not be taken. So what is the correct methodology? So I need to get 1000 as the answer. So how the liability is? If you see 5000 minus 2000, 5000 minus 2000 equal liability, 3, correct? So the excess credit you divide equally. So after utilizing for IGST, still 5000 credit you have, you divide it equally between CGST and SGST. So 2500 and 2500. Thereafter 2000 CGST credit and 2000 SGST credit. So CGST liability will be 500. CGST liability will be 500. SGST liability 500. IGST 0. So the total is also 1000. Is it clear? That's what. Depending upon the liability. How the liability is? We have equal liability. So divide it equally between CGST, SGST. So thereby you will get the correct answer. Done? That is this point. IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, SGST liability in any proportion. So multiple answers possible. In my view, depending upon CGST, SGST liability, it should be a portion. And compensation cess point already we discussed. What is that? Compensation cess can be utilized only for payment of compensation cess on outward supplies. Then look into this. Condition for availment of ITC. Section 16. We covered section 41, availment of ITC. Section 49, subsection 5, utilization of ITC. Section 16, conditions for availment of ITC. Look into the first condition pa. Only a registered person can avail ITC, which means unregistered person cannot avail ITC. Number 2, the inward supplies on which ITC to be availed should be used or intended to be used in the course or furtherance of business. What does it mean? It should be either used for your business or intended to be used. Intended to be used means what pa? It is not used for business now, but you will be using it in future. It's okay. Still you can take the credit. Either used or intended to be used in the course or furtherance of business. In the course means for the existing business. In the furtherance means for something which you are going to start in future. So first condition, only a registered person can avail the ITC. Second, inward supplies on which ITC can be availed should be used or intended to be used in the course or furtherance of business. And next, third, the person who is availing ITC should be in possession of tax paid document. Means they should be having the tax paid document. What are the various tax paid documents? Debit note, invoice, or ISD invoice, or bill of entry. So these are the various tax paid documents. Tax invoice. Who will be giving the tax invoice to whom? Either supplier will be giving it to recipient or recipient will be giving it to supplier. Number 2, debit note. Number 3, ISD invoice. What is ISD invoice? Input service distributor invoice. There is a head office which takes the credit and distributes the credit to the branch office. For example, there is one head office pa, 3 branch office B1, B2, B3, and what will happen? There is a service provider who will provide services and raise invoice. Service is provided to the branches. There is a service provider. That service provider will raise invoice to the head office, will provide the service to the branches. Then the head office will take the credit and distribute the credit to the branches. In what ratio? Some ratio they will distribute. And while distributing this credit, they need to give invoice to these branches. That is called as ISD invoice. On the basis of that ISD invoice also they can take credit. Then bill of entry. On import we need to pay customs duty along with IGST. So for that we will file bill of entry. That bill of entry is also one of the tax paid document. So what are the 4 tax paid document? Tax invoice, debit note, ISD invoice and bill of entry. Then 4th point you see, recipient should have actually received the goods or services. Suppose invoice is dated January but you are receiving it in somewhere March. When can you take ITC? Only on receipt of that particular goods, March only. Even though invoice is in January, but you cannot take ITC for January because the goods and services are actually received in March. So you can take ITC in March. So recipient should have actually received goods or services. Number 5, supplier should furnish the details in GSTR1, correct? Only matched ITC can be taken. Means what your supplier should do, he should report the details in GSTR1 and that should be reflected in GSTR2B. And supplier should have paid the tax with respect to such supply by 30th September of next financial year. So that also we saw in Rule 37A, your supplier should pay tax. By when your supplier should pay tax? By September 30th of next financial year, otherwise you need to reverse the ITC. Then recipient should have filed the returns. What returns? GSTR3B. GSTR3B is the returns to be filed by every person for availing the ITC. Then GST paid on inward supply should be reflected in 2B under ITC available and should not be restricted. In 2B, there will be ITC available, ITC not available, like the two columns. It came in 2B, it came in your 2B, but it is not there in ITC available column. It is in ITC not available column. Can you take ITC? No. So total 8 conditions should be satisfied. First 2 basic conditions. Only a registered person can avail ITC. The inward supply should be used or intended to be used in the course or furtherance of business. And next we have 3 conditions to be satisfied by recipient. What are the 3 conditions to be satisfied by recipient? Recipient should be in possession of tax paid document. Recipient has actually received the goods or services, and recipient has filed the GSTR 3B. So these 3. Then 3 conditions from supplier point of view. What are they? Supplier should file the GSTR 1 and the details should be there in 2B. Number 2, supplier should pay the tax by September 30th of succeeding financial year. That details reported by supplier should not be restricted in 2B. Means ITC should be available. In some cases, as per section 38, it will be restricted in 2B. What are the cases it will be restricted in 2B? As per section 38, if your supplier is a newly registered person, all those information you can see, give the page number reference. Refer page number 166. Refer page number 166 and see there in page number 166. In the following cases, even though supplier declared the details of outward supplies in GSTR1, but ITC will be restricted in 2B. Why it will be restricted in 2B? Because your supplier is a newly registered person. Newly registered person means that is already, if he is registered, okay. Now only he got registered. Means he may not regularize his returns. But in all these cases, it's not your mistake, your supplier's mistake. But for your supplier's mistake, you will be penalized. Okay. Your supplier is a newly registered business. Number 2, your supplier has filed 1 but not filed 3B. Or your supplier filed GSTR1 and 3B, but liability 1 is greater than 3B. Or your supplier ITC in 3B greater than their 2B. Or your supplier defaulted in payment of tax and the default continues. Or your supplier has to pay 1% of liability through cash ledger under 86B, but your supplier did not pay. Like this, these are the 6 cases. Because of your supplier mistake, you will be penalized. So tell me, what are the 6 cases where your supplier will file GSTR1, it comes in 2B under ITC not available and you cannot take ITC. What are the 6 cases? Number 1, supplier is a newly registered business. Supplier liability in 1 is greater than 3B and supplier filed 1 but not filed 3B. Supplier ITC in 3B greater than 2B. Supplier defaulted in payment of tax and the default continues. Supplier did not pay 1% of liability through cash ledger. In these 6 cases, even though supplier reported the details in GSTR1, but it will be reflected under ITC not available. Consequently, we cannot take this ITC. That is this point. Okay. Next. And what is that you can take as ITC? Input tax. What is the meaning of input tax? Tax paid under CGST, SGST, UTGST and on inward supplies, either under FCM or RCM. Even under RCM, whatever GST you paid, you can avail as ITC. And IGST paid on import also can be taken as ITC. But input tax excludes tax under composition scheme. Means composition scheme person. For example, if I am under composition scheme, first of all, I should not charge GST to you. Even if I charge GST to you, you cannot take ITC, because composition scheme dealers will not pay the regular tax. They will pay tax at the reduced rates. So say this. Input tax means CGST, SGST, UTGST charged on supply of goods or service are both made to a registered person. It also includes tax paid on RCM and IGST charged on import of goods. It does not include tax paid under composition scheme. Then, what are the contents of the invoice for availment of ITC? Invoice need not contain every detail, but these minimum details, if it is present in the document, that document will be called as invoice for availment of ITC. What are the minimum details that should be present? Apart from date, GSTIN of supplier, GSTIN of recipient, description, what is it, goods or services, value, GST, tax, then place of supply. If it is interstate supply, these minimum details should be there. Description, value, tax, GSTIN of supplier and recipient, and place of supply in case of interstate supply. Then inward supplies are broadly divided into three: capital goods, inputs, and input services. What is the difference between inputs and capital goods? If you buy some goods and charge it to P&L, then it will be called as inputs. If you buy some goods and capitalize it, then it will be called as capital goods. Any service received will be called as input services. So capital goods means goods which are capitalized in the books. Inputs means goods other than capital goods. Input services means any services received. And there is a concept of deemed delivery. Please concentrate. What is this deemed delivery? Bill to ship to transactions. For example, X Limited is the supplier. Y Limited placed the order with the X Limited, and while X Limited delivered the goods to Z Limited. So what is the sequence of activities? First, Y Limited placed the order with X Limited. What X Limited did? X Limited raised the invoice to Y Limited, because Y Limited only placed the order, na? So X Limited raised the invoice to Y Limited and delivered the goods to Z Limited. Okay, so delivery of goods is made to Z Limited. X Limited raised the invoice to Y Limited and Y Limited placed the order. X Limited delivered the goods to Z Limited on behalf of Y Limited. Now tell me, who is having invoice? Y Limited, but they did not receive the goods. And Z Limited received the goods, but they don't have invoice. So who should take ITC in this case? Y Limited only will take ITC. That is called as deemed delivery. When goods are delivered to a third person, on behalf of the registered person, the day when third person has received the goods is deemed that the registered person has received the goods and they can take ITC. Is it clear, pa? Same way, in case of services also, if the services are provided to the third person on behalf of the registered person, the day on which third person has received the services, deemed that the recipient, that the registered person has received the service and they can take ITC. For example, you joined in articleship. When you join in articleship, so if you ask your auditor to pay the fees to us, and say for your CA final classes, you join with us and you don't have to pay the fees. Your auditor should pay the fees. If your auditor pays the fees, we will raise invoice to your auditor. Your auditor will take the ITC even though coaching is provided to you. How, sir? When the service is provided to a third person on behalf of the registered person, who is the registered person? Your auditor. The auditor can take ITC. Is it clear? When the goods and service are provided to a third person on behalf of the registered person, the day on which the third person has received the goods or service, it is deemed that the registered person has received the goods or service and they can take ITC. That's the concept of deemed delivery. When goods are delivered to any person or service are provided to any person on the instructions of the recipient, the date on which such person has received the goods or services, it is deemed that the recipient has received the goods or services. So remember, in case of bill to ship to transaction, the billing address can avail ITC. And there is one amendment in this regard. That is, on your behalf, the goods are handed over to the transporter. In case of X works contract, the supplier will hand over the goods to the transporter of the recipient. The day on which goods are handed over to the transporter, it is deemed that the recipient has received the goods and the recipient can take ITC. Is it clear? You just write down here somewhere. In case of X works contract, here you write down, maybe some space, just some 2 lines is required. In case of X works contract, I'll dictate, you please write down. In case of X works contract, what is X works contract means? Goods are handed over at the factory gate. Okay. In case of X works contract, in case of X works contract, comma, when goods are handed over to the transporter, in case of X works contract, when the goods are handed over to the transporter, on behalf of the recipient, comma, the date on which goods are handed over, to transporter, is deemed to be the date of receipt of goods by recipient. Is deemed to be the date of receipt of goods by recipient. Is deemed to be the date of receipt of goods by the recipient. Puridappa? The date on which goods are handed over to the transporter is deemed to be the date on which goods are received by the recipient, and the recipient can take ITC on that basis. Then look into the next one. Goods are received in lots or installments. For example, you place the order for 100 bikes. You are a bike dealer and I am the bike manufacturer. You place the order for 100 bikes. All 100 bikes at a time I will not be able to send. So first month I sent 40 bikes, second month I sent 40 bikes, and third month I sent 20 bikes. Now all 100 bikes, when are you receiving? Only in the third month. So when goods are sent in lots or installments, only on receipt of last lot or installment you can take ITC. That is this, ITC shall be availed only on receipt of last lot or installment of goods. Then rule 37. What is this rule 37? Please concentrate. You are my recipient. I am your supplier. You have to make payment to me within 180 days from the date of invoice. Please listen, please concentrate. You have to make payment to me within 180 days from the date of invoice. If you have not made payment to me within 180 days from the date of invoice, so much of the ITC that you have availed needs to be reversed along with interest at the rate of 18% per annum. From which date to which date? From the date of utilization till the date of reversal. Again I am repeating, when recipient is not making payment to supplier within 180 days from the date of invoice, so much of the ITC availed by the recipient needs to be reversed along with interest. At what rate? 18%. From the date of utilization till the date of reversal. Again, as and when you make payment to me, you can re-avail the ITC. But interest, gone. Interest is gone. But whenever you make payment to me, you can re-avail the ITC. Is it clear? Now, say for example, you paid 60% within 180 days, 40% you did not pay within 180 days, then how much you need to reverse? 40% portion you need to reverse. Got it? And say you did not pay 100%, and you reverse the ITC. Thereafter, you paid 75% to me. How much you can re-avail? That 75% portion you can re-avail. Understood the logic behind it? Read this. If recipient has not made payment, what is that payment? Value plus tax to supplier within 180 days from the date of invoice, then so much of the ITC proportionate to the amount not paid to supplier availed by the recipient shall be reversed along with interest at 18% per annum. From which date to which date? From the date of utilization till the date of reversal. However, interest not payable if the availed ITC is not utilized. Okay. And above provisions are not applicable to supply under RCM. In case of RCM, anyhow the liability to pay GST is on recipient only na. So this 180 days condition is not applicable. 7(1)(c), that is there are activities DRIP even though without consideration. In that case the consideration itself is not there, where from the recipient will make payment to supplier. So therefore there also this 180 days condition not applicable. Then 15(2)(b), recipient is making payment to some other person on behalf of supplier. Already you paid to some other person on my behalf, which means that 180 days condition is not applicable. So tell me what are the three cases where 180 days condition is not applicable. Number one, supply under RCM, supply under 7(1)(c), payment made by recipient to a third person on behalf of the supplier. Then ITC can be re-availed as and when payment is made to supplier after 180 days, but interest paid cannot be availed as ITC. So we have come across re-availment in two places, Rule 37 and Rule 37A. What is that Rule 37? First, you have to make payment within 180 days. You did not pay, so you reverse the ITC. Again you paid within 180 days, so you can re-avail the ITC. That is one. Next one. Supplier not filed GSTR 3B by September 30th of succeeding financial year, so you reverse the ITC. Again supplier filed 3B, you can re-avail the ITC. In both these cases of re-availment, there is no time limit, which means irrespective of the time limit, you can re-avail the ITC. Okay, Papa? So time limit for re-availment is not applicable. Then look into section 16 subsection 3. If you capitalize the asset at full value including GST component and claim depreciation under Income Tax Act, then you cannot claim ITC. So while counting depreciation under section 32 of Income Tax Act, block of assets method, you take opening WDV of the block, add purchases minus closing W, like minus sales, closing WDV you will get, on that you compute depreciation. In that WDV of the block, if you have taken full asset including the GST component, for example, you are purchasing an asset for 10 lakhs and the GST paid is 1,20,000, and if you compute depreciation on 11,20,000, already you are getting income tax benefit. How you will get income tax benefit? Simple pa. Whenever you claim depreciation, to that extent your tax liability gets reduced, yes or no? So means already you are taking the benefit there, so you will not get the ITC. 1,20,000 rupees ITC not available. What if the depreciation is computed on 10 lakhs? Then if depreciation is computed on 10 lakhs, then 1,20,000 can be availed as ITC. Then look into time limit for availment of ITC. What's the time limit for availment of ITC pa? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. So with respect to an invoice of a financial year, 30th November of next financial year or date of filing annual return, whichever is earlier will be taken. And the time limit is not applicable in case of re-availment of ITC reversed earlier. For example, you see this. The financial year is 2025-26. For financial year 2025-26, if there is any invoice pertaining to this financial year 25-26, if the invoice pertains to financial year 25-26, what is the time limit? What is the regular time limit for availment of ITC? Regular time limit for availment of ITC. What is the regular time limit pa? for availment of ITC. What will be taken? A, the regular time limit is A, 30th November 2026, 30th November of the succeeding financial year, or B, that is date of filing annual return for this financial year 25-26. By when you will file the annual return? 31st December 2026, whichever is earlier. Which is earlier, pa? 30th November. Suppose if you file annual return before, whichever is earlier is 30th November, but you can file the annual return before also. Yes, see, 31st December is the due date of filing annual return, but you can file the annual return before this date also. Suppose if you file the annual return as on 15th of October 2026, then whichever is earlier will be 15th October 2026. Are you understanding? This is the time limit for availment of ITC. But when the question is silent, you take 31st December only as the date of filing annual return. Simple part, 30th November of succeeding financial year or date of filing annual return, whichever is earlier will be taken as the time limit for availment of ITC. Okay, va? Then suppose if the debit note is given for this financial year, same way, with respect to this invoice, if the debit note is given for financial year 2026-27, for this invoice, a debit note has been given, pa. For this invoice, a debit note has been given. What is the date on which debit note is given for this invoice? For this invoice, the debit note is given on 2026-27. Then what should be taken? Should we see this only as the time limit, or based on the debit note we need to see? Based on the debit note we need to see. That's what I have given. In case of debit note, availment of ITC depends on the debit note date, but not the date of invoice related to such debit note. Puridappa? Then next, look into another special point. In case of RCM, when you can take ITC? If supplier gives invoice, no issue, based on the invoice of supplier. What if supplier is not giving invoice? You are required to give self-invoice, na? Whenever you give self-invoice, based on that you can take ITC. See there. In case of RCM, where registered recipient issues invoice to unregistered supplier, the date on which recipient issues invoice is relevant for determining the time limit for availment of ITC. But whenever recipient gives self-invoice, that month only they can take ITC. Don't sleep, please concentrate. In case of self-invoice, when they can take ITC? As and when the self-invoice is issued. Whichever month the self-invoice is issued, that month they can take ITC. Is it clear? And when self-invoice is applicable, already we discussed in the morning. When self-invoice is applicable, supplier is unregistered, recipient is registered, and the supply is covered under RCM. Can you remember this point? Very, very important part. Whenever the self-invoice is given by the recipient to supplier, then the recipient can take ITC. If the self-invoice is given in March, March month. If the self-invoice is given in April, April. If the self-invoice is given in somewhere September, September. Whenever they give. And that date of self-invoice should be taken for deciding the time limit for availment of ITC. Is it clear? That is, in case of RCM, where registered recipient issues invoice to unregistered supplier, the date on which recipient issues invoice is relevant for determining the time limit for availment of ITC. Then, time limit for availment of ITC for certain financial years, this is omitted now. That's not applicable because this was only a stopgap arrangement for a period, and that is not applicable. Even the procedure is also not applicable. These two are omitted. This time limit for availment of ITC and the procedure for availment of ITC. But this section 16 subsection 6 is there. That is very, very important. Concentrate. So whenever your registration is cancelled, but the time limit for availment of ITC is not expired as on the date of cancellation of registration. you can avail the ITC, at a later point of time also within 30 days from the revocation order. So the regular time limit or 30 days from revocation order, whichever is later is the time limit for availment of ITC. Let's try to understand this with the help of an illustration. Kindly make note of this in your book. Somewhere you write down this. First, financial year 2025-26. Financial year 2025-26, you have got some inward supplies. For the financial year 2025-26, you have got some inward supplies. And for that inward supplies, what is the regular time limit by which you should have availed the ITC? Regular time limit is what? Regular time limit is 30th November. Regular time limit is 30th November. So for these inward supplies, the regular time limit is 30th November 2026. Regular time limit. So write down, first 2025-26, you have got some inward supplies, and for that the regular time limit for availment of ITC, regular time limit for availment of ITC is 30th November 2026. Now, whether for this financial year 2025-26, ITC availed or ITC not availed? ITC not availed during this financial year. And what happened in the next financial year? Somewhere in the next financial year as on 1/10/2026. In the next financial year as on 1/10/2026, your registration is cancelled. Registration cancelled. And from 2025-26 onwards, in the next financial year, till this date, ITC not availed. For these inward supplies, till this date, ITC not availed. Again I am repeating, for financial year 2025-26, you have got some inward supplies. On that inward supplies, you have not availed the ITC in that financial year. You have time limit till 30th November, and they cancelled your registration on 1/10. As on 1/10 also, ITC not availed on those inward supplies. And from 1/10/2026, you cannot avail ITC. Why you cannot avail ITC? Because your registration is cancelled. And thereafter, on one fine day, they have made the revocation order. Revocation means what? Withdrawal of cancellation. Revocation means withdrawal of cancellation. Say somewhere on 31st December 2026, they have given the revocation order. Revocation order they have given. Revocation order means revocation of cancellation. So from this date to revocation order, you cannot avail ITC. Why you cannot avail ITC during this period? Because your registration is cancelled. During this period, okay, so you cannot avail ITC because your registration is cancelled. So with respect to this inward supplies, ITC cannot be availed. Not that you have not availed, cannot be availed. Why ITC cannot be availed during this period? Because your registration was cancelled during that period. Then what should we do? After revocation order, within 30 days, after revocation order, this is the revocation order na? From the revocation order, within 30 days. What is within 30 days from revocation order? 30th January 2027. 30th January 2027, that is within 30 days from revocation order, you need to file return. Okay, this is the time limit for availment of ITC. Okay, this is the time limit for availment of ITC. 30 days from revocation order, GSTR 3B needs to be filed. GSTR 3B to be filed. In this GSTR 3B to be filed, you can avail the ITC. Means for all these inward supplies for which we have not availed ITC, we can avail the ITC by this period. ITC can be availed. ITC can be availed. So what is the time limit? What is the time limit, pa? What is the time limit? The regular time limit, or what is the time limit? This is A, regular time limit. Regular time limit is regular time limit. Regular time limit is 30th November 2026, or B, 30 days from revocation order. 30 days from revocation order. What is 30 days from revocation order? 30 Jan 2027, whichever is later, that is 30 Jan 2027, by that time we can avail the ITC. Clear, pa? This is a very important concept. This will be tested. Be careful with respect to this. If you have not availed the ITC as on the date of cancellation, but remember the time limit should not be expired as on the date of cancellation. What is the regular time limit? 30/11. Whether the time limit for availment of ITC expired or not expired as on the date of cancellation. When date of cancellation? Before that date. Before that date. So therefore, you can take the ITC, which is A, regular time limit. What is the regular time limit? 30th November of succeeding financial year, or B, 30 days from revocation order, whichever is later. Suppose your registration is cancelled on 1st December, then your registration is cancelled on 1st December, but you have not availed the ITC by 30th November, you can never avail ITC. This provision is not applicable. Again, I am repeating, concentrate. Your registration is cancelled after the time limit, regular time limit. Your registration is cancelled after the regular time limit. Then you cannot take ITC under this subsection, which means this subsection is not applicable. When this subsection is applicable, as on the date of cancellation, the regular time limit should not be expired. Means the cancellation should be before the date of regular time limit. Okay, Vapa? Say this. Registered person can claim ITC on such invoice or debit notes in any return file within the regular time limit under 16(4) or 30 days from revocation order, whichever is later. Whichever is later. But what is the important condition here? What is the important condition here? What is the important condition? Please respond. What is the important condition? Regular time limit for availment of ITC. Regular time limit for availment of ITC, not expired. Regular time limit for availment of ITC not expired as on the date of cancellation. As on the date of cancellation, the regular time limit for availment of ITC is not expired. The regular time limit for availment of ITC not expired as on the date of cancellation. Clear? So we completed section 16, and related to section 16, we have one question. Please look into that in page number 114. Same, this book only. This book only, look into page number 114. There is an illustration. XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2023 from the following particulars. Inputs A, GST 1 lakh. One invoice on which GST payable was 10,000 is missing. Can we take ITC? On 10,000 we cannot take ITC. Why on 10,000 we cannot take ITC? Because the invoice is missing. The person availing ITC should be in possession of tax paid document. If the invoice is missing, you cannot take ITC with respect to that. So how much ITC can be taken here? 90,000. Then second one, inputs B, 50,000. Inputs are to be received in 2 installments. First installment has been received in October. Right now you are in October month. This month first installment is received. So can you take ITC now? No. When you can take ITC? On receipt of last installment. So entire 50,000 can we take ITC or we cannot take ITC? We cannot take ITC. But in this case 90,000 can be availed as ITC. Third, capital goods 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST, as it will avail depreciation on the full invoice value. Sir, they are going to take depreciation on the full invoice value. Can they take ITC or they cannot avail ITC? They cannot avail ITC because section 16.3 says that if depreciation is computed on tax component, you cannot avail ITC. Then input services 2,25,000. One invoice dated 21/2023 on which GST payable was 50,000 has been received in October 2023. Now, what is the date of invoice? 21/2023. What is the financial year, Pa? What is the financial year for this invoice? 2022-23. For financial year 2022-23, what is the time limit for availment of ITC A? The regular time limit. What is the regular time limit? 30th November 2023. Or B, date of filing annual return. What is the date of filing annual return? See there, the annual return for the financial year 22-23 was filed on 15 September 2023. So 15 September 2023, whichever is earlier, which is earlier? 15 September 2023 is earlier, but right now you are in which month? October month. Can you take ITC? No, you cannot take ITC. So you cannot take ITC with respect to this 50,000. But with respect to 1,75,000, you can avail ITC. Is it clear, Pa? With respect to 1,75,000, see, total 2,25,000. Out of that 50,000 we cannot take, but 1,75,000 we can take. And how much is the total ITC? 90,000 plus 1,75,000. That will be 2,65,000. We can avail as ITC. And here all the conditions necessary for availing ITC have been fulfilled, like that it is given. And they are not eligible for any threshold exemption also. Okay. So like this you may get a question on section 16. And now we have section 17. Section 17 talks about apportionment of credit and blocked credit. So look into apportionment of credit. 17.1, 17.2 and 17.3. See that. Page number 102. Page number 102. Section 17. So we completed 3 sections. Section 41, availment of ITC. 49, utilization of ITC, 49 subsection 5, and 16, condition for availment of ITC. 17 talks about apportionment of credit and block credit. See this. Apportionment credit says that if you have inward supply which is used for taxable outward supplies or business purpose, you can avail ITC. You have some inward supplies which is used exclusively in taxable outward supplies or business purpose, you can avail ITC. You have some inward supplies which is used exclusively in exempted or non-business purpose. Can you avail ITC or you cannot avail ITC? You cannot avail ITC. You have some inward supplies which is used for both taxable and exempted outward supplies. Can you avail ITC? Yes. How much ITC you can take? Proportionate ITC available. Is it clear? Then next, inward supplies used for both business and non-business. How much ITC you can take? Proportionate ITC. Sir, what is that proportionate ITC, sir? Simple, pa. To the extent of your exempted supplies, you cannot take ITC. To the extent of your taxable outward supplies, you can take ITC. Let's try to understand this with the help of an illustration. Please make note. Illustration on apportionment of ITC. Illustration on apportionment of ITC. That is, you have purchased inputs purchased during the month, inputs purchased during the month equal to, inputs purchased during the month equal to 1 lakh excluding 18% GST. Input services received during the month, input services received during the month equal to 50,000. Again, that is also excluding 18% GST. So you have purchased inputs and the value of that inputs is 1 lakh excluding 18% GST, and you received input services during the month, the value is 50,000 excluding 18% GST. Then compute net eligible ITC, compute net eligible ITC, net eligible ITC if exempted turnover, if exempted turnover is 10 lakhs, if exempted turnover is 10 lakhs and taxable turnover is 20 lakhs, and taxable turnover is 20 lakhs. Tell me how much will be taken as the net eligible ITC. First, what is the ITC availed? What is the ITC availed? How much is the ITC availed? 1 lakh into 18%, that equals to 18,000. Then 50,000 into 18%, that equals to 9,000. So 18,000 plus 9,000, that will be 27,000 is the ITC availed. Minus, as you are using these inputs and input services, common for what? Both taxable and exempted, both taxable and exempted. So what you should do? Proportionate to exempted, you need to reverse. Proportionate to exempted, you need to reverse, minus ITC reversed. What is that ITC reversed? That is 27,000 into what by what? Exempted turnover divided by total turnover, that is 10 divided by 30. 27,000 into 10 by 30. What is 27,000 into 10 by 30? 9,000 will be reduced so that we will get net eligible ITC. What is that net eligible ITC? Net eligible ITC will be 18,000. Hope you understood how we calculate it. Suppose if the exempted turnover is 20 lakhs and the taxable turnover is 40 lakhs, then exempted turnover 20, taxable turnover 40, then into 20 by 60, same only, correct? Yes or no, pa? Suppose if exempted turnover is 20, taxable turnover also 20, then 20 by 40, 20 by 40 will be half will be gone, remaining half only will be available. Understood? This is the way in which you need to calculate the ITC, net eligible ITC. First you need to take ITC avail minus proportionate ITC you need to reverse. So you will get the net ITC. Okay, Papa? That is called as proportionate ITC. If inward supplies is partly used for taxable, partly used for exempted, proportionate ITC available. Same way, if inward supplies partly used for business, partly used for non-business, proportionate ITC is available. That is with respect to these 4 points. And where we will keep zero rated supplies. Zero rated supplies are treated as taxable supplies. Zero rated supplies are treated as taxable supplies, and we can enjoy the ITC with respect to that. And what are zero rated supplies? There are two supplies which are regarded as zero rated. What are they? Export of goods or services, supply of goods or services to SEZ. These two are regarded as zero rated supplies. So that's what I have given. Zero rated supplies will be covered under taxable supplies for the purpose of availment of ITC. Then we have the meaning of exempted supplies. What will be taken as exempted supplies? Concentrate. There are few supplies which are treated as exempted supplies for the purpose of ITC chapter. Generally, what is the meaning of exempted supplies? Notified as exempted, nil rated, non-taxable. That is the general meaning of exempted supplies. But this meaning of exempted supplies is only for the purpose of ITC chapter. What are they? Total 8 transactions you need to remember. 8 transactions. First 3, notified as exempted, nil rated, non-taxable. These 3 is exempted even for payment of GST as well as for the purpose of ITC. Then next 4 transaction, sale of land, sale of building, sale of securities and sale of goods by duty-free shop to incoming passengers. There is a duty-free shop in international airport which is selling goods to the incoming passengers, that will be treated as exempted supply, even though it is not a supply, but it will be treated as exempted supply. What are the 4 transactions? Sale of land, sale of building, sale of securities, supply of, that is warehoused goods, that is sale of goods by duty-free shop. Where is the duty-free shop? In the international airport. To whom they are selling? To the incoming passengers. That will be treated as exempted, even though it is not a supply. Actually, land building not a supply, but it will be treated as exempted. Then supply under RCM. When my outward supply is covered under RCM, that is also treated as exempted, even though for payment of GST it will be taxable in the hands of recipient, but for ITC purpose it will be treated as exempted. Okay. Now we will try to understand what is the meaning of exempted for ITC versus what is the meaning of exempted for payment of GST. So please write down this table. Meaning of exempted turnover. Meaning of exempted turnover. Meaning of exempted turnover. You write it once so that you will remember this. That's why I am making you write. Meaning of exempted turnover. First, for payment of GST, what is the supply? What is the transaction or activity? What is the activity? For payment of GST, for payment of GST, for computation of ITC, for computation of ITC. For computation of ITC. So prepare a table like this: activity, for payment of GST, for computation of ITC. First 3 activities I told you, which is common, treated as exempted both for payment of GST as well as for ITC. What are they? Number 1, notified as exempted. Notified as exempted. Number 2, nil rated. Number 3, non-taxable. These 3 transactions are treated as exempted both for payment of GST as well as for ITC. For payment of GST as well as for ITC, we will treat as exempted. And what we will do in this case? the value will be nothing but the transaction value. Whatever transaction value is there, that only will be taken. So these three are treated as exempted, both for payment of GST as well as for ITC. Then next next. Next one, transaction. Actually it is taxable, taxable under RCM, but for ITC purpose it will be treated as exempted. What is that? Number 4. Supply under RCM. Supply under RCM. Supply under RCM, for payment of GST it will be taxable. One second. For payment of GST it will be taxable, and who will pay? Recipient will pay. Recipient. Second, pen is not working. Recipient for taxable in the hands of recipient, and it will be treated as what? Exempted for payment of GST. It will be treated as exempted for payment of GST. Supply under RCM, it will be treated as taxable for payment of GST. For computation of ITC, it will be treated as exempted. Exempted for whom? Supplier. It will be treated as exempted to supplier. To supplier it will be treated as exempted while doing ITC computation. Then next we have 4 transactions. So can you give me 1 minute? I'll turn off and turn on. Maybe because of heat it's not working. So supply under RCM, taxable for the purpose of payment of GST, and for ITC purpose it will be exempted. Next we have 4 transactions. Those 4 transactions are treated as not a supply, but for ITC purpose it will be treated as exempted. What is that? Sale of land. Sale of land, actually it is not a supply. Sale of land is not a supply, but for ITC it will be treated as exempted. How much will be taken as the value? Stamp duty value will be taken. Usually in income tax, for immovable properties you take a stamp duty value na, like that stamp duty value should be taken for sale of land. Then number 6, sale of building. Sale of building, even though sale of building is excluded from supply. Which sale of building is excluded from supply? That building which is where the consideration is received after obtaining completion certificate. Sale of building, it is not a supply, but for ITC purpose it will be treated as exempted. And what should be taken as a value? Again, stamp duty value should be taken. For land and building, we need to take stamp duty value. Then next, sale of securities. Sale of securities. Sale of securities for payment of GST, it is not a supply. It is not a supply for payment of GST, but for ITC purpose, it will be treated as exempted. How much should be treated as value? 1% of sale value. 1% of sale value. Out of that securities, whatever is the 1% of sale value, that will be taken. Okay. 1% of sale value should be taken. Sale of land, sale of building, sale of securities. So exempted, but what should be taken as the value? So in case of land and building, stamp duty value. In case of securities, 1% of sale value. Then number 8, that is sale of goods. Sale of goods by duty free shop. Duty free shop in international airport. Duty free shop in international airport. To which passengers? To incoming passengers. To incoming passengers. Sale of goods by duty free shop in international airport to incoming passengers. Okay. So is it treated as supply or not a supply? Not a supply, because it will come under sale of warehouse goods under customs. But for ITC purpose, it will be treated as exempted. And what will be taken as the value? Sale value. Whatever is the sale value, that will be taken. Clear? So these are the 8 transactions you need to remember. For payment of, for computation of ITC, it is exempted. Then 2 more transactions, like you see, point number 9, that is zero rated supplies. Zero rated supplies. How zero rated supplies will be treated? Here there is no GST. For payment of GST, no GST. But for ITC purpose, it will be treated as taxable. Same way, we have interest. Interest on loans, advances, deposits. Interest on loans, advances or deposits. This interest on loans, advances, deposits, actually it is exempted for payment of GST. But for ITC purpose, what it is? For ITC purpose, it will be treated as exempted if it is bank, or financial institution or NBFC. Bank, financial institution or NBFC, it will be treated as exempted both for payment of GST as well as for ITC purpose. Whereas for the purpose of others, for others, it will be treated as exempted for payment of GST, exempted for payment of GST, but for ITC purpose it will be treated as taxable. So these are the transactions that you need to remember. This is a special point. Generally, zero rated supplies, we don't have to pay GST, but for ITC purpose you need to treat it as taxable. Same way, this interest on loans, advances, deposits, for bank, financial institution or NBFC, it is exempted. Even for ITC also it is exempted. For others, it is exempted for payment of GST, but for ITC purpose it will be treated as taxable. Okay. That is about this discussion. So total these 8 transactions, supply is notified as exempted, nil rated, non-taxable, supply under RCM, sale of land, sale of buildings, sale of securities, supply of warehoused goods, that is goods by duty-free shop in international airport. Now concentrate. There is a duty-free shop in international airport. That duty-free shop in international airport is making sale to outgoing passengers. It will be treated as zero rated, that is export, because they are taking outside India na. It is treated as zero rated supply, and they can take the ITC and they will get the refund of ITC. Who? The duty-free shop. Suppose if the duty-free shop is making sale to incoming passengers, actually it is not a supply. Why not a supply? It is treated as sale of warehoused goods under customs, but for ITC purpose, it will be treated as exempted. You got it? And whatever purchases that is made by the duty-free shop will be chargeable to GST, and they can avail ITC. Proportionate to sale to outgoing passengers, they can enjoy the ITC. Proportionate to sale to incoming passengers, they cannot enjoy the ITC, they need to reverse the ITC. Okay, Vapa? Then this already we discussed. Services by way of accepting deposits, loans or advances, in so far as the consideration is represented by way of interest or discount, except in case of banking company, financial institution or NBFC, is exempted both for payment of GST as well as ITC. But for others only it will be treated as exempted for payment of GST, whereas taxable for ITC. And this duty credit scripts point is not there for you. At final level you will be coming across this. Leave it. Then special provision for availment of ITC by a banking company, financial institution or NBFC. Please concentrate. There is a banking company, financial institution or NBFC. Just now I told you part of their income will be exempted and part of their income will be taxable. Which part of their income will be exempted? Interest income is exempted, remaining income will be taxable, which means they will not get full ITC, they will get only proportionate ITC. They have two options. Banking company, financial institution, NBFC has two options. What are the two options? Option 1, they can go for proportionate ITC. Means what? Proportionate, like exempted turnover, taxable turnover, what we saw. Based on that they can take ITC. Option 2, ad hoc ITC. Ad hoc ITC means what? Flat 50% they will not take and remaining ITC they will be able to take. And they need to decide between these two options when? In the beginning of the financial year, and option 1 selected will remain throughout the financial year. See the third point. Option 1 selected cannot be withdrawn during remaining part of the financial year. And see this table in detail I have given. If you are going for option 1, proportionate ITC option, inward supplies used for taxable outward supply, fully ITC available. Sir, please concentrate. You are under proportionate ITC method, and these two options are applicable to whom? Only to bank, financial institution and NBFC. If you are under proportionate ITC method, you are a bank, you are having some inward supplies used for taxable outward supplies, full ITC available. You are having some inward supplies used for exempted outward supplies, no ITC. You are having common ITC, proportionate you can take. You are having inward supply from distinct persons, then also you take proportionate ITC. However, if you go for 50% option, inward supply for taxable outward supply, 50% only you will get. Inward supply for exempted outward supply also 50% you will get. And common ITC you will get 50% ITC. Inward supply from distinct person you will get 100% ITC. Is that clear or not? So which means that for 50% option, everything will be 50% only, and inward supply from distinct person 100% ITC. What about blocked ITC and non-business purpose? In both the options you cannot take. That is, in case of option 2, inward supply exclusive used for non-business and block credits, ITC should not be availed. 50% compute on remaining ITC, including used exclusively for exempted and used exclusively for taxable. And in case of option 2, restriction of 50% is not applicable to tax paid on supplies made to another registration within the same entity. For example, HDFC Bank Tamil Nadu receives services from HDFC Bank Karnataka, means it's inward supply from distinct person, they can take full ITC, 50% they don't have to. But if they go for proportionate ITC option, they will get only proportionate ITC. Up to this, we completed, that is option available to bank, financial institution, NBFC, etc. Then we will discuss some MCQs and questions. We'll take a break and then we will continue with the blocked credits. Okay, because too much information when it is there, I could see that completely you are exhausted. So that's the reason why we will see some question answers. Please take your practice manual. Page number 82, MCQ 1. Say this, input tax credit is not available in respect of, input tax credit is not available in respect of services on which tax paid under composition scheme, correct? Yes, when you are making purchases from a person opting for composition scheme, first of all you cannot take ITC. Free samples, yes, ITC not available. Any goods which are purchased and distributed as gifts or free samples, ITC not available. And input tax credit not available in respect of goods used for personal consumption, yes. So you buy any goods and you are using it for personal consumption. So we have seen section 16, condition for availment of ITC, inward supply should be used or intended to be used in the course or furtherance of business. If it is used for personal purpose, you cannot take ITC with respect to that. In all these three cases, input tax credit is not available. So option D, 1, 2 and 3. Then in which of the following situations, recipient needs to add the input tax availed by him to his output tax liability? If payment to supplier under forward charge is not made to supplier within 45 days from the date of invoice. Sir, if payment is not made within 45 days, so whether they need to reverse? No. Payment not made within 90 days? No. But when they need to reverse? If the payment is not made within 180 days from the date of invoice. Then next, if goods are received in lots or installment, 50% ITC can be taken on receipt of first installment, wrong. ITC can be availed upon receipt of last installment, that is only correct. And for banking companies using inputs and input services partly for taxable and partly for exempted, which of the following statement is true? ITC shall be compulsorily restricted to credit attributable to taxable supplies including zero rated supplies? No. 50% of the eligible ITC on inputs, capital goods and input services shall be mandatorily taken in month and rest shall lapse. So banking company can choose either option A or B. Option C is the correct. Either they can go for proportionate ITC or they can go for 50% ITC. At their option they can choose. Option C is the answer. A supplier takes deduction of depreciation on the GST component of the cost of capital goods as per Income Tax Act. The supplier can avail only 50% of the said tax component as ITC. No, cannot avail ITC. That is a correct option, correct? But whenever your outward supply, whenever you are calculating depreciation on the tax component, you cannot take ITC with respect to that, cannot avail ITC on the said tax component. Then next, if motor vehicles are used for making dash is allowed. So tell me, you tell me, motor vehicles used for making transportation of goods, can we take ITC? Yes, because motor vehicles are divided into three, used for transportation of persons, vessels and aircrafts and other motor vehicles. Other motor vehicles definitely we can take ITC, not at all a restriction. So other motor vehicles means what? Lorry, truck, etc. used for transportation of goods. Yes, ITC available. In this case, ITC available. Motor vehicle used for taxable supplies of transportation of passengers. Yes, suppose if I am purchasing a motor vehicle and I am using it in the business of transportation of passengers, I can take ITC. And motor vehicle used for training on driving. Yes, in that case also I can take. if I buy motor vehicle used for driving schools, definitely they can take ITC. So option D, all the three cases they can take ITC. Next, Mr. A has a tax invoice dated 21/2023 of services received by him. Its input tax credit is lost if ITC not availed on or before. You tell me what is the time limit for availment of ITC? 2023-24 pa. 30th November 2023 or date of filing annual return. They are filing annual return on 5th December 2023. A, 30th November 2023. B, date of filing annual return 25th December 2023. Whichever is earlier. Which is earlier pa? 30th November. 30th November is the time limit by which they should avail the ITC. Is it clear? Next, input tax credit shall not be available in respect of goods used for personal consumption. Yes, ITC shall not be available in respect of goods used for personal consumption. Then membership of a club provided by employer to employee as per company's internal policy. Concentrate. Generally, membership of a club, health and fitness center is blocked credit. Membership of a club, health and fitness center is blocked credit. However, if it is incurred by employer to employee under a statutory obligation, then they can take ITC. Is it statutory obligation or company's internal policy? Company internal policy. So ITC not available. Input tax credit shall not be available. Travel benefits. Yes means ITC not available in this case pa. ITC not available in this case. Travel benefits extended to employees on vacation. Again, travel benefits extended to employees on vacation is a blocked credit, such as leave or home travel concession. Again, if it is under a statutory obligation, they can take ITC, but here it is not under statutory obligation, therefore ITC not available. In all the three cases, ITC not available. Then, Mr. Raghu avails services of Mr. Raja, a chartered accountant, as under audit of financial accounts 55,000, tax audit and annual filing 10,000, income tax return filing of Mr. Raghu's wife 5,000. All above amounts are exclusive of taxes and applicable rate of GST on this service is 18%. The accountant of Mr. Raghu has booked the entire expense of 70,000 plus GST in the books of accounts. Mr. Raghu is eligible to take input tax credit of. Now tell me what will be the scenario in this case, how much ITC can be taken? Sir, for this 65,000 only sir, because this 5,000 is for Raghu's wife, means it's not a business expenditure, so ITC cannot be availed with respect to that. So 65,000, they booked the entire expense of 70,000 plus GST in the books. Even then, only 65,000 related ITC can be taken. So what is 65,000 into 18%? 11,700. Option B is the answer. Clear? Next. Look into question number 6. Swastik Private Limited is a manufacturer of taxable goods. It purchased the machinery for 8 lakhs on which IGST of 14,400 is paid. The company has claimed depreciation under the Income Tax Act on the full value of machine including the IGST component, has also availed ITC of 14,400. Examine if the stand taken by company is correct. No. First of all, they cannot take ITC. Why they cannot take ITC? Because they have capitalized and computed the depreciation on full value including GST component. So as per section 16(3), they cannot take ITC in this case. Then question number 7. Sigma Consultants, an LLP of finance professionals, provides financial consultancy services. It made an advance payment of 1,18,000 in the month of October to Azuro Computer Services for developing the software. So they paid advance pa. How much is the advance? 1,18,000 inclusive of 18% GST. The software would be used by LLP to enhance the precision of the financial advice given by it to various clients. The balance payment is to be made after the successful test run of the software in the month of December. Sigma Consultants has availed ITC of IGST of 18,000 in the month of October. Do you think Sigma consultants can avail such ITC. Examine the scenario with reference to the relevant legal provisions. What is your answer? Can they take ITC or they cannot take ITC? When are they going to receive the software? When are they going to receive the software? December. So we have one condition, section 16. Only on receipt of goods or services we can take ITC. Even though we paid advance now, but we have not received the goods or services. Only on receipt of goods or service ITC can be availed. So they can avail ITC now? No. They can avail ITC only in December month, not in October month. We saw a condition for availment of ITC. One of the conditions says what? Recipient should have actually received the goods or services. Next. Sir, then on advance they can't take ITC? No. On advance they cannot take ITC. Then all these are small questions. Look into question number 16. Question number 16. Comfortable Private Limited is registered under GST in the state of Orissa. It is engaged in the business of manufacturing of iron and steel products. It has received IT engineering services from Hi-Fi Infotech Private Limited for 11 lakh, excluding GST at 18% on 28th October. Invoice for the service was issued on 5th November. Comfortable Private Limited made part payment of 4,20,000 on 30th November. Being unhappy with the service provided by Hi-Fi Infotech, it did not make the balance payment. Deficiency in service rendered was made good by Hi-Fi by 15th April of next year. Comfortable Private Limited made the balance payment on 6th July of next year. Examine the availability of ITC with Comfortable Private Limited in respect of IT engineering service received by it. First part, what is the date of invoice? What is the date of invoice? 5th November is the date of invoice. If 5th November is the date of invoice, within 180 days, they should have made the full payment. You please count 180 days from 5th November. In November, 25 days. Please count. Take your calculator. In November, 25 days. In December, 31 days. January, 31 days. February, 28 days. March, 31 days. How much? By March, 146. Correct? And then April plus 30, 176. And then May. Somewhere in May only 180 days will expire. Correct? Pa? So somewhere in May only 180 days will expire. And are they making the payment within 180 days from the date of invoice? No. They are making payment on 6th July of next year, which means they have not made payment within 180 days. Should they reverse the proportionate ITC? Yes. To what extent they need to reverse the ITC? Proportionate to the amount not paid. What is the total bill value? 11 lakh plus 18%. You take 11 lakh plus 18. Please take 11 lakh plus 18. That is 12,98,000. Out of the 12,98,000, how much is already paid? Minus 4,20,000. Because 4,20,000 in total they paid. That is not excluding GST. 4,20,000 in total. So that's why we are taking 12,98,000. 12,98,000 minus 4,20,000. What is the balance? In that, what is the GST component? In that, what is the GST component? Into 18 by 118. Into 18 by 118. How much? 1,33,932 rupees is what they need to reverse. Okay, Vapa. 1,33,932 rupees is what they need to reverse as ITC because they have not made payment within 180 days from the date of invoice. Again, as and when they make payment, can they re-avail that as ITC? Yes. And interest also is payable here, but they did not ask about the interest computation. If they ask about the interest computation, you need to do the interest computation. Is it clear? They did not ask compute the interest like that. They did not ask. They are just asking examine the availability of ITC. So first they need to reverse that ITC. Again, as and when they make the payment, they can re-avail that ITC. Okay. So this is a question related to that 180 days condition. Then next, look into question number 17. Messrs. Diwan and Sons of New Delhi has placed an order for 250 kg of plastic granules at 50 rupees per kg exclusive of GST on Messrs. Karim Brothers of Noida, Uttar Pradesh. Karim Brothers has agreed to deliver the goods at the warehouse of Diwan and Sons at New Delhi. While the order was getting packed at the factory of Karim Brothers, Diwan and Sons got an order from Shubkamna Sales of Hapur, Uttar Pradesh for 250 kg of plastic granules at 60 rupees per kg exclusive of GST. In order to save on transportation cost, Diwan and Sons asked Karim Brothers to deliver directly to Shubkamna Sales, bill to ship to. So what happened here? First, Diwan and Sons is the supplier pa. That is, they have placed the order with whom? With Karim Brothers. So here Karim Brothers is the supplier, and who placed the order? Diwan and Sons. And to whom the goods are delivered? Shubkamna Sales. Shubkamna Sales, the goods are delivered. Means Karim Brothers will raise invoice to whom? Diwan Sons only will raise invoice to Diwan Sons, even though they deliver the goods to Shubkamna Sales. Now, can Diwan Sons take ITC? Yes. The date on which Shubkamna Sales received the goods, it is deemed that Diwan Sons has availed the ITC. I mean, they have received the goods and they can take ITC. What is the invoice raised by Karim Brothers? 250 kg granules at 50 rupees per kg. Please compute 250 into 50 into 18%. How much? So 2250 will be taken as ITC by Diwan and Sons. Correct? Then again, what Diwan and Sons is doing? Diwan and Sons is raising invoice to Shubkamna Sales. Correct? Now, can Shubkamna Sales take ITC based on the invoice of Diwan and Sons? Yes. For what amount? Diwan and Sons is raising invoice 250 kgs into 60 rupees per kg. So 250 into 60 into 18%. How much? So 2700. So Shubkamna Sales can take ITC based on the invoice raised by Diwan Sons. Remember, in bill to ship to transaction, there will be two supplies. One is between the supplier and the billing address. Second one is between the billing address and the shipping address. Original supplier and billing address, one invoice. Billing address and shipping address will be another invoice. Is it clear? That is with respect to this. And okay. So remaining is related to this blocked credits and other points. We will see this after break. So we will take a break and then we will continue with the remaining portion. Okay, we will try to complete it because we are left with only 17.5 and section 18. With that, input tax credit will be over. Okay. Okay, we'll start. Say this. Blocked credit 17 subsection 5. We have three block credits. One is motor vehicle related block credit. Second one is construction related block credit. And the third one is other block credits. First look into motor vehicle related block credits. Motor vehicles are divided into three. Motor vehicles for transporting persons, vessels and aircrafts, and other motor vehicles. Other motor vehicles like trucks, lorries, etc. will always be available for ITC. Here others refers to other than transportation of persons, vessels and aircrafts, all other motor vehicles. So it can be dumpers, tippers, tankers, road rollers, JCB, crane, every other kind of motor vehicle ITC available. Whereas in case of motor vehicle for transporting persons, we need to see the capacity. If the capacity exceeds 13, ITC always available. Example, buses and tempo travelers, etc. Capacity exceed 13, so they can take ITC happily. If the capacity does not exceed 13, then it is a block credit. However, we have three exceptions. Number one, if it is used for further supply, means I am buying and selling motor vehicles, I can take ITC, that is a further supply. Or I am buying and renting the motor vehicles, then also I can take ITC. Used in the business of transportation of passengers, that is I am buying the motor vehicle and I am running it as a travels, like used in the business of transportation of passengers means Ola, Uber, etc. Then also I can take ITC. Number three, driving schools. So these three exceptional cases ITC available and all other cases ITC not available. Whereas vessels and aircrafts, we have these three exceptions and extra one more point. So that is, I have purchased some vessel and aircraft and used in the business of, like further supply or business of transportation of passengers or driving schools or used for transportation of goods. Then also I can take ITC. Example, I purchased a ship and that ship is used to transport the goods manufactured by me from one location to another location. Definitely I can take ITC because it is used for transportation of goods. And these courier companies like First Flight Couriers, Blue Dart, etc. they buy the flight for transporting the courier parcels. Definitely they can take ITC because used for transportation of goods. And in other cases ITC not available. For example, a chartered accountant purchased a motor vehicle and that motor vehicle is like car, he purchased a car. Whether he can take ITC? No, because car will come under for transportation of persons, capacity does not exceed 13 and not covered under exceptions, therefore ITC not available. Then like that we need to interpret and decide. Second chart you need to see with respect to services in relation to motor vehicle. What are the four services? Repair and maintenance service, insurance service, servicing means authorized service center, hiring, renting and leasing of motor vehicles. We have received four services: repair and maintenance, insurance service, servicing of motor vehicles, hiring, renting and leasing of motor vehicles. If these four services are in relation to motor vehicles, vessels and aircraft, if the motor vehicle, vessel and aircraft is eligible for ITC, then on these four services ITC available. If the motor vehicle, vessel and aircraft is not eligible for ITC, then on these four services whatever GST paid cannot be taken as ITC. And while determining the capacity, driver seat should be included. Means this capacity exceed 13, does not exceed 13 is including the driver seat. Then further supply includes purchase and sale of motor vehicles or motor vehicles used in the business of renting. I told you, if I am buying and selling motor vehicles, I can take ITC because that comes under further supply. Or if I am buying and renting that motor vehicles, then also I can take ITC because further supply means not only sale but also renting. Then repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. What is that? You purchased a vehicle and that particular vehicle met with an accident. Now you give that vehicle to the garage, workshop. The workshop will do the repair with respect to that vehicle. Now in that case, the invoice will be raised to the insurance company because the garage will not raise invoice to you. The garage will raise invoice to the insurance company because the vehicle is a newly purchased vehicle. It is covered under the insurance. Now can the insurance company take ITC with respect to this repair expenditure? Definitely yes, they can take ITC with respect to that. We don't have any restriction. Repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. But very important point is that the invoice should be in the name of the insurance company. So say this. There is a clarification in this regard. Whether ITC is available to insurance companies on the expenses incurred for repair of motor vehicles. There are two types of models. One is cashless model, another one is reimbursed mode of settlement. Cashless model means you are the insured, means you are the owner of the vehicle and you go and give it to the garage, and the garage will not charge 1 rupee. The service center will not charge 1 rupee from you. They will raise invoice to the insurance company and directly collect the money from the insurance company. So in that case, completely the money is paid by insurance company, the invoice also in the name of insurance company, and the insurance company can take ITC. Whereas reimbursement mode, in reimbursement mode what will happen? First you will make the payment and insurance company will reimburse it to you. Then in that case, what is the treatment? Simple. First we need to see, that invoice is in whose name? Invoice is in insurance company name? Yes. Then definitely insurance company can take ITC even though it is reimbursement mode. So reimbursement mode of claim settlement, insurance company can avail ITC even though expenses are originally incurred by whom? Expenditure is originally incurred by the insured. You incurred, and in turn you have got the money from insurance company. Means insurance company did not directly make payment to the workshop. Even then they can take ITC. Insurance company can avail ITC even though expenses initially incurred by insured. However, main important condition is what? Invoice for repair should be in the name of the insurance company. Sir, in this case, won't that 180 days point is applicable? No. So usually you have to make payment within 180 days, then only you can take ITC. But here the insurance company made payment. To whom they made payment? To the insured they made the payment. They did not make payment directly to the workshop, but they made payment to the insured. Definitely they can take ITC with respect to that. Suppose if the repair cost is beyond approved claims, that is, if the repair expenditure is 1 lakh and the insurance company has borne 80,000 rupees, then how much ITC can be taken by insurance company? Only to the proportionate of 80,000. Usually entire repair expenditure insurance company will not reimburse. Suppose if 80,000 is reimbursed out of 1 lakh, proportionate to 80,000, whatever is the GST paid, that alone can be taken as ITC. ITC to the extent of amount reimbursed by the insurance company, but not the entire repair cost. Then suppose if the invoice is in the name of the insured, then what about that? Then insurance company can never take ITC. Can the insured take ITC? Depends. If the motor vehicle purchased is eligible for ITC, then the repair and maintenance they can take ITC. If the motor vehicle purchased is not eligible for ITC, they cannot take ITC on repair expenditure. This is when if the invoice is in the name of the insured. Then whether ITC available on the demo vehicles. Usually some dealers will buy the demo cars and they use the demo cars for test drive, and then they will make the sale of the vehicles. Now in this case, can they take ITC with respect to the demo vehicles purchased? Yes, even though the demo vehicles are not used for further supply, but this will indirectly promote the sales. Due to that reason, ITC is available. ITC available on demo vehicles if they are used for promoting further supply of vehicles. Suppose if demo vehicles, and here demo vehicles purchased by dealer will be not stock in trade, that will be their capital goods. The usual vehicles which they buy for selling, that is only their stock in trade. But this demo vehicle which they are purchasing is not their stock in trade. They will buy it and use it in trial runs, use it for test drive, and thereafter, after some years they will be selling it. So that's why they will capitalize it. But while capitalizing it, what is the important point they should keep in mind? They should capitalize at the invoice value excluding GST. If they capitalize at invoice value including GST, they cannot take ITC. See this, if demo vehicles are capitalized, ITC is available unless depreciation under section 32 is claimed on the tax component. Also, sale of such capitalized demo vehicles, GST is payable in terms of 18(6). That is, whenever they are selling that capital goods, so they have to pay GST as per 18(6). What is this 18(6)? Whenever you purchase some capital goods on which ITC is availed, and that capital goods is sold, then you have to pay GST A or B, whichever is higher. But when 18.6 is applicable, concentrate. When 18.6 is applicable, you are purchasing some capital goods. At the time of purchase of capital goods, the GST paid is taken as ITC. Now the capital goods are sold. Then GST payable will be A, ITC avail minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on sale value, whichever is higher will be taken, and that is the GST payable. And look into this 18 subsection 6, which is in page number 113, GST payable under 18 subsection 6. Look into page number 113, when the capital goods are supplied on which ITC is availed. So first point, you are purchasing capital goods on which ITC availed and that capital goods are sold. Then GST payable shall be highest of the following. What is that highest of the following? ITC availed minus 5% for every quarter or part thereof. From when to when? From the date of invoice till the date of supply. Or B, GST payable on value of that capital goods, that is sale value of that capital goods, whichever is higher. However, if that capital goods are refractory bricks, if the capital goods are refractory bricks, bricks which are used in the factory for construction of kilns are called as refractory bricks. Molds and dies, jigs and fixture. Dies are used for bringing the product into requisite shape. Jigs and fixtures are for the purpose of holding the material. So these three, molds and dies, jigs and fixtures, refractory bricks, if it is sold as scrap, if it is supplied as scrap, then this section is not applicable. Then what we need to do? We need to pay GST on the sale value. In that case, GST is payable on normal sale value. So look into this question, you will understand. Capital goods purchased on 8/10/2019 for rupees 10 lakhs, excluding GST at 12%, and they were disposed of on 5/5/2021 for rupees 6 lakhs, excluding GST at 12%. Compute the GST payable. You tell me, what is the date on which it is purchased? 8/10. What is the date on which it is sold? 5/5/2021. You tell me how many quarters are part thereof. 8/10/2019 means October. So October, November, December, that is one quarter in 2019. In 2020, 4 quarters. In 2021, Jan, Feb, March, April, May, June. So part thereof. So total 7 quarters. For 7 quarters into 5%, how much? 35%. 7 5 are 35. 35% you need to reduce from the ITC avail. What does the provision says? ITC avail minus 5% for every quarter or part thereof from the date of purchase till the date of sale. So how much is ITC avail? 10 lakhs into 12%, 1,20,000. 1,20,000 minus 35%, that is 78,000, or GST on sale value. What is the sale value? 6 lakhs into 12%, that is 72,000, whichever is higher. How much is that? 78,000 will be taken as the GST payable. Then what will be your answer if such goods are not capital goods? If it is not capital goods, this section is not applicable. This 18.6 is not applicable. Then what we need to do? We need to pay GST on the normal sale value. What is the normal sale value? 6 lakhs into 12%, that is 72,000. Is that clear? Then look into the next part. What will be your answer if such capital goods are disposed without consideration and the value determined under section 31 is 4 lakhs? Then what should we do in that case? First, we need to take sale value, that is ITC minus 5%. Same. Sir, still it is capital goods only, sir. Even though it is sold without consideration, but we need to determine the value as per rules. The value as per rules is 4 lakhs. Same, ditto, no change. A, ITC avail minus 5% into 7 quarters, 78,000. B, instead of actual sale value, you take the market value of that particular product disposed of, that is 4 lakhs into 12%, 48,000, whichever is higher. Which is higher? 78,000. Then 3, what will be your answer if such capital goods are disposed of without consideration and the value cannot be determined under rules? then in that case what we should do? We don't have B part. So we cannot determine the value. So B is not there. Sale value into GST not there. Only A part is there. So GST payable will be nothing but 78,000. This B part cannot be determined. Then 4. What will be your answer? If such capital goods are sold after 5 years, A part will become 0. How A part will become 0? 5 years means how many quarters pa? 1 year 4 quarters. 5 into 4 20. 20 into 5%, 100%. Means A will become ITC avail minus 100%, so that will become 0. And B will be sale value into GST, whichever is higher will be 72,000. Then what will be your answer? If they are refractory bricks which are sold after 4 years as scrap for a value of rupees 1 lakh, for refractory bricks, molds and dies, jigs and fixtures, what we should do? We need to take sale value into GST. That's it. Don't compare ARB, whichever is higher. Just take the sale value into GST, that is the GST payable. Is that clear, pa? Now, whenever you are buying the demo vehicles and the demo vehicle is being sold, so when you sell the demo vehicle in future, whenever this new model of that vehicle is launched, we will be selling the demo vehicles. So when we sell the demo vehicles, in that case, we need to pay the GST as per 18.6. So come back to page 105. You understood how to compute? So same, demo vehicle you purchased, initially whatever GST you paid, minus how many years you used, depending upon that the quarters, into 5%. B, GST on sale value of the demo vehicles, whichever is higher. And if the demo vehicles are used for non-business purpose, the dealer is using the demo vehicle for his personal purpose. Whether he can take ITC? No, they cannot take ITC. Also, as a part of marketing services for the manufacturer, that is, they appoint some agents, and these agents will do the promotion of the vehicle. For that, they will buy one demo vehicle. Example, in this malls and all, if you see, they will be keeping the demo car, and they will be agents, not the dealers. And will they give it for test drive? For example, Phoenix Mall, if you see, lot of cars are there. Can we take the car and do the test drive inside the mall? Like a Beast movie, we can go throughout the mall and come. No, not possible, correct? So therefore, it will be not for trial run. It's not for test drive. So it is just as a marketing they are doing. Can they take ITC in that case? No, they cannot take ITC in that case. If the demo vehicles are used for non-business purpose or as a part of marketing services for manufacturer, ITC is blocked. Then next, look into one more point. Repairs point we discussed. Fourth point, you see, hiring or renting of leasing of motor vehicles. Hiring, renting, leasing of motor vehicles as a statutory obligation by employer to employee is also eligible for ITC. Concentrate. I am taking a motor vehicle on rent. Can I take ITC? Yes. If the motor vehicle purchased is eligible for ITC, then hiring, renting and leasing of motor vehicle is also eligible for ITC. If the motor vehicle purchased is not eligible for ITC, hiring, renting and leasing of motor vehicle not eligible for ITC. Example, if I am purchasing a bus for transporting my employees, I can take ITC because the bus capacity is more than 13, capacity more than 13. So instead of buying the bus, if I take the bus on rent also, I can take ITC with respect to that bus. However, if I buy a car which is used for transportation of my employees, I cannot take ITC on the car purchase because car is capacity does not exceed 13, not covered under the exceptions. I cannot take ITC. So instead of buying the car, if I take the car on rent, then also I cannot take ITC. Is it clear? However, I am taking the car on rent in order to transport my employees under a statutory obligation. That is, I have to provide cab facility to my employees who are working in the night shifts. Because of that, I have received rent-a-cab service. Can I take ITC? Yes. Say this. So, hiring, renting or leasing a motor vehicle as a statutory obligation by employer to employee is also eligible for ITC, and statutory obligation can be under any law. Then ambulance and caravan are not motor vehicles for transportation of persons, then where it will come? It comes under other motor vehicles. Why? Because ambulance is not a motor vehicle for transportation of persons. It is for providing first aid during the travel. So it comes under other motor vehicles, ITC available. Same way, caravan, where these actors and all use that for changing their dress, taking rest, etc. That is like temporary accommodation, that will not be treated as motor vehicle for transportation of persons. So ITC is available in that case. Clear pa? So we completed motor vehicle related block credit. Now look into the second area, that is construction related block credit. In this construction related block credit, so there are three inward supplies which are received by a promoter or builder. Any service received or works contract service or goods purchased or received in relation to construction of an immovable property, ITC not available. What are the three block credits pa? Any service like construction service, interior decoration service, etc. Then works contract service. Then any goods purchased like cement, bricks, etc. used for construction of an immovable property, ITC not available. It's a block credit. Okay. However, we have three exceptions. In these three exceptions, we can take ITC. Exception number 1, if these are inward supplies of a builder, they are not using it for their own construction. Suppose if the owner of the building is buying this, they cannot take ITC. If the builder is receiving it for providing the construction service, they can take ITC. Is it clear? So read there. The above discussion is not applicable to supplier. That is, if a works contractor receives construction service for construction of an immovable property, then ITC can be availed on construction service. Then second, construction of plant and machinery, even though immovable, ITC is available. Second exception is what? Plant and machinery. But remember pa, plant and machinery excludes telecommunication towers and pipelines laid outside the factory gate. Then 3, if the construction expenditure is charged to P&L, then also ITC can be availed on above inward supplies. So instead of capitalizing the construction expenditure, if it is charged to P&L means what? Which means that it is renovation expenditure. Renovation expenditure will not be capitalized, it is charged to P&L, then ITC can be availed. So what are the three exceptions? Come on. The restriction is not applicable to the owner of the property. The restriction is only to the owner of the property, not to the builder. And number 2, suppose if the construction expenditure is for plant and machinery, they can take ITC, and plant and machinery excludes telecommunication towers and pipeline laid outside factory gate. Number 3, if the construction expenditure is charged to P&L, then also they can take ITC. And this part is not applicable, just leave it, not there. Now, whether ITC available on ducts and manholes used in network of optical fiber cable. Usually, telecom companies will lay down the ducts and manholes like this for the purpose of providing the optical fiber cable network. Now, in this case, that is usually thick cables and all will be laid down beneath the ground. For that, they create the duct pipes and manholes. Can they take ITC for construction of these ducts and manholes? Yes, because first of all, it is not covered anywhere in the block credit. It is not construction of immovable property. It falls under plant and machinery. But sir, plant and machinery exclude telecommunication towers. Yes, but this ducts and manholes is not actually telecommunication towers or not pipeline laid outside factory gate. Due to that reason, ITC available. Is it clear pa? So see there, ducts and manholes which are integral part of the optical fiber cable qualify as plant and machinery and can avail ITC on the same, even though used by the telecom companies, as only telecommunication towers are excluded from the meaning of plant and machinery. Even they do not fall under pipeline laid outside factory. Then see the next one. Only hiring, renting and leasing of motor vehicle is blocked ITC. However, leasing of other items is not blocked ITC. For example, we are taking building on rent. Can we take ITC? Yes. And if we are taking furniture on rent, camera on rent, computers on rent, can we take ITC? Yes. The restriction is only to the motor vehicles. Then works contract is confined only to immovable property. And ITC available on construction of pipelines inside the factory. The restriction is only if the pipelines are outside the factory. If the pipelines are laid inside the factory, ITC available. Also ITC available on 2-wheelers or 3-wheelers with capacity up to 25 cc. Up to 25 cc means it is like cycle with one motor fixed. So that is not eligible for motor vehicle, that will not come under motor vehicle definition. So they can take ITC. Remember, up to 25 cc is not motor vehicle. Can they take ITC? Yes, they can take ITC. For minimum to minimum, what vehicles you see in the reality is 100 cc per. Activa, Access, all these are 100, 125 cc. 25 cc means usually bicycles will be there. For that bicycle, one motor they will fix. That is only up to 25 cc. Okay. Then look into other blocked credits. Other block credits, membership of a club already we discussed. Membership of a club, health and fitness center is block credit. However, if it is incurred by employer to employee under a statutory obligation, they can take ITC. Same way, travel benefits extended to employees on vacation is blocked credit. However, if it is by employer to employee under a statutory obligation, they can take ITC. Then number 3, non-resident taxable person. Who is a non-resident taxable person? A person who is coming from outside India to India and is not having any physical place of business in India is an NRTP. Example, so these cricketers who come from outside India to India to participate in the IPL matches will be coming under NRTP, and whether they can take ITC? No. Are they required to get registered? Yes. They need to get compulsory registration, but while coming to India, they will be bringing their kit and all now. On that kit, whatever GST is paid, that can be taken as ITC. So NRTP, on import of goods by NRTP, they can take ITC. Then food and beverages, outdoor catering, beauty treatment including cosmetic, plastic, hair transplantation, life insurance and health insurance. Remember, 3 inward supplies. Number 1, related to food. Number 2, related to beauty. Number 3, related to insurance. Food, beauty, insurance. Food, too much you eat, beauty will get spoiled and insurance is required. Okay. Food, beauty, insurance. Food, beauty, insurance. Related to food, what and all? Food and beverages, outdoor catering. Related to beauty treatment. So cosmetic surgery, plastic surgery, hair transplantation, all kind of beauty treatment expenditure. Number 3, insurance. What insurance? Health insurance or life insurance. These 3 are inward supplies which are blocked credit. However, we have 3 exceptions. Exception number 1. If inward supply, outward supply in the same category. What is that? For example, I am into the sale of food and beverages. I buy the food and beverages, then I can take ITC. That is inward, outward are same. Then inward is part of composite or mixed outward supply. Example, airlines provides transportation of passengers. As a part of providing transportation of passengers, they are also giving food to the passengers. For giving food to the passengers, they receive the food and beverages. Can they take ITC with respect to that? Yes. That is, inward supply is part or component of composite or mixed outward supply. Then next number 3, provided by employer to employee under a statutory obligation. That is, employer has received, like say as per Factories Act, the employer has to mandatorily provide food to their employees, because of which they received outdoor catering service. Can they take ITC? Yes. So tell me what are the 3 exceptions, Pa. First, what are the 3 block credits in this point? Food and beverages, beauty treatment, related to food and beverages, outdoor catering. Related to beauty treatment, cosmetic surgery, plastic surgery, hair transplantation. Related to insurance, life insurance and health insurance. These are block credit. However, 3 exceptions. What is that? Inward supply, outward supply is same. Inward supply is part or component of outward supply, and if it is provided by employer to employee under a statutory obligation. Then balance, suppose you are having purchases from a person opting for composition scheme, that's a block credit. Or if you are having inward supply for personal consumption, that is also block credit. Or if you are having some inward supply for use in relation to obligation under CSR. For CSR obligation, if you buy anything, for example, as per Companies Act 2013, so CSR expenditure needs to be spent by the corporates. For example, if they are spending, so by way of buying the blankets to below poverty line people, so that is under CSR, they are distributing the blankets. Who? Company. For distributing the blankets, they have to buy the blankets now, and they are purchasing it. At the time of purchase of blankets, GST is paid. Can they take ITC with respect to that? No. Because for use in relation to obligation under CSR, they cannot take ITC. The next point, you purchase some goods and those goods are lost, stolen, destroyed, written off or disposed of by way of gifts or free samples, then also ITC not available. Purchased goods are lost, stolen, destroyed, written off. That may be because of natural reasons or abnormal reasons. So that can be because of any natural calamity. If the goods are lost, ITC not available. However, even if the purchased goods are disposed as gifts or free samples, also ITC not available. But remember one point, if the disposal of gift or free sample is supplied, then we can take ITC. Example, there is an employer who purchased an iPhone and given it to the employee. As a value of iPhone exceeds 50,000, it will become supply. So for purchase of that iPhone, he will buy from the shop. On the GST paid can be taken as ITC. Is it clear? Same way, if the employer gives Android mobile which is 30,000 rupees to the employee, that is not a supply. So for purchase of that Android mobile, GST paid can be taken as ITC or cannot be taken as ITC? Cannot be taken as ITC. See this. If gifts are free samples treated as supply under 71C, then ITC is not required to be reversed on inward supply. Then this point is not there. This 74, 129, all these things are not there for you, leave it. Then whether ITC is available on goods purchased for free replacement during warranty period. That is, I am replacing some goods during warranty period. For replacement of goods during warranty period, I purchase some parts or goods. Can I take ITC on that? Yes, I can take, because if I am doing replacement during warranty, that even though I am giving it for free, but it is a part and parcel of the supply. So therefore, I can take ITC. Example, I am a car dealer. I sold a car to you. Now, in that car, there is one reverse parking sensor not working and it is covered under warranty period. You brought that car to me. So now what I need to do, the parking sensor I need to replace. For replacing the parking sensor, I will buy that part. Can I take ITC on the part purchase? Yes, I can take ITC on the part purchase. Second example, you are purchasing one rechargeable torch from a electronic shop and the torch was working fine. You took it to the home. You did a recharge. Next day it is not working. So again what you will do, you will return the torch and the electronic shop will give you a new torch. Correct? Means they have to buy a new torch and replace it. Can they take ITC on the new torch purchase? Yes. Remember this word. Remember this word. Any goods or parts purchased by a person for replacement during warranty period, ITC available. Got it? Any parts or any goods purchased by a person for replacement during warranty period, they can take ITC. Whether a part or entire product is replaced during warranty, ITC can be availed on goods purchased for warranty, irrespective of whether any consideration is charged or not with respect to such warranty repairs. Then next, where distributor uses his stock for replacement, manufacturer replenishes the stock on which manufacturer can take ITC. Now, I am not a dealer. I am the manufacturer. You are the dealer. You are replacing it. Please concentrate. You are replacing it. What I did, I supplied that part to you. You are the dealer, you did the replacement. I supplied that part to you. I am the manufacturer. Now I will buy the part. Can I take ITC? Yes. Whether manufacturer is replacing or distributor is replacing, whomsoever purchasing the part, they can take ITC. Is it clear or not? Then next, amount paid for the extended warranty. What is the treatment? What is this extended warranty means? Sometimes for purchase of electronic goods, so they will be giving us an option. If you pay 5,000 extra, if you pay 10,000 extra, you will get the extended warranty like that. Correct? So now in that case, what is the treatment of this extended warranty charges? Please concentrate. If you pay that extended warranty charges at the time of purchase of the product from the same dealer, at the time of purchase of product from the same dealer, then this particular extended warranty will be chargeable at the rate applicable to the product. If same time, same dealer, same time, same dealer, same time, same dealer, same rate. Okay, wow. Same time, same dealer, same rate of the product. Suppose same time, different dealer. Same time, different dealer, you are paying for additional warranty. Now what is your answer? Individual transaction, that is not treated as composite supply. So the rate of original product will not be taken. Suppose different time, different dealer, again individual supply. You got it? Different dealer, different time, different dealer, different time, individual supply, and same dealer, different time, then also individual supply. So see this, read these 2 points. Amount paid for extended warranty taxable at the same rate applicable to goods if the warranty is taken from the same supplier at the same time. Example, TV is 28%, TV 28%, warranty 18%. Tell me, if you are buying the TV at the same time, you are paying for warranty also from the same dealer, then what is the rate applicable to warranty? The rate applicable to TV, that is 28%. So is taken from the same supplier at the time of purchase of goods. If the amount for extended warranty is paid to another supplier, then it is treated as separate supply. Then TV will be taxable at 28% and warranty will be taxable at 18%. Understood? Then suppose if the amount paid for extended warranty after purchase of goods, then it is treated as different supply, whether purchased from the same supplier or different supplier. Is it clear? Then look into the next one. Related to this, I have given at the end issue number 3, page number 119. Issue number 3, page number 119. Please take page number 119. Amount paid for the extended warranty, whether you are paying it at the time of original supply to the same person, yes, then treat it as composite supply and taxable at the rate applicable to principal supply. In all other cases, what is other cases? At the same time from different supplier, correct? Or different at the same time, from a different supplier, or different time from the same supplier, or different time from different supplier. In all these 3 cases, it is treated as a separate supply and chargeable to GST at the rate applicable to warranty. This is the example I gave. MI manufacturer, TV 28% and extended warranty 18%. Now, situation 1. MI retail showroom sells television along with extended warranty for 28,000. Television 26, extended warranty 2,000. Now tell me, this entire 28,000 is taxable at what rate? At the rate applicable to TV, that is 28%. In all other cases, so TV will be 28%, but this extended warranty 2,000 will be taxable at 18%. Is it clear? Then next, so this circular you see, replacement of parts during warranty period, page number 116. Page number 116. What is it I told you? Generally, any part is purchased and replaced during the warranty period, or any goods are purchased and replaced during the warranty period, we can take ITC on the part or goods purchased, correct? And whenever we do the replacement during warranty period without charging anything, don't invoke 71C. It will not come under disposal of business asset on which ITC avail. Please see this. Usually, goods sold are under the condition that it shall be replaced or repaired on account of defects during warranty period. Reversal of ITC shall not arise even if such replacement of parts or goods is without any consideration. And section 71C not required to be invoked. If any consideration is charged, sometimes for replacement of that part they will collect some nominal amount. So in that case, it is supply under 71A and GST payable on that nominal amount collected. But again, reversal of ITC will not arise in this case. Means you can enjoy the ITC on the goods purchased which are replaced during warranty period. For example, you see this. Sleek modular kitchen supplier provided the interior decoration service to Mr. X, and for which Mr. X pays a consideration of 8 lakhs plus GST at 18%. Now, what happened? There is some issue with respect to the, one part, and for which Sleek purchased that part for replacement to customer during warranty period, and the price of that part is 50,000 plus GST 6,000. Now, can they take ITC of the 6,000? Yes, without doubt they can take ITC of that 6,000 because they are replacing the part during the warranty period. Is it supply or not a supply? Not a supply. And whether they need to reverse that 6,000 rupees? No. 2 points you need to remember. Number one, they can enjoy the ITC, and when they replace the part during warranty period, it is not a supply. Then issue number 2, Lanson dealer, little bit you please focus, please concentrate. Lanson dealer is making sale of car including warranty for 3 years to Mr. X, and Mr. X paid 15 lakhs plus GST, and Lanson dealers gave 12 lakh plus GST to the car manufacturer. Now, usually they do free after sale service, and for that free after sale service, who should bear the cost? The dealer will do free after sale service, but who will bear the cost? Manufacturer. Means first dealer will do free after sale service. Did you buy any two-wheeler? When you buy the two-wheeler, you give it for free after sale service, correct? Are they charging any money from you? No, because they get the money from the manufacturer. Say, in this case, the dealer did the free after sale service of 3,000 rupees, and they also replaced the part during the warranty period for 2,000. So you brought the car for the first service. When you brought the car for the first service, what they did, so they replaced when you brought the car for the first service, they replaced one part, and they are also doing free after sale service. Now, let's see what will happen in this case. Situation number 1, please concentrate. First, you step into the shoes of a dealer. I will step into the shoes of a manufacturer. Okay, please concentrate, please listen. I am the manufacturer, you are the dealer. I will be, not supplying you the part. You are the dealer. You have to do the replacement. So you buy the part from the market and you do the replacement. In that case, what is the consequences? You tell me, just step into the shoes of the dealer. What you are doing first? First you purchase the part from the market. What is the price of the part purchase? 2,000. On the 2,000, say 18% GST you paid. So 2,000 into 18% is how much? 360. Can you take that 360 as ITC? Yes. And you are doing replacement during warranty period, and you are not required to pay any GST on that. Correct? Now, how much you will recover from me? You are a dealer. How much you will recover from me? That part 2,000 rupees plus after sale service 3,000 rupees. So, how much you will recover from me? 5,000. Because I am manufacturer, you will recover that from me. You purchase the part, that also you have to recover from me na. So, 5,000 rupees plus GST 18%. So, 5,900 you recover from me, and that 900 you will pay GST to government. Is that clear? From whose perspective? Dealer's perspective. Please read from dealer's perspective. Dealer will raise invoice for recovery of cost. What is the situation? The dealer procured part for replacement by third party and charged the consideration from manufacturer. Now, invoice will be raised by the dealer for recovery of cost from manufacturer, after sale service 3,000, replacement of part 2,000, so total 5,000, and GST will be 900, and the invoice value will be 5,900. Is it clear? And you pay GST to government 900 rupees, and you purchase a part. On that part, 2,000 into 18, 360, you can take as ITC. No need to reverse ITC in case of replacement of parts. Over par. Then from my point of view, you tell me what should I do? Manufacturer, what should I do? You raise the invoice for 5,900. I will pay 5,900 to you, and that 900 rupees I will take as ITC. As simple as that. So manufacturer shall pay 5,900 to the dealer, and that 900 rupees can be taken as ITC by manufacturer. This is situation 1. Situation 2. Please listen. You are not buying the part from the market. You are not buying the part from the market. I am giving you that part. I am giving you that part. Which means how much you recover from me now. See, first you have to buy the part, but you are not buying. I gave you that part. Okay, manufacturer gave you that part which you did the replacement. Now how much you will charge from me? 3,000 or 5,000? 3,000 plus 18%, that is 3,540 you raise invoice to me, and that 540 you pay GST to government. Over. See that dealer will raise invoice only for 3,000, GST 540 and 3,540. As a manufacturer, what should I do? First I am buying the part. In this case you are not buying the part, manufacturer is buying the part. Can the manufacturer take ITC on the part purchase? Yes. And the manufacturer paid 3,540. Can that 540 also be taken as ITC? Yes. So manufacturer will pay 3,540. That 540 can be claimed as ITC, and even this 360 also can be claimed as ITC, and no reversal of ITC is required to be done by manufacturer. Situation 3. Please concentrate. I am sending you 100 numbers. I am sending you 100 numbers of the part. Means 100 numbers, 100 units I have sent to you initially. Each unit or each part will be 2,000. Means how much I would have raised invoice to you? 2 lakh plus 36,000. How 2 lakhs per 100 into 2,000, 2 lakhs plus GST 18%. I will raise you invoice for 2 lakh 36,000. On that first you will take ITC 2 lakh 36,000. 36,000 you take ITC. Correct? Now you are dealer. Now what you are doing? Out of that 100 units, one part you are taking and replacing. Means you will pay me only for 99. Sir, anyhow I have to send you that part. I am telling you, you take out of that inventory what you have, you take and you use it, which means you will pay me for 99 units or 100 units. 99 units, which means I need to give you a credit note for 1 unit. Is it clear? Manufacturer is required to give you credit note for 1 unit. That is 2,360 I will give credit note. To that extent, you have to reverse the ITC. First, initially you took 36,000 as ITC. When I gave you credit note, already I told you, whenever supplier gives a credit note, the recipient should reverse the ITC. So you need to reverse the ITC accordingly. Say this, first dealer will pay 2,36,000 to manufacturer, and ITC can be claimed by dealer 36,000. ITC must be reversed by the dealer based on the credit note issued by the manufacturer, that is 360. And now how much you will recover from me? Only 3,000 plus GST 18%, that is 3,540, and you will pay 540 to government. Now from my side you tell me, what will I do first? First I will raise an invoice for 2,36,000 and I will pay 36,000 liability. Then I will give a credit note for 2,360. To the extent of 360 my liability get reduced. To the extent of 360 my liability get reduced. And you will raise me invoice for 3,540. On that 540 I will take ITC. Instead, what will happen? That 100 units I send initially, out of that 1 unit you took and you use it. So what I will do? I will replenish that 1 unit. Means I will refill that 1 unit. So instead of raising you a credit note, what other alternative I have? I will refill that 1 unit. When I am refilling that 1 unit, what is the treatment in that case? When I am refilling that 1 unit, I am sending that 1 unit to you. So this is not a supply. So for dealer, it is not a supply. Movement of goods under delivery challan. Manufacturer no need to pay GST, and reversal of ITC shall not arise in respect of the part replaced. Is it clear, Pa? That's it. So related to this circular we discussed, and look into some questions on this. Take question number 13. Take question number 13. Take question number 13. Harshigit Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information pertaining to purchases made or services availed by it during the month of July. Raw material to be received in the month of September. Right now they are in July. Can they take ITC? Why? Only on receipt of goods they can take ITC. So in this case I cannot take ITC now. Then membership of a club availed for employees working in the factory. Can they take ITC? Why? Block the credit. Membership of club, health and fitness center is block credit. Nowhere it is given as statutory obligation. So ITC not available. Then third, inputs to be received in 5 lots, out of which third lot was received during the month. Can they take ITC? No. Only on receipt of last lot they can take ITC. Truck used for transportation of raw material. Can they take ITC on the truck purchase? Yes, because it is other motor vehicles and ITC is available. Capital goods, out of 3 items, invoice for 2 items is missing and GST paid on those items is 18,000 rupees. So we cannot take ITC on that now, because one of the condition is that the person availing ITC should be in possession of tax paid document. If the invoice is missing, they cannot take ITC. So 1,50,000 minus 80, only to the extent of 70,000 they can take ITC. Determine the amount of ITC available, and 40 plus 70, 1,10,000. Then look into question number 14. Jamku Limited, a registered person, is engaged in business of spices. It provides the following details in relation to GST paid on inward supplies procured by it during the month of October. They purchased raw spices, and that raw spices purchased and sold to customers, used for personal use of directors. So sold to customers they can take ITC, yes, but used for personal use of directors they cannot take ITC, because any goods purchased and used for personal consumption, ITC not available. Then electric machinery purchased for being used in the manufacturing process. Can they take ITC on the electric machinery purchase? Yes, nowhere in the block credit, and it is used in the course or furtherance of business. Definitely they can take ITC with respect to that. Motor vehicle used for transportation of the employee. Can they take ITC? No, because motor vehicles is blocked credit, and here we don't have the capacity. So if given as capacity more than 13, then only it is ITC available. Otherwise it is capacity does not exceed 13, blocked credit and not covered under exception. Therefore ITC not available. Payment made to contractor for construction of staff quarter. Generally construction expenditure, what they will do? Charge it to P&L or capitalize it? Capitalize it. Generally what we will do, construction expenditure? Capitalize it. So ITC not available. Means ITC available only on 50,000 and 25,000, that is 75,000. Understood? Then next, look into question number 15. Dina Limited, a registered supplier from Maharashtra, is engaged in manufacture of passenger autos. The company provides the following details of purchases made or services available during the month of March. Purchase of iron, which is used as raw material. Goods were received in 2 installments, first in March and second in April. Right now they are in March. Can they take ITC? No, only on receipt of last lot. Purchase of accessories which were delivered directly to the dealers of the company on the direction of Dina Limited. Can Dina Limited take ITC? Yes, when the goods are delivered to a third person on the instructions of Dina Limited, the day on which the third person has received the goods or services, it is deemed that Dina Limited has received the goods or service and they can take ITC. Purchase of bus, seating capacity 15, no need to see further, we can take ITC because capacity more than 13 passengers. General insurance taken on car used by executives of the company for official purposes. Generally car purchased by a company, can they take ITC? No. As a car purchased by a company, they cannot take ITC. Insurance on that car also not eligible for ITC. 4 services: insurance, repair and maintenance, and service center, hiring, renting and leasing of motor vehicles. So only 90,000 and 1,97,000. So 12,87,000 is the ITC. Then look into question number 18. Question number 18. Fun Pharma Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information of GST paid on purchases made or input service availed by it during the month of September 2017. Purchase of cabs used for transportation of employees. What is your answer? Blocked credit, ITC not available. Inputs consisting of 3 lots, out of which first lot was received during the month. ITC not available. ITC available only on receipt of last lot. Capital goods, out of 3 items, invoice for 1 item is missing. We can't take credit. So 2 lakh 50 minus 25, 2 lakh 25,000. Then outdoor catering service availed on Women's Day. First, outdoor catering is a block credit. And is it statutory obligation? No. Is it inward outward same category? No. Inward part of outward? No. So ITC not available, not covered under the exceptions. So only 2,25,000 will be availed as ITC. Then question number 19. Canwin Limited, a registered supplier, is engaged in manufacture of tanks. The company provides the following information pertaining to GST paid on purchases made or input service availed by it during the month of January. They purchased a machinery where debit note is issued. Based on debit note, can we take ITC? Yes. Debit note is also one of the tax paid document for availment of ITC. Definitely we can take ITC on this 1,15,000. Input purchase was directly delivered to Mr. Joe, a job worker and a registered supplier. Sir, goods are delivered to job worker. Can we take ITC? Yes. When goods are delivered to a third person, the date on which they received, it is deemed that we received and we can take ITC. Computers purchase, depreciation was claimed on the said GST portion under Income Tax Act. Means you claim depreciation on full portion. Can we take ITC? No. Works contract service availed for construction of staff quarters. Usually construction will be capitalized and works contract is a block credit, so we cannot take ITC. So 1,15,000 and 80,000, 1,95,000 is the total ITC. Then look into question number 20. Granites Textiles Limited purchased a needle detecting machine on 8th July 2017 from Makija Engineering Works for rupees 10 lakhs, excluding GST, paying GST at 10% on the same. It availed the ITC of the GST paid on the machine and started using it for manufacture of goods. The machine was sold on 22nd October for 7,50,000 as second-hand machine to LT Private Limited. The GST rate on supply of machine is 18%. Now tell me, what will be the answer in this case? Sir, they are purchasing on which date? They are purchasing on which date? 8th July. And they are selling on which date? 22nd October 2018. See number of quarters that they have used. Because it is capital goods, machine per machine. They are purchasing the capital goods on which ITC avail and that capital goods are sold. So therefore we need to take ITC avail. What is the ITC avail? 10 lakhs into 18%, 1,80,000 is the ITC avail minus 5% for quarters, number of quarters. You count. July 2017 means that July, August, September is one quarter, October, November, December is one quarter. Again next year, Jan, Feb, March, April, May, June, July, August, September and October is also one quarter. So 6 quarters. 6 quarters. You understood? 2017 2 quarters July, August, September, October, November, December. Next year beyond September one more October few days is there. Count that also as one quarter. So total how many quarters? 6 quarters. 6 into 5, 30%. So 30% we need to reduce from 1,80,000. 1,80,000 minus 30%. You see how much? 1,80,000 minus 30%. How much? 1,26,000 or GST payable on that sale. 7,50,000 into 18%. What is 7,50,000 into 18%? 1,35,000. Whichever is higher. Which is higher? 1,35,000 on 1,35,000 rupees is the GST payable. Is that clear, pa? This question is on 18.6. Directly like this they will make a question. Then look into question number 21. Cloud7 Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information pertaining to GST paid on purchases made or input service availed by it during the month of February. Trucks used for transportation of raw material. GST paid 1,20,000. Can they take ITC? Yes. Why? Because trucks will be other than capital goods. That is other motor vehicles. Can we take ITC? Yes. Food and beverages for consumption of employees working in the factory. Statutory obligation, it is not under a statutory obligation. So blocked ITC we cannot take. Inputs to be received in 5 lots, out of which third lot was received during the month. No, we cannot take ITC because ITC only on last lot. Membership of club availed for employees working in factory. Block credit. Nowhere it is given that it is a statutory obligation. So ITC not available. Capital goods, out of 5 items, invoice for 1 item was missing and GST paid on that item was 50,000. Then only 3,50,000 they can take ITC. Raw material to be received in March. Right now they are in Feb. Can they take ITC? No. So therefore 1,20,000 and 3,50,000, 4,70,000 is the ITC. Clear here? So these are like 5 marks question. These are like 5 marks questions. And not only this, even in question number 1, also they will be testing about input tax credit. That is in that computation, compulsory question also there will be. And today, while you are leaving, collect the Mighty 50 book and go. And I have given some top 50 questions. And tomorrow we are not going to discuss that. Day after tomorrow we are going to discuss. I want to complete the portion first and then I will discuss that 90-50 questions. So that is the top 50 questions. In that I have included this 10 mark questions. Around some 2-3 questions I have included 10 mark questions. There we will discuss this. So all these points again get repeated there also. Okay. Next. Come back. So we will see 18 subsection 1, 18 subsection 2, page number 109 you take. Page number 109. The last section that we are left with is section 18, input tax credit in special cases. We saw section 41, availment of ITC, section 49, utilization of ITC, and then we have seen section 16, condition for availment of ITC, 17, apportionment of credit and block credit. Now look into 18 subsection 1. 18 subsection 1 talks about availment of ITC on closing stock. In order to make you understand easily, I just gave it in a chart form with numbers and dates. You see that 18(1)(a). What does it say? Total 4 places we can take ITC on closing stock. First, you commence the business on 8/8/2024 and you are liable to get registered on 1/10/2024. Means you might have crossed the threshold limit on 1/10/2024. From 1/10/2024, you need to make application for registration within 30 days. Check whether you have made application for registration within 30 days. Yes. 1/1/2024 to 25/10/2024, it is within 30 days. And the registration certificate is granted on 3/11/2024. Now, the law says from 1/10/2024, you are going to pay GST. Before 1/10, that is as on 39, you will have some closing stock. Using the closing stock only you are going to make supply from 1/10. So enjoy the ITC on this closing stock. Is it clear, pa? And at that time, during purchase time, you would not have taken ITC. Why you would not have taken ITC at that time? Because at that time you are an unregistered person. Now only you are getting registered. So whatever is the raw material as such held in stock, raw material in WIP held in stock, raw material in FG held in stock, 3 raw materials. What are the 3 raw materials? Raw material as such held in stock, raw material in WIP held in stock, raw material in FG held in stock. Which date you should see? 39/2024. And all these 3 raw materials should have been purchased within 1 year prior. Means closing stock date is what? 39/2024. Within 1 year backwards, it should have been purchased. And on that only, on obsolete stock and all they are not giving. They are giving the benefit only on that stock which is purchased within 1 year prior. And on these 3 raw materials, whatever GST is paid, the GST paid can be availed as ITC. And what is the time limit within which you need to avail the ITC? After you get the registration certificate within 30 days. After you get the registration certificate within 30 days, or it can be extended for a further period, you need to file ITC1 for availment of ITC on this. Inputs as such, inputs in WIP, inputs in FG. Okay, Papa? How to avail this ITC? One form is there, that is ITC1. and that ITC1 should be certified by CACMA if the claim of ITC exceeds 2 lakhs. If the claim of ITC exceeds 2 lakhs, CACMA certificate. If the claim of ITC does not exceed 2 lakhs, self-declaration. And whether matching is required or matching not required in this case. Matching not required in this case. Now, look into, so what is the situation 18.1a? You are liable to get registered and you made application for registration within 30 days. Now, look into 18.1b. 18.1b, you commence a business. You commence a business and voluntarily you are getting registered. What is the difference between 1A and 1B? 1A, you are liable to get registered and you made application for registration within 30 days. But in 1B, voluntarily you are getting registered. Now we need to see, before the date you get the certificate of registration, you take the closing stock. Say you commence a business on 8/8/2024, you made a voluntary application for registration and you got the registration certificate on 3/11. So before the date of registration certificate, you see what is the closing stock. That is, check the closing stock as on 2/11. As on 2/11, you see the closing stock, and in that closing stock, that is raw material as such, raw material in WIP, raw material in FG, and it should be purchased within 1 year prior. Same points. You can avail the ITC. Again, how you will avail ITC? Using the same form ITC1. What is the time limit within which you will avail ITC? Within 30 days from the certificate of registration or extended time. Again, here matching required or matching not required? Matching not required. And here, if the claim of ITC exceeds 2 lakhs, CACMA certificate, claim of ITC does not exceed 2 lakhs, self-declaration. Now I want you to read these two information and tell me what are the differences. 18.1a, 1b both appear same, but what is the slight difference that you can find between 1a and 1b? Situation. 1a, you are liable to get registered and you made application for registration within 30 days. But 18.1b, voluntarily you are getting registered. Second difference, 1a, closing stock before the date you are liable to get registered. But 1b, before the date you got the certificate of registration. Rest of the information is same. Then look into 18.1c. What is this 18.1c? There is a person who is under composition scheme. There is a registered person who is under composition scheme. Now he is going into regular scheme. And during the time when he was in composition scheme, he would have purchased something on which he would have not taken ITC, because one of the disadvantage of composition scheme is that person opting for composition scheme cannot avail ITC on inward supplies. Therefore, you are under composition scheme with effect from 1/10/2024, you are going for regular scheme, and before 1/10/2024, that is as on 30/9/2024, you would have some closing stock now. On that closing stock, whatever is that inputs as such, inputs in WIP, inputs in FG, even capital goods. So what is extra we have in 18.1c? Capital goods also. So raw material as such, raw material in WIP, raw material in FG. Whatever GST paid you can take as ITC. Capital goods also you can take ITC, but for capital goods we need to do a depreciation. Why? Because we would have used it now. So reduce it. How much we need to reduce? 5% for every quarter or part thereof. That's how we calculate depreciation for capital goods. Correct or not? In 18.6 already we discussed how you need to reduce 5% for every quarter or part thereof. So GST paid minus 5% for every quarter or part thereof from the date of purchase till the date of conversion. So this credit you can take. And what is the time limit within which you need to file this form? Within 30 days or extended time from the date you are migrating from which scheme to which scheme? Composition scheme to regular scheme. And what form? Same, ITC1. And if the claim of ITC does not exceed 2 lakhs, self-declaration. If the ITC exceeds 2 lakhs, CRCMA certificate. Now tell me, what is the difference you can find between 18.1a 1b versus this 18c? 18.1a 1b, matching not required, but here matching is required. 18.1a 1b, you will not get the credit on capital goods, but here you will get the credit on capital goods. 18.1a 1b, 18.1a 1b, so is not for a registered person. unregistered person who is now only getting registered, but 1C already you are a registered person. Okay, then look into the next one, 18.1D. 18.1D, there is a registered person who is making some exempted outward supplies with effect from 110. So his exempted supplies became taxable, which means during the time when he was making exempted supplies, he would not have taken ITC on his closing stock. So that we can take now, because at the time when he was exempted, he cannot take ITC on his purchases now, which is in closing stock. So we can take ITC now, because remember, when your outward supply is exempted, you cannot take ITC on your inward supplies. So at that time, the registered persons exempted outward supplies, so they would not have taken ITC, but now they are making taxable outward supplies, so they can take ITC. Again same, with effect from which date exempted became taxable, 110, and see the closing stock as on 39, and that should be purchased within 1 year prior. Ditto like composition scheme, raw material as such, raw material in WIP, raw material in FG, and even capital goods after reducing 5%, they can take ITC in ITC1 within 30 days or extended period from the date when your exempted supply became taxable. And how this ITC can be taken? Through ITC1, and if the claim of ITC does not exceed 2 lakhs, self-declaration. If it exceeds 2 lakhs, EACMA certificate. Now tell me what is the difference between 18.1C and 1D that you can find, 1C and 1D. 1C, situation, composition scheme to normal scheme. 1D, exempted supplies to taxable. Both cases, you need to see the closing stock as on the date of migration, correct? That is closing stock before the date of migration, remaining and all same. So that's what I have given as a comparative table. 18.1A, 1B, 1C, 1D, and 1A, 1B common, 1C, 1D common, and which date closing stock. Got it? This table will give you the difference between those 4 points. And in all these cases, how the closing stock should have been purchased. I mean, when the closing stock should have been purchased. The closing stock should have been purchased within 1 year prior. The above closing stock, including capital goods, should have been purchased within 1 year. Suppose beyond 1 year it is purchased, we cannot take ITC on that. ITC with respect to GST paid on inputs can be availed as ITC, but capital goods, ITC shall be GST paid minus 5% into number of quarters from the date of purchase till the date of migration. An electronic declaration in ITC1 shall be made within 30 days or such extended time, and this declaration will be certified by CACMA if the claim of ITC exceeds 2 lakhs. Then look into 18 subsection 3. 18 subsection 3 is applicable in case of transfer of business with specific provision for transfer of liabilities. Concentrate. I am transferring my business to you. Now whatever unutilized ITC I have in my business, that also will be transferred to you. So from my electronic credit ledger to your electronic credit ledger, the unutilized ITC gets transferred. But remember, this transfer of business should be with specific provision for transfer of liabilities. Means what? It should be amalgamation in the nature of merger. Means all assets and liabilities should be transferred. Is it clear? It's not just sale of assets only. All assets and liabilities should be transferred. Then in that case, ITC also will be transferred from my credit ledger to your credit ledger. Got it? And what is the form required in this case? I should file one form, that is ITC2. And this ITC2 should be certified by CACMA always. And what is that they will certify? That this transfer of ITC is with specific provision for transfer of liabilities, like that they need to certify. Say this: where there is a change in constitution of a registered person on account of sale, merger, demerger, amalgamation, lease or transfer of the business with specific provision for transfer of liabilities, the said registered person shall be allowed to transfer the ITC which remains unutilized in his electronic credit ledger to such sold, merged, demerged, amalgamated entity. And what is the form required for that? ITC2. And this ITC2 should be certified by CACMA. In case of demerger, how the ITC will be transferred? Because 1 unit to 2 units it will get split. Say AB Limited gets split into A limited and B limited. Then tell me how it will be transferred. What ratio? Assets ratio. We should see the assets ratio of A limited and B limited. In that assets ratio, it should be transferred. See that in case of demerger, credit shall be transferred to the new entities in the ratio of what? Net assets. Net assets means what? Total assets minus ITC. Total assets minus ITC. Whether ITC availed or not on such assets post demerger. Suppose if there is a death of sole proprietor, the business will be carried out by the successor. Now also can the ITC be transferred? Yes. Transfer or change in ownership of business will include transfer or change in ownership of business due to death of sole proprietor. Then next one, this is an important condition given in the portal. Transferor and transferee should be in the same state. For example, I am the transferor in Tamil Nadu, you are the transferee in Karnataka. Can I transfer the ITC? No. I can transfer my business, but I cannot transfer the ITC. So you should also be registered in Tamil Nadu. Transferor and transferee should be in the same state. And one more point, when a single registration is getting separated into multiple registration, say within the state in Tamil Nadu, I am doing business in 3 places, Chennai, Coimbatore and Madurai, and so far I have been in a single registration. Now that single registration got separated into multiple registrations. Now from that single registration, can the ITC be transferred to all the 3 registrations? Yes. In what ratio? Again assets ratio. Assets ratio as on the date of new registration. For that a new form is there, that is ITC2A. See there. When a single registration gets converted to multiple registration within the state, then also ITC against a single registration can be distributed to multiple registrations by filing ITC2A. And what ratio should be taken? Assets ratio as on the date of new registration should be considered for this purpose. Whether this 2A should be certified by CSMA? No. Only 2 should be certified by CSMA, but 2A is not required to be certified. See that below. ITC2 to be certified by CSMA. ITC2 when? Transfer of business. ITC2A when? Single registration to multiple registration. ITC2 to be certified by CSMA irrespective of the amount of ITC. However, 2A is not required to be certified by CSMA. In case of demerger, balance in ITC. So which date balance in ITC should be taken? For example, demerger happened 6 months before. Today I am transferring. So take the ITC balance as on today and see the assets ratio as on the demerger date. Okay, wow. Sir, demerger happened 6 months before, sir, and you take the assets ratio as on the demerger. But today you are transferring, take the ITC as on today. Read that. In case of demerger, balance in ITC as on the date of transfer and ratio of assets as on the date of demerger is to be considered. Is it clear? Then last section 18.4 and 29 subsection 5. This is opposite of 18.1c and 18.1d. What is 18.1c? You are under which scheme? Composition scheme to normal scheme. Now reverse it. Normal scheme to composition scheme. Then 18.1d, exempted to taxable. Now reverse it. Taxable to exempted. Then one more case, cancellation of registration. See this. Normal scheme to composition scheme. Normal scheme to composition scheme. Taxable supplies to exempted supplies. And cancellation of registration. In all these 3 cases, we need to reverse the ITC. ITC of what? Input as such, input in WIP, input in FG. There we avail the ITC on closing stock. Here we will reverse the ITC on closing stock. Okay, Papa? In case of 18.1c1d, we avail the ITC on closing stock. Here we need to reverse the ITC on closing stock. Already we would have availed. That we need to reverse. So ITC reversed equals to ITC availed. On what? Input as such held in closing stock, input in the form of WIP, input in the form of FG. Even on capital goods, whatever is the ITC that you have availed needs to be reversed. But how? While availing ITC, how we avail? GST paid minus 5% for every quarter or part thereof. Correct? Huh? But while reversing, it is not like that. While reversing, ITC avail divided by 60 months. The life of the capital goods will be taken as 60 months, 5 years into balanced life. For example, you used for 24 months. What is the balanced life? 36 months. So ITC avail divided by 60 into 36 months. To that extent, we will reverse. ITC avail divided by 60 into balance useful life. And inputs and capital goods can be purchased anytime on which ITC avail. If ITC not avail, then reversal shall not arise. Sir, only if you avail the ITC you should reverse, sir. You have not at all availed ITC means why you need to reverse? You don't have to reverse. Same way, if you buy the capital goods before 5 years on which ITC is availed, then also reversal shall not arise. Is it clear? Because before 5 years if you have purchased, the life is over. There is no balance life. Anything into 0 is 0. ITC avail divided by 60. Balance life is 0. Pa. Anything into 0 is 0. So we don't have to reverse anything. Suppose, sir, as on this date, if the invoice is missing, sir, we purchased inputs, but invoice is missing, what should we do? Take the market value. If the invoice pertaining to such inputs are not available, then market value should be taken and practicing CA-CMA certificate is required in that case. And how to reverse this ITC? One form is there, that is ITC3. And if the balance in ITC is 1,50,000 and as per this section you need to reverse 1,20,000, so you will reverse. Still, what is the balance? You will have 30,000. What is the impact of the 30,000? The 30,000 shall be lapsed. Say this. If there is any balance in ITC after reversal, it shall be lapsed. For example, you have a balance in ITC 80,000. You need to reverse 1,20,000. Then what you need to do? First 80 you will adjust from the balance in ITC, remaining 40,000 you need to pay by cash. If there is any shortfall for reversal, then such shortfall shall be payable using cash ledger, and you need to do this computation separately for CGST, SGST and IGST. 18.6 already we discussed. With this section 18 is over and all the sections we have completed. There is one small clarification. Look into that clarification which is in page 120. Simple pa. This clarification says in case of return of time expired medicines. Usually in pharmaceutical sector what will happen? First the medicines will be given to the retailer, your retailer. I will send the medicines to you. What you will do? You will keep the medicines in your shop and you will be selling. When the medicines are expired, what will you do? It's okay, sir. You consume, sir. Like that you will give a. People will die. Got it? So you will return. When you are returning that, what should I do? I should give you a credit note. Is it clear, pa? First sales for that invoice. Now you are returning that. What should I give? Credit note. I should give a credit note. But for credit note, if I give, what will happen to my liability? Get reduced. Initially I raised the invoice, some liability is there. When I give credit note, to that extent my liability will be reduced. Then what you should do? Initially based on invoice you took the ITC. Based on credit note you need to reverse the ITC. Got it? Now listen. Suppose if there is like time limit for issuance of credit note. What is the time limit for issuance of credit note? The same time limit for availment of ITC. 30th November of succeeding financial year or date of filing and return, whichever is earlier. By that time I need to give you credit note. Say time limit over. For example, I sold the goods to you in January 2025. The time limit is November 2025. But 1 year expired only in next year January. Means I cannot give you the credit note for this. Then what is the treatment? That's where the circular says, you are returning to me now medicines. You treat it as a new sale by you and you raise the invoice to me. Instead of me giving credit note, the law says that you raise the invoice to me. For what value? Whatever value at which you purchase, for that you raise the invoice for me. See that. Drugs or medicines which are expired shall be returned to supplier. This is a usual trade practice in the pharma sector. Supplier may issue a credit note treating it as sales returns. Thereby, liability of supplier gets reduced and recipient shall reverse the ITC. Correct? This is option 1. However, if the credit note cannot be issued on account of expiry of time limit, recipient can treat it as fresh supply made by supplier, fresh supply made to supplier, and the supplier can avail ITC. Means you will raise invoice for me and I will take ITC. You create a liability. Already you have ITC. To that extent you create a liability. Knock off. Again you will raise invoice for me. Already I have a liability. Now I will take this ITC. Now what I will do with this expired medicines? I will destroy it. So if I destroy it, blocked credit will come. What is that? If any purchased goods are destroyed, lost, etc., that needs to be ITC to be written off. If such expired medicines are destroyed, then ITC shall be reversed as per section 17.5. Okay. This is one circular which is there in study material, very old circular, but they have not asked any question related to this so far. Maybe it can be tested. See, the objective behind discussing everything is that if only past exam questions are going to come, then why should we read? Definitely no. Past exam questions will be 50%. Remaining 50% always new questions they will be making. It's not the same routine questions they are asking. You know that? Even recent question paper also you have seen that 50% is only past exam. Remaining they will ask new questions. That's why every concept nook and corner you need to learn and go. Got it? Fine. So with this today's agenda we completed. So today we kept a target of completing RCM and input tax credit. We discussed along with the question and answers. Tomorrow we are going to discuss value of supply. You just, if you want, you mark so that you can revise that and come for today, tomorrow. Value of supply, then time of supply, composition scheme. Value of supply, time of supply, composition scheme, and next we have place of supply, TDS, TCS. These are the topics which we are going to discuss tomorrow. Value of supply, composition scheme, all are small topics only. Value of supply, time of supply, composition scheme, place of supply, TDS, TCS. Okay, that's the agenda for tomorrow. And if time permits, we will see other small topics like e-way accounts and records, like that. Okay, and my target is that day after tomorrow by afternoon I want to complete this. So afternoon onwards we can discuss this mighty 50 questions. That's the idea. Okay, thank you. We will meet tomorrow. And so tomorrow can we have at 8 o'clock? 8 is okay, or this regular time itself is fine, 9. 8 is okay, no? So that morning time we get more time, morning hours. Huh? Fine. So tomorrow morning we will have at 8 o'clock. Thank you. Anyone have inconvenience at 8 o'clock? No one, right? Fine. We'll have at 8 o'clock.